back.
Good morning, my friend. How are you? It's a wonderful Thursday.
It is Thursday.
Yes.
All day, I heard.
You didn't give me the heads up. I would have. I love the denim. It looks great.
Fix the hair.
Would have bought some cotton futures ahead of it because you're rocking a lot of denim there. So.
What do you mean? Wait. First of all, denim's made of cotton.
I believe.
I thought it was like some kind of different material.
Do you believe it's a petroleum-based denim?
Honestly, in my mind, it was like a suede. It was like
an animal skin?
Yeah, like some kind of.
Now, I have.
Because it's considered like a tougher material.
Levi's has several large ranches in Montana where they have the what would we call them? Denim buffaloes, denim buffaloes running free.
Maybe I didn't think it was an animal, but I did. Denim can be flame retardant, right? Like it's.
Sure, depends on the amount of alcohol in the cocktail you're drinking.
Well, I'm just saying there's a reason denim was invented for like tougher outdoors activities. Am I wrong?
No, I don't think you're wrong at all. Yes.
And so I guess in my mind, it was like similar to a leather because like you would wear it.
The flame retardant piece, I don't know where that came from, but I'm sure there is.
Yeah, it might have been. I think I had like an experiment, some science class where we were like testing like this type of stuff. Now you're gonna. I already know that I'm screwed on this one.
No, I just.
It was normal. It had nothing to do with Beverly or where I came from or anything like that.
You went to one of the best schools in the city, if not the country.
We would test, I think, different materials that would put out fires or different materials that would go up in flame very quickly. And I feel like denim was one of those that, like...
Was this in, like, physics or something?
You can't really, like... You can burn it, obviously, but, like, it's harder to burn than, I would think, like a cotton T-shirt. But now that you're saying it's cotton, I'm pretty thrown off.
Yeah, I'm pretty sure it's cotton, and... Again, depending on what you buy, if it's got some elastic, it probably has some nylon.
For some reason, this jacket it gets so many jokes.
That sounds pejorative. It stokes emotion. It's a jacket with emotion.
It does. Whereas we do, and I'm not trying to shame you, but I actually am kind of a little bit. We live in a society where like 95% of the males wear a quarter zip every day. And it, I think, incites no emotion, no kind of talk or anything. We had Tasty FX T-shirts and Tasty FX quarter zips, and the quarter zips like flew immediately.
Right.
Like everybody wanted them. Some people were trying to get 2 or 3 of them.
And again, if it's not made out of exotic animals' fur, you're not interested in the whole quarter zip thing. So,
that's true.
In other words, we're all public, and you are the
only quarter zip that I have is actually a quarter button, and it's 100% alpaca.
100% alpaca. Let's just qualify that because I will bet you when you look at it, it's not 100% alpaca.
What do you think is in there? If I did a 23andMe for my alpaca sweater.
No, on the tag it will say it's not 100% alpaca.
Yeah, I mean the lining isn't. Yeah, but what do you think else is in there?
Probably some nylon or something to give it some
so
elasticity.
You don't even have any jokes about like some other kind of funny animal, like like possum or like anything like that.
No, I've got my possum jeans on, which I like. Again, the possum denim comes off really nicely from the small animals, so it's a much more supple denim.
But yeah, this I wear this jacket very sparingly now because every time I do. You get excited about it for some reason. It's a fantastic jacket.
It's got all kinds of interesting pockets. I would wonder what you'd put in them, but well,
I put my hammer in this little thing.
That's what I'm thinking. And then you got one for like a hammer and a comb.
Yeah, this little thing, I don't know what goes in there. But I get asked by some of the guys on the trade desk, one in particular, who I love and cherish our relationship, so
that doesn't mean you're not on his kill list, okay? You can say whatever you want, but once you get on the kill list, it's hard to get off.
But there's a lot of jokes of like, oh, are you going to take that jacket for a ride in your Subaru to the Indigo Girls concert?
See, that's going down a whole different route.
And yeah, I guess but I'm saying that's the range of the jacket. Is you get excited about it, other guys...
I'm public, I've got on, my Costco quarter zip, and I'm happy I'm happy with that. It keeps me warm.
I'm
It's
happy
easy.
too. I'm happy that you're happy. But yes, it is public. We all agree. The quarter zip is public.
This whole concept of public versus, because it's not public versus private. It's public versus cool, I guess.
Yeah.
Where
Yeah.
public is pejorative.
Yes, 100%. I'm glad that we covered that.
Okay, so are my possum jeans considered public?
Well, so this
or
is
cool?
the
'Cause they're
weird thing.
bespoke.
This is the weird
I
thing.
could have gone with squirrel.
I haven't
or ferret.
I haven't owned a pair of jeans, denim jeans that you wear on the bottom half of your body since 15.
No, they don't make, except for mom jeans, they don't make string-based jeans.
They did actually for a second. Do you remember they made jeggings? Actually, I think they might still do that. But like women, when I was in high school, a big fad among the women there was like jean leggings. And so like essentially it was like a Lululemon kind of material, but it was supposed to like look like jeans. And they would be like super tight. You would like pull them on like tight. Jeggings. Yeah. Beth knows what I'm talking about.
Okay. Well,
So I could maybe I go for that, like Lululemon jeggings. I don't know if they're still making them, because I'm only doing from here on out. I'm calling it at age 31. It's only Lululemon on the bottom half, I think.
and I'm public. Wow. Okay.
It is pretty public. I'll give you that. But let's take a look at markets. This morning, Pete, we have the biggest mover I can see on the board is the yen.
Yeah.
Making advances against U.S. dollar and euro, a host of markets, pound as well. What's going on in the yen space? Anything that you see?
You know what? Yen, it started yesterday. It was kind of a quiet rally. 150, I want to say 151.5 is right around the 200-day moving average. We traded on either side of that. And once we started to move away from it a little bit, markets seemed to gain a little bit of momentum on the short side. Now, it's just one of a myriad of indicators, but we're seeing a decent bounce in Aussie, decent bounce in Kiwi, relatively constrained, but we're seeing them build on some gains. Yen is definitely, and it's funny, safe haven, no, because the Swiss is not reacting in the same way. But it just seems like we're getting a little bit of, we're getting those pullbacks. We had it in Kiwi when they cut rates. But for the first time, the downdraft is bought quickly.
Yeah.
And we haven't seen that in a long time. We've seen rollovers and then they sit and go lower. So maybe we're getting the points. And I like days like today. We're early on. The yen has cleared a lot of ground.
Yeah.
Aussie's started to clear ground. Euro is a little bit of a laggard, but it's even started to clear ground a little bit. What I mean by clearing ground, it's incrementally moving a little bit to the upside and getting through some of those old levels where it had failed before.
Well, yeah, you can see it especially in this Aussie piece. We talked about it earlier in the week as they tried to get through 63 cents, and we're kind of toying with both sides of it. And yeah, like you say, they've tried to sell it here. This is a daily chart midway through this week, but no real success. And then yeah, you're exactly right, Pete. Heading into the last 24, 48 hours of the trading week here, you have an Australian dollar market that's looking at 64 cents. I mean, it could do it today, could do it in the remainder of this week.
Absolutely.
And that hasn't been an option since mid-December. And in mid-December, you can see here, to your point, these sell-offs were not bought. I mean, even going back to 66 cents, 65 cents, to your point, Pete, higher price points than where we are currently. But I would say if you're looking at trends or technical analysis or whatever, less confidence in this market to actually sustain a bounce than right now.
Agreed.
Where, you had this break amid all the tariff stuff earlier in February, break below 61 cents at a flash there. And since then, this has probably been the greatest confidence we've seen in an Australian dollar, or we've seen in a Japanese yen. I know they're not necessarily highly correlated, but you look at this, I mean, right now we're trading right at 150
right,
even for this dollar yen. First time we've been trading there since the beginning of December. And at that point, you can see here, they got down there and they traded around it and then bounced right back off of it. And so a lot of interesting price points, not so much to your point, the euro and the pound piece. And I've actually been loving this about Forex in 2025. It seems like the volatility has really flowed from one part of the market to the other. So many times in these asset classes, whether it's equities and like Nvidia, or Forex and it's euro dollar, or metals and it's gold, whatever it is, it can be like, okay, there are tangential pieces, but everybody's kind of watching this piece.
Right.
And it's been flowing from, there's been periods where yen, amid the tariff stuff and amid some of the volatility to start the year, the yen wasn't really an important piece that people were trading. And now it's becoming probably the most interesting price point, like I say, going into the end of this week.
Absolutely. Canada, much more constrained, off of its highs. But remember, we posted those 148 highs, but not the same.
Just hanging out here around 142.
Yeah. And peso, same thing. And we're seeing that elasticity of the volatility actually moving into some of a little bit of the laggards. Now, I've got a question for you. So dollar yen's been sold pretty aggressively. It's by far the biggest mover today. What are your thoughts about laggards and leaders? Is this one where you would say, oh, well, if the dollar's soft, yen is showing us that I should buy Canada, I should buy euros, because they'll all catch up. In other words, the dollar weakness will eventually permeate through all of them.
Sure.
Or is this just a yen story?
A couple of things. Dollar weakness in general has not been sustained for more than a handful of weeks to months in the last 4 years.
Right.
And so it's hard for me to build a case of dollar weakness in this market, and so we're going to see dollar weakness abound across all of these markets, just because it's been a tough game to play, right? Like anytime we've seen this dollar breakdown, and I'll zoom out, amid this run up in dollar, this is just the dollar yen chart, but it's pretty similar across other charts, the long-term trend that is. Every time the dollar gave back ground, like I say, it was a few weeks or maybe a couple months, and then the dollar regained steam. Even we thought, especially got up to 160, came all the way off to 140. Right. And I think everybody was like, this is kind of it for the dollar's run since inflation started to run up in 2021.
Not so fast.
and it got all the way back to, we looked like we were going to trade 160 again at the end of last year, the start of this year. So one, it's hard for me to make that case of dollar weakness until you really see it, not only in dollar yen here, like below 140, sustained action below 140. I think that would be like, okay, if the dollar yen continues to move to 145 over the course of Feb, March, and below 140 sustainably during the summertime, then it might be like, okay, maybe this thing is finally over. But like I say, it's only been a handful of weeks or a couple of months. But also what I would say, the correlation between especially yen and any other currency is nil right now. And so like it's super hard for me to make a case, and that's why I brought up euro yen also getting pounded today. Sterling yen also getting pounded today. Because, you look at the daily chart here, and let me zoom back in a little bit. You look at the daily chart here, and you look at the gains that the yen has made against the dollar in the first couple of months here. And then you bounce over to this euro chart, just not the same, man. It's flat, really, on the year.
And sometimes traders look, okay, well, this is due for a bounce because the yen has showed me that. The correlation breaks that mold.
Yeah.
Euro sterling, different story. But don't think you're buying what's cheap now with some idea of normalization because the yen is down a couple of handles. That is not a strategy that I tend to lean on, especially when I know yen really sits as an outlier against the other majors in terms of correlation. There's no catch-up to be had. Well, so if you want to trade yen and you think there's more legs to run below 150, then you're selling yen. If you want to trade the range, it's an interesting level because it both gives you relatively cheap dollar yen in the short run and a reasonable get-out level if you're wrong.
Here's the nice thing. The correlations right now aren't there. That's not to say the correlations between a euro and a yen will likely come back at some point. It's the same case for mean reversion and volatility and all these different things. Correlations historically do tend to, they break down and they come back. And the nice thing about that, Pete, is if dollar yen continues to move down to 145, down to 140, and the yen continues to gain steam, and the euro does bounce back to 106, 107, but doesn't have the same head of steam as the yen, you go to the euro yen.
Right.
And you can play at that point, you can say, okay, the correlations are there, and I didn't miss the bottom in euro, because at that point, euro yen is probably still around its lows. And so such a better trade at that time, whereas right now,
great takeaway.
You're trying to pick the laggard here in euro, and it hasn't worked to this point. I don't know why it would work today or next week, but I do a great conversation on that, but I do have to pause that to get into a segment for today.
All right, let's do it.
The 10 most volatile Forex pairs to trade, Pete. I crunched the numbers on every dollar-based Forex pair that is
all
provided.
82 of them.
Well, the dollar-based ones, I think there's like 20 to 25. Looked at the realized volatility in all of those dollar pairs. We could break this out to all 82 as well. Obviously, with the different crosses, a lot of it ends up being a wash. So today, looking at the dollar ones, and a reason for this is we've seen a good amount of volatility recently. And before we get into the numbers, maybe you can speak a little bit to just what volatility is in Forex trading, because from a definition standpoint, it's the measure in the variance of prices for any given time frame. Higher volatility correlating to a wider variance in prices, lower volatility, as you can see the example here in dollar CAD, going back to last summer. Really, we're in a range of remember that? We were in a range of 136 to 138
pips.
for months and months and months. Recently, obviously, getting up to the low 140s and then going all the way up to 148, backing off to 142. That's what volatility looks like from a technical standpoint, from a definition standpoint. From your view, though, in actual Forex trading, what is volatility?
I think it is it's just it gives us a representation of the market's elasticity. What can I expect? What is the market? Again, if you're looking at that low volatility, and we knew that it was into 26 pips or something really tight.
The daily move,
Yeah. Well, I'm looking for a 100 pip move on something. It's not the right market for that. It's not the right situation for that. What that helps you do is set realistic expectations around entry and exit points. One of the hardest things for us to do is, and we did do this kind of math 30 years ago in the pit, is when volatility would change, and we had our, I want to fade a 30-point up move or down move or whatever, and your scalping ranges wouldn't adjust to what the market was going on. And it was a difficult couple of days until you started realizing, I've got to adjust the ranges I'm trading. We now have so many tools that help us determine what that is on a very dynamic basis that lets us think about, okay, what's realistic to look for in a trade right now. It also lets us talk to scaling. How, if a market's moving 100 points a day, I'm going to either lower my unit size a little bit and determine where I'm going to manage my entry and exit points, or I'm going to accept that I want a wider range of prices before I participate.
Sure.
From a trader standpoint, incredibly powerful tool in helping us determine how we adjust the dynamic. It's not always, well, I don't want to risk more than 30 points a trade. That's a tough animal to skin. If you've got to be realistic around what the market is willing to give you and how you adapt your trading style to it.
Well, it's at the end of the day really synonymous with opportunity, or what is the measure, what's the potential for profit and loss per the trade size. And I love your point of, if the volatility is higher and the potential for profit and loss is larger, then I can drop down my size and spread my size out, as opposed to in low volatility times, if that smaller moves, smaller potential for profit and loss per one lot, maybe you reduce that range that you're expecting and maybe go back to your normal size in an environment like that. But I do want to point out something that it tends to be interesting. Okay, well, how do I know if there's volatility or not? Well, one, you tend to even implied volatility in options, and I would contend that standard deviations and expected moves and these expectations
derivatives of that
came from options becoming popular for trading in the 80s and 90s, and all the math that was done around it, and probably those options traders informing currency traders and different people of, hey, this is what the volatility looks like. So you shouldn't be expecting that 50 pip range. Actually, right now, it would be more like a 30 pip range. But even implied volatility from options tends to be backward looking. And so you are usually kind of behind the 8 ball a little bit in when volatility starts, but it does tend to cluster. Like we saw here,
Yes.
The dollar CAD market, it rips up to 142, 144, and then it hangs in there for a couple of weeks, and then you see the big move up to 148. But then we've seen since then weeks of big moves in that dollar CAD market. It also can be correlated to price extremes. It's no coincidence that the dollar CAD market is at its highest prices since 2003, and it's been particularly volatile in the most recent trading. And a little bit of this has to do with the uncertainty around these price extremes, and liquidity tends to dry up a little bit. Not in the case of like, oh, the spread in this market is usually 1 pip and now it's 5 pips always, but liquidity around price extremes can get, like I say, a little dried up because of that uncertainty.
Absolutely, and there's more participants. I mean, if you think about it, the world of FX, $6 trillion a day exchanged in the interbank market. It's not just guys all with an opinion wanting to be long or short. Within that are a huge component of end users, businesses,
Big
manufacturers
institutions,
who have currency exposure in their global economy. Now, when a currency isn't moving, they tend not to hedge. Hedging's a cost. It's something you bear. When currencies start to move and there's a material impact on what your revenue is going to be given the movement of the currency, you see more hedging take place. That's more volume coming in, consuming more liquidity, and fueling more volatility. So it's oftentimes you see, like what we saw in Canada, these runs to new highs are like, wow, it keeps going. Well, the more it moves, the more these institutions have to hedge, the more core participants have to. So you get more elasticity, more volatility, more participants.
Yeah. So yeah, that's even around these unknowns, maybe less liquidity per pip, because a lot of the market makers, different people have widened out. But to your point, maybe even more volume and more participants in the market, which can actually end up being a plus.
And as long as you, again, implied volatility by definition is implied at the moment, looking backwards.
Yeah.
It's still a useful tool. There is no indicator that, well, in 10 days, vol's going to be here, so I'm going to trade accordingly.
It's a game that people have been trying to play forever, buying different versions of the VIX, waiting for it to pop. It's very hard. But here we have the hard numbers on historical volatility, and we've got the top 10 most volatile FX pairs of the most recent trading sessions, the last several weeks and months here. And Pete, are you surprised at this list? I'll run down it as you digest it for yourself. Dollar peso, the South African rand, the SEC market, which I don't think I've even ever traded it. But that is part of the main dollar basket,
That's
right?
Why.
The Dixie. So we can talk a little bit about that. Dollar CAD, one of your first majors in there. And so no real surprise to me. I am surprised that dollar yen market is still so volatile for being, I mean, that's historically a top 3 major market, and it's in the top 5 of most volatile. Usually you tend to see, similar with stocks or whatever, larger market cap, whatever, less volatile.
Absolutely.
Not seeing it there. And then, of course, what you would expect, that Kiwi and that Australian dollar, both decently volatile for relatively, small notional sized markets, but a mid-tier major U.S. dollar pair. And then bringing up the rear there, number 9 and 10 is your pound and euro. But decently volatile. I mean, pound at 7%, that's some nice movement.
And you're absolutely right, because traditionally, in terms of volatility, it's Aussie and Canada, euro, yen, and the least volatile long-term was always cable. So this is a little bit, and again, that's looking back over a longer period of time. this is really a recentering of the table a little bit. So it's non-traditional to see sterling volatility above euro vol.
And that yen
or
to
to see
be
yen vol above Aussie vol.
Crazy.
So,
but yeah, that dollar CAD, probably not usually the most volatile of the commodity currencies,
we look
let
at,
alone top four.
Right. We look at 20-plus year extremes, that kind of lends itself
Exactly
to it.
right. And I just want to go out with this for those of you that do like to use those expected moves. We'll be crunching those numbers even more and more often and probably going out with them on email and everywhere else. But yeah, if you're looking at the expected move, for example, that dollar CAD, looking at 80 pips right now, which is pretty big movement, obviously, with the movement that we've been seeing.
That is a big move considering we were at 26 pips 6 months ago.
Well, we've just seen we've seen 100, 200, 300 pip days in that market recently.
So as a trader, that doesn't mean, well, that's scarier or anything. All that does is you can widen out where you want to participate. Yeah. You can use your management structure doesn't change, which is great. When you come up with one that works for you, you get to customize the dollar exposure by your size, but now you have a guidepost of within an 80 pip range. Is it likely you can harvest a third of that or half of that if you're scalping? Yeah, when you get down to 26 pips,
it can be
picking
tough.
the right level to get half of 13 is tough to do.
But,
so that is empowering to a trader. It doesn't, well, these are too volatile now for me.
Yeah.
Again, how do you tame volatility? Mechanics and size.
Sure. It is what the market is.
Yeah.
A good,
which is great.
Most traders will trade high and low volatility.
Fantastic walkthrough because it sets up, realistic expectations. When you look at euro, well, we had 100-point rips around tariff talks. I don't want to sell it or buy it unless we get a 100-point up or down day. Nothing wrong with that. The chances of you getting that right now,
that'd be a two standard deviation move. So
that's going to be tough.
Less than 5% of the time.
Right. So you're not to say you're going to be disappointed, but you should set your expectations. If that's your goal, you're less likely to be engaged with that market. That's fine.
Absolutely. Well, that'll do it for today's episode. Yeah. Thanks for joining me, Peter. We'll be back tomorrow, but stay tuned for Tom, Tony, and Vanetta coming up next. Peace.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss.
you knucklehead. Happy Friday to you both. A little delayed action there, Sadnoff. I'm a little sleepy from the game last night. I hope everybody watched it. I know Scott Sheridan was a maybe. I mean, maybe he was glass blowing or eating chicken tenders or whatever he does. But I got to tell you something. Great game last night between Canada and USA. Congratulations to my Canadian friends who won last night. I got to say one thing, though. Hockey made some new fans last night, Sadnoff. Going to be good.
I watched it from puck drop till the overtime goal. And, we don't get a lot of really great sporting events where you get to see, like, the best players, legit.
Really playing.
Yeah.
They were playing like it was a home game for them. You know what I mean?
Yeah. Like even in the Stanley Cup, you get like the two best teams, but you have, you're four lines deep. It's just, you never get to see, except the Olympics, do you ever get to see like the best players play against the best players, 20 deep on both sides. I love seeing like, hockey's the one sport where they don't have giant egos like every other sport, or at least they keep them in check a little bit.
Yeah, they keep them in check, right? So they're athletes. They're stars of their field. I mean, they're going to have.
But I'm saying
an ego.
You could have, you have a captain playing on the fourth line.
Yep.
The guy who's wearing the C is playing on the fourth line, playing 6 minutes in the game. That's unbelievable. Yep. And that was the great thing. I mean, unfortunately, we left McDavid open, on a 20-footer, and he's too damn good.
Yeah, just about every player on the ice was just too damn good, and that one was the best of the ones that you don't leave open. Yeah,
it's funny.
100%.
I thought the best player on the ice all night was Austin Matthews for the U.S.
That's the jersey I got, Sadnoff. I almost wore it this morning. I was like, should I put it on? Should I not put it on? I'm going to show a little respect to Canada. Good job out of that.
I thought he was the best player on the ice, and I thought he was going to win the game. I thought Canada outplayed the U.S. for 3 periods, and then in the overtime, I thought the U.S.
I thought the start of the second period, they started playing them.
Yeah, I thought Canada outplayed us, but then in overtime, we definitely had the best chances. And
that kid Bennington or whatever, he stood on his head, man. The goalie for them, he was just unbelievable. I mean, you get so excited when you see that kind of thing for the person. I mean, it was just awesome. It was just awesome.
Yeah.
Now, Sadnoff, I know you're. We can get back to hockey, and the other thing is you were mentioning it on the break just a minute ago. The size of these players. You said Bedard is just a kid.
Yeah,
I mean, these guys are 6'4", 200 pounds on skates, and they're flying. I mean, it's just
when you watch,
it's amazing.
When you watch McKinnon and McDavid play on the same line, you're like, oof.
Really good. A lot of fun. It kept. It was a great Thursday night. Made it a lot of fun. But Sadnoff, you fancy yourself a math guy, right? I mean, this whole network is built on quantitative finance, right?
Where are you going?
Am I right? I mean, it was your vision. It was your idea. There's no argument about.
Where are you going?
And you always lead by example. You're the kind of guy that leads by example. You're at the front of the line there with everybody, whether it be the lunch line or the firing squad. You're there for us. You're a leader.
Where are you going?
I thought you'd be able to do some simple math since we had the under over on the game was 5.5, and I took the under, and we were going into overtime, and it was tied 2-2. And you don't play the full 20 minutes. It was the first score, which means you were basically locked out. I kept checking my Venmo. I never got a payment.
I forgot about that bet.
Well, you got reminded right now. I don't see you going to the phone.
Oh yeah, my phone. I'm having a few phone issues right now.
No, I don't think you are. I think.
Yeah,
look.
Look.
No. I think you could go right. It should be on speed dial for you. I mean, you've been doing it, a couple of times every week. I mean,
Oh, this is so
yeah.
sad. I forgot I took the over.
Yeah, you and my son wanted the over, but my son kind of backed out a little bit there at the end. He didn't want to go against the senior bet. I don't blame him. I don't blame him at all.
You didn't blame me.
Yeah, that's right, Sosnoff. Yeah, that's right.
Oh,
I thought I would see this. I thought I would see this last night. You know what I mean? I thought before the puck dropped for overtime.
I cannot
I get a little
believe.
dig.
There, you got paid, you prick. Hope you're happy.
Yes, I did. I could say that. Sosnoff with a gentle nudge gets reminded. Thank you, Sosnoff. Thank you very, very much. My family thanks you. My friends thank you. Everybody thanks you. Thank you very
I can't believe
much.
I forgot about that stupid bet over under.
I thought I was a loser.
Yeah, well, it was a great game. I mean, because there's not a lot of good sports now, and we're about to get into preseason baseball. Which is
I hear you. Not
which is painful. It's painful, and
a little downhill from here. A little anticlimactic for a while.
Yeah. I think the 2026 Winter Olympics. I think they're in Italy, right?
Oh, I don't know. You got that. I will look.
I think
for you.
I think they're in Italy. I think they're Italy, the Winter Olympics, and I think it's going to be great now because I think these teams are going to come out firing.
Oh, they're going to have to. I'm sure they will.
It's Milano.
Yeah, Milano. You're right. Milano, Cortina. Yes, that's correct.
Yeah, we might have to
Very nice.
We might have to go visit our boy and go to the Winter Olympics.
Mr. Radigan, is that our boy?
Sure. I mean, he's probably going to be he'll probably be one of the hosts of the Olympics.
I would imagine he will be. We'll be getting press passes. Going to be great.
Yeah.
February 6th to February 22nd. I'm not doing anything.
February 6th to February 22nd. It's 1 year.
Yeah. I'll be carrying the flag, so it'll be great.
Done.
Maybe Dylan. Oh, actually, I just read right now. Dylan Radigan will be carrying the flag.
Done. I mean, Dylan's from Lake Placid. The last Olympics I went to was in Lake Placid. I think it's time for me.
I think it is time.
1980, and then
26,
and then 2026.
Yep, it'd be good. It'd be real good.
46 years later.
That's awesome. You should go. Why not? Why wouldn't you? What's stopping you?
Nothing's stopping me. I wanted to go to the Winter Olympics in Sochi, but I couldn't swing it. And so maybe we'll go to Milan.
I like it.
I'll tell you right now.
I can't wait. I can't wait till you take me. This is gonna be so much fun.
I'll tell you right now. Hardest ticket to get will be the gold medal game for hockey.
Yeah, After this display for sure.
After this, I mean, tickets for yesterday, which was an exhibition in Boston, were ridiculous. Tickets in Milan will be out of control.
Yeah, no doubt. Yeah.
No, I mean, it is very cool. It is really cool to see Olympic hockey. I went in 1980. I saw the American team, and I saw them play Romania in a game that they won, but I don't remember what the score was, but it was really cool. But that's it.
I love it. Yep.
Gonna go full circle.
Fun time last night, and profitable one too.
Profitable. Take your
I mean, more profitable than your night.
I want some Blackhawks to be on the team in 2026. I hope it's Bedard. Not U.S. team.
Yeah, I hope Bedard has company, which would be nice.
Well, I mean, he'll be on Canada, but we'll see. You know, I was telling you the story earlier. The Olympics, I can't remember. I think it was, 26, so 22, 18. I think it was 2000, and it must have been 2010, because I don't think it was 2014. I think it was 2010. but maybe it was 2014. I don't remember where the Olympics were in 10 or 14, but the Blackhawks had 4 players on Team Canada. They had Taves and Duncan Keith and Corey Crawford and Patrick Sharp. And then on the American team, they had Kane. And then Hossa played on whatever he was, Slovenia or Slovakia. And then
Transylvania.
Jarmelson played on it was either Finland or Sweden. I can't remember. I think Sweden. So the Hawks had 7 players in the Olympics that year. Maybe more. I don't know. That's all I remember.
That's why they were good.
I know.
That year.
But that was cool. That was really cool. That's why I wanted to go to Sochi, because that was the year that I think there was that's it. That was Sochi in 2010, right?
I believe so. I'll look it up right now.
Yeah, and that's why, because there was all those Blackhawks playing.
Winter Olympics. You are correct. 2010.
Yeah.
Good job.
Yeah. So anyway, now it's all coming back together. All right. Well, that's it. Now what do we do?
Now what do we do is right. You got even the S&Ps up $3, up at a pretty tight little range here of about 15 handles. I mean, we've been having 25 handle moves at night, where we used to have, $50 and $100 moves. Now you've got a $15 move or so. Tight little market. NASDAQ up 75. Russell trying to claw its way back from yesterday, up 9. And the Dow down 250, sodding off with the UNH down $50 or so. $60 now in UNH. A little probe by the Department of Justice, my Taiwanese sources tell me.
Yeah, those probes.
Either that, or there's a rumor that Sadnov put on an iron condor yesterday, and they figure they take the stock down $60 just to make it challenging for you, because not only are you a math whiz, you're also an option. What are you, Sadnov? An option guru? Is that what they say now?
Yes, I'm a guru.
A guru.
A guru.
A guru. A kangaroo.
I'm a guru.
A guru. Yes.
Yeah, that was trades to the research team. They took me down.
Which researcher took you down? I'll change his music.
Yeah, I don't know. I don't remember.
It's good for them.
We'll find out. We'll find out today.
They have to be delivering your lunch today.
We'll find out today. We'll have them killed.
I was just going to change his. They're walk-on music, but sure, you want to go medieval on them? We can do that too. I don't have a problem with that.
Yeah.
Good.
Yeah, I'd rather have them killed.
Good. None of the other products really moving too much today. You've got oil down 55 cents, and you got gold down $9. I'd rather see gold down $9 than up $9. Silver down 11. You do got a little bit of a mover in nat gas, Sosnoff. Nat gas continues its upward climb here. What do you think about nat gas? I've actually got a couple of emails on nat gas, like people short, like up to the 3.9 strike. They're already in straddles, with the product trading 4.1. They get about 30 deltas.
I would recenter. I've recentered in there, like
buy the guts and sell the wings, kind of thing.
Yeah, I've recentered in there like 5 times. Markets are okay. It's a big
product.
Yeah, I know, but it's a future option. You got to stay small and just stay wide, so you don't thing moves around.
You don't get
so
the
much.
delta.
Yeah.
Yep.
I mean.
Yep.
Yeah, I don't think that's going to be the big mover today. I think on my screen it looks like Coinbase is having a big move pre-market. I don't know why. And
Ethereum's up pretty good, but I don't know if that.
Yeah, Bitcoin's only up. Bitcoin's only up 800. I don't know. But Coinbase is up a lot. Back
over 100,000. Coin has not. Look at Coin the last 3 or 4 days going straight kind of down, and you have Bitcoin itself doing just the opposite, kind of going straight up the last 3 days. So it's kind of like Coin's catching up. What's MSTR doing?
Nothing.
Interesting there. Yeah, only up $5 or so, $4. Yeah.
Yeah. Mm-hmm. Yeah. So anyway, there's probably a few stocks like that. We did a couple of earnings plays last night. It looks like none of them really moved much. Rivian was down like 50 cents. Newmont was down like 50 cents. and XYZ was down like $6-7, but that's inside the expected move.
Yeah, XYZ is the biggest mover of them all. Yes, you are. 76 closed at 83. You had Celsius. I know we didn't play it, but I know some other people did. CELH was up around, well, there it is, up around $8 or so.
Yeah. Yeah, I did not trade it. I don't usually trade that stock. I don't have a good track record in there. Yeah, I feel like today's going to be
with a lot of things.
I feel like today is going to be. Oh, by the way, if you have a front month bonds or notes on, you probably want to roll them or close them or roll them. I closed my notes today, just because today is the first notice day, so first roll date.
Yeah, there's not too much change or backwardation or contango in the bonds 7 ticks or so.
Yeah,
the money's pretty much the same.
Yeah, just roll them forward if you want them. I just closed out my notes. I kept my bond short.
And if you were rolling, would you roll to the March with 28 days or would you roll to April with 63 days? They both represent the same future.
No. I'm talking about rolling futures, not options.
I thought you were going to the options.
If you're rolling futures, you're rolling to June. If you're rolling options, you're always rolling to the next month. You're always rolling from March to April. That's all. I'm still in March. I'm fine with that.
Very good, sir.
And then looking around, I mean, so far it looks like it's just another little NASDAQ rally on a Friday.
Another little NASDAQ rally trying to poke its little head up. That's right, to make everybody's weekend good. You got Meta up around $5 or so. But we'll take a look at the market. You want to take a quick 90-second break here? We'll come back. We got confirm and send. Sound good to you?
Sure.
That's when I ask you a question, you answer me. Good job out of you. Volatility up 7 cents to 1702. We'll take a quick 90-second break and come back. We got more Tasty Live with confirm and send next. Congratulations, Canada.
If you missed the live show, here's our cherry on top weekly recap.
Why are you forcing me to show my love and affection for my wife through I have to buy flowers and chocolates, and if I don't do that on this particular day for 24 hours? Yeah. And by the way, she bites. She bites. If I don't do this,
where are you in the relationship? Are you at the point where she's like, I don't really care?
Where is he in the relationship? How much trouble can you be in? That's where he's at. Okay.
Wait a minute. Where are you? Because
he lives in that danger zone, which is he lives in that little bubble at the end. I love that question. Where is he in the relationship? Well, there's 2 bags that are packed living in the front closet. Okay. I'm closer to where you are than where Scott is. He doesn't.
No. You gave me an over-under on my marriage of 18 months. I went up to you. I gave you a shot. You were one of the first people I told. I said, Tom, I got married. Do you have any advice for me? He goes, I give it 18 months. And he walked away from me, Scott. That's the only thing he said.
He's threatening to strip, Bat.
Well, it's a little hot.
I know, I heard.
It's hot in here, so
it's not hot. It's not. Finally, for once, like, it's not hot in here. Maybe you're having a hot flash.
It's so hot in here. No, I want to take this off.
So take it off.
But
take it off. Do it now. We need
I don't want to expose parts of my body if I take this off, so I have to be careful.
Please put your hands together and welcome to the stage, Cinnamon Sauce Grande. Oh no! Yeah!
Oh God!
Woo! Yeah! Where did the money come from?
Where's all this money from? James is locked and loaded, man. He's locked and loaded today.
I want the money.
Tom, do you shovel with those guns out like that?
I don't even.
Do you do a show for the neighborhood for all the ladies who are working at home?
When I shovel in the snow, I usually take my shirt off, and then shovel with my shirt off in the snow.
Like this. 14 inches of snow. Be careful.
How about this, Sadnov? $500 right now. I'll go down there personally and do it with my snowblower.
Done. No, done. You're going to bring your snowblower down for $500? How about this? Because I'm such a nice person, I do have a snowblower. It's all yours. It's beautiful. It's a big snowblower.
Scott, when you put this away, did you drain all the gas out of it?
Absolutely not. Jews don't do that.
Okay, it ain't starting.
But I'll put money on it that when I go pull that starter, that bad boy fires right up.
I got $20 says it doesn't start.
I'm gonna have a video. We'll fire this little bad boy up. Seriously, I don't think I've used it in 5 years.
Tom is not allowed to do this unassisted.
A snowblower? You know what? That's actually, Beth has a point.
I'm going to tell
We
you
might
something.
need.
There is no bigger waste of life than a snowblower. They're more work. They're more work.
Shoveling?
I could have the whole thing shoveled by the time you get the snowblower started.
Police
Do
are
you
gonna
have a
be there.
shovel?
I
No,
got
he
like
uses a
6
broom.
shovels.
He uses a broom. You don't use a shovel.
Like all the old ladies, he uses a broom.
Yeah, he's a broom.
Tom didn't shovel. He's lying.
Here, he's gonna take a picture. Watch this. He's just showing his phone. Did you take a picture?
No, I'm
Here,
going to go
flip
look
the
at my
shovel.
driveway right now on my camera. How do I take a picture of this, Beth?
Oh, man.
Oh my God.
Oh my God, just
You don't know.
click both buttons on the side of your phone, you monkey. Oh my God, I can't with him.
Hey, Beth.
Hey, Tom.
Oh my God. Here.
I
here
just
it comes.
text you
Okay,
a picture of my
gonna
driveway. I
send you
just
a
took it from my
photo.
phone.
Wow. Good
Oh my
job.
God.
You see that?
Look at that.
Oh my God. That is the poorest job I've ever seen in my entire life.
Hey.
Yeah.
What did you do? Did you just sweep it back and forth like that?
It was 5:30. It was 5:30 in the morning.
My mother in a muumuu could have done better than that.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tastytrade. Make your move.
Tomas, we are back, my friend. You know what that means? Time a little bit of confirm and send sound. Before we do though, can you grab the pillow? Do you still have the pillow down there? It's on your right-hand side underneath your desk there. Can you just show the audience for those who haven't seen it? I spoke to your wife last night. You know, you got to stop just thinking about yourself, Sosnoff. That's soon to be in the store, Tastytrade merchandise store. That's correct. That's Sam is happy. Your wife wants you to bring it home for the grandson.
No,
Hand to God. That's what she. I have it here. I'll send. You want me to send you a screenshot?
No.
I'm telling you, she definitely wrote that. I took a picture of myself and the pillow, and I said, "Would you like me to take this home for you?" And I said, "No, not me. The pillow." And she's like, "Oh, I thought you liked me, but sure, I'll take the pillow for my grandson. I think he'll enjoy it." I go, "I don't know if Case is going to enjoy it, but the baby will enjoy it." So, can you bring that home, please?
Oh, God.
You gotta stop thinking just about yourself, Sosnoff. I mean, it's gonna make a great picture, nice holiday picture. It's gonna be good.
Oh, God.
You don't think? I'm telling you the truth. I'll text you. I'll show it to you. You know what? I'll send it out on Twitter so everybody can see it
I
there.
don't need you to do any of the above. I'm sure she was just like going, "Oh my
She
God."
was tickled pink. She loved it.
I'm
She loved
sure
it.
she's
She thought it
like,
was a great
"What is
present."
wrong? What is wrong with this loser?"
No. Oh, no. Au contraire. No, she said the grandkids are gonna love it. It's gonna be great.
Great.
I'm telling you. All right. Well, whatever. All right. Let's get to the program and confirm and send, my friend. Let's do it.
Great. I'll put her on a pillow and see how much she likes it.
Oh, she likes a little pillow under her. Yeah, no, she's good. Hey, John, welcome home, my man. Good to see you in the studio. Nice.
You're welcome.
I missed
it's good
you.
to be back.
I know. I missed you. Yep. All right, Sadnoff, go get it.
Go get it.
That pillow could be inspiration, too. You know what I mean? Like, if she can't see you at some point, she can stare at the pillow instead.
Go get him, Tiger.
Depending on what position she sleeps in.
Go get him, Tiger.
That's an Omaha again.
That's an Omaha again. Just put your hand on the button, John. You'll be good. All right. What do we got today? A little confirm and send.
I'm ready. I'm ready.
Little Friday confirm and send.
Let's get it. Let's get it.
I'm very happy we're having Indian food for lunch. A little mix it up.
Very nice. Very nice. Very nice. I had that 2 nights ago. Very good.
Not my favorite place, but
you know what? They ain't gonna get what you like.
no, they don't. This place is okay. Nothing great. I hope they're not listening.
Yeah, but they're not going to get the kind of. It's not going to be spicy enough for you. They're not going to get. They're going to get like white Indian food, like you know what I mean.
Yeah, it's white boy
tandoori chicken or something like that.
No, they don't even. That's too expensive. We have the prison version. We have the chicken that doesn't make it to tandoori.
You gotta have the chicken in some sort of very dark sauce, so you don't know what it is. I got it.
We get the chicken that's rejected by tandoori himself. Yeah, yeah.
Got it. It should be good.
We get what's ever left over from the buffet yesterday, so that's what you get. Prison food for all Tasty Nation.
All right, John, put it back up there. We're ready again. Sorry. Go get him, Tiger. Give us our first question.
How do you determine how much theta to carry? Is there such a thing as too much? And let me just go on record of saying there's always such a thing as too much.
Yeah, too much of a good thing, it can make you fat, could make you sick, it can make you a lot of things. It can make you broke too, right? So too much theta is definitely no good. Go ahead, give him your math. 69% of 100,000, yeah, $147 per 100,000. Go ahead, go.
How do you determine how much theta to carry? Well, we use really simple formula, and you can vary from this formula a little bit, however you want. You can make it a little bit more, you can make it a little bit less. But the easiest way to answer this question is on $100,000, you'd want, let's just say, $100. So
so what would be too much? 150?
On $10,000 on a $10,000 account, you want between, let's say, $10 and $20. On a $100,000 account, you want $100 to $200. It's basically 1/10 to 2/10 of a percent. It's 10 to 20 basis points. That's all it is. What would be too much? 50 basis points. What would be too little? A fraction of that. So
what also is too much? Any theta when the volatility is expanding, right? Because you're losing money probably even with the stock not moving.
But people ask this question all the time. The bigger the account, the lower the ratio of theta to net lick is going to be, and the smaller the account, the higher the ratio is going to be. So, for example,
you would think it would be the opposite too, right?
Not.
Like when you say a smaller,
but it's not. On a $10,000 account, you'll probably end up with about 0.2%. On a $2 or $3 million account, you'll probably end up with about 0.1%. But it's somewhere in that range. Like if you're at a full percent, you're way over. If you're at a 0.5%, you're way over. If you're way under a fraction, if you're less than 5 basis points, then you're probably too low. But 10 basis points to 20 basis points, in some cases on small accounts, you can get to 30. On large accounts, you can get down to 5, in that range. But the way to think about it is $100 per 100,000 or up to $200 per 100,000, that range, that's a good range. 1/10 to 2/10%.
And those numbers are also, you got to take into consideration. You're talking about an opening at around a 45-day time frame. They're going to expand and contract as you put on trades, take off trades. I know the net number 100,000 as a ballpark, 150,000, whatever, as a ballpark is what you want to go with. Sure. You also, now we trade a lot of, we came up with that when there were no daily options too. Now, if you throw in daily options, you throw that number out of the board, right? Like you got to go to just your contract size there. Don't change your contract size.
Yeah, the daily options are going to throw things off. They're going to increase that number dramatically. Be careful. Depends how your portfolio is structured. We're talking here 30 to 60 days, 45 days on average. But Is there such a thing as too much theta? Of course. Like I said, too much of anything is, I mean, is there such a thing of too much Tony Batista? Hell yeah. Same thing. Just always think of that little analogy there. You can take a, you can take a little bit relative to your net lick, but you can't take too much.
Okay. There's never too much. There's never too much bat. You know that.
No, there's definitely too much. And if there's more than one bat in the room, it can be way too much. Like if it's the two of them and they're like, and they're in their little zone, it's a lot. So
you liked it yesterday.
Let's go to the next slide. So this person writes in, what are your thoughts on saving money in a 401k type investment? I have changed my allocation of what percent of my income goes into my 401k via my employer. I still deposit 6% because my employer matches 100%. The other 9% I now deposit into my trading accounts. My returns are much higher than what I'm able to get via passive retirement investing. Do you think this is okay?
100%. I think first of all, congratulations on putting away 15%. I think you're an overachiever and in a good way than most people. So good on you, man. Spot on. I love what you're doing here. I think with a 401k, you have to take. I mean, if you're in this position where you're going to put away 15%, I think it's prudent to take the match. You have to. It's 50 cents on the dollar or 25 cents on the or 25% more than what you're getting because of the match. You got to do it. You definitely got to do it. And I love the idea that you've realized or you've taken the time or you've applied the process and you're doing well with it, where you're able to do even better than your passive investment. I love it. Good for you, man. Spot on. I wouldn't change a thing.
Yeah. So the easy part of this question is if your employer is matching you 100%, that's free money. I mean, you have to take that. Because that return is, there's not a single reason in the world why you wouldn't do that. I mean, except that you don't have access to that money for a while, but still, if your employer's matching you, most employers only match 100% on like, let's say 3%, maybe 4%. Like, I'm not sure what we are. I think we're 3 or 4%, but most plans in the US are usually, if the employer's matching, they're matching at 3 or 4%. That's about it.
Yep.
If this employer is giving you up to 6% to match, you got to do it. I mean, it's a really nice, that's a nice bonus from your employer. That's a very generous offer. The other 9%, I totally agree with you. I'd deposit that in my trading account too. I mean, we would do the exact same thing that you're doing here. Yeah, I don't want to put money into a passive fund unless my employer is matching it 100%.
Yeah.
Other than that,
I agree.
I'll manage the money. Win, lose, or draw, I'm going to take it all in. I'm going to do it all on my own. I have no interest in using somebody else.
Yep.
Let's go to the next slide.
Hey, before you get to the next one, Sadnov, my Taiwanese sources have told you have told me who the UNH culprit is. Sadnov, would you like to know who got you into that trade yesterday from the research team?
Sure.
Would you rather them be anonymous, or would you like to know?
Well, because I think I'm going to have them killed. I'd rather you let me know. Who
You're
do
gonna
I?
lose a friend here. It was Shark. That's right, Jaws. Jaws got you into that. Not only did we change his music, he took you down in UNH. Only in a quick day, too.
Yeah, I mean, I really like that kid too, but
I know it's gonna be a shame to see him go.
I mean, it's gonna be a shame to have to get rid of him
He really
today.
fitted nice with the team. I mean, he's a good contributor.
Yeah,
smart kid.
He's very smart, and he's got his act together, and he's really good contributing member of the team. It's gonna be so
But
sad.
He's got to go. Sometimes you just got to go to mattresses, get rid of this thing. Yep.
It's going to be so sad, but every once in a while you got to sacrifice one for the team, and
that's right, for the good of the team, man. For the good of the team. There's no I in team. Got to go.
Yeah. No, he's got to go. Yeah, we'll take care of that after the show today.
Maybe there's something we could think of that he can do for a year or so to make up for it. Like maybe get lunch for you, or maybe warm up your car, wash it.
My car's kind of dirty today. I mean, he could take it to the car wash.
Take it to the car wash. I was getting him a hose and a bucket when you take it to the car wash.
Well, it's like 5 degrees out. It's like 5 degrees out. I don't think he can get. First of all, I don't think that kid's ever done a day of manual labor in his life.
Oh no. Let's not go there. He does have very soft hands when I shake him. I will give you that.
Very soft hands. That kid has not washed a lot of cars in his life. So yeah. He was a good kid. It was nice to get to know him, and I'm sure he'll be helpful at some other firm.
He was very promising. Yes.
Yeah, he was. He had a lot of upside.
A lot of upside. Gotta go.
Is it possible to over adjust positions?
Yeah, I mean, this is what everybody talks about, that whipsaw. Like, the stock's moving higher, you roll up the puts, and the following day it goes right back to where it was, or even lower, and you roll down the calls. I mean, all those adjustments were horrible adjustments to do, but unfortunately, we don't know the future. So I don't think that if you word this a little bit differently, is it possible to be, over mechanical? I would say that you would answer this, no, it's not possible to be overly mechanical, meaning like you have to keep your deltas, adjusted, and deltas at bay. Delta is the killer here. So I think we all can agree, at least by all, I mean you and I, that if you keep your deltas in check, you'll be able to open your door every day. And if you're able to open your door every day for business, eventually you'll be prosperous and move on with this. So no, I don't think you can over adjust, but there are definitely bad adjustments.
Yeah. Is it possible to over adjust? I mean, that is one of the beauties of being able to look in the rearview mirror, and one of the kind of classic hindsight type things. You don't really know that you're over adjusting until you actually get whipsawed, and then you go, damn, I over adjusted. I mean, yeah, it's possible to be too aggressive. It's possible to over adjust. I don't necessarily think it's a bad thing. I do it. I don't think it's a bad thing. I think sometimes it makes it a little harder to make money. No question about it. I think but you were losing money to begin with when you made those adjustments. I know.
I mean, it's not like you're taking a winner and making it into a loser.
I've actually experimented with over adjusting on purpose just to see how detrimental it is, and I have experimented with over trading, like a total, like a global position, just to see. What I mean is like a full position, just constantly adjusting the deltas to keep them in line. And I have found it to be quite difficult. So I think it's definitely possible to over adjust. I don't think it's the worst thing in the world. I think you have to it's a one-off situation. I think for some people, it gives you peace of mind. It lets you hold things a little bit longer. For other people, it can be a little frustrating with all the individual whipsaws and all the cyclicality. So it's possible to over adjust. No. I'm going to say it's not possible to over adjust. I don't know. What do you think?
I don't think it's possible to be overly mechanical. And I think if you, like I said, if you change the wording on here, you look at it as like, hey, I didn't swing on the second strike because mathematically I'm going to get the walk. You know what I mean? Like you can't You can't second guess it. You just have to play the game. I think you also forget about the good adjustments that you make that save you or keep you in the game or bring you back to even where you would have been a big loser. Your P&L on your portfolio would have been hurt. So I don't think you can over adjust.
Yeah, I'm going to go same. I'm going to say same answer. This is a tough question. I'm going to say same answer. I don't think you can over adjust.
Sadnov, before we get to the next question, coin, we looked at it earlier. It's up around $13, 12.5 or $13. Regulators have agreed to drop the lawsuit that sought to regulate the company as a stock exchange. So that's why the coin is up today, and that's why it was kind of a little bit weaker, and now it's catching up to itself. Just letting you know.
Yeah, anytime they drop the regulatory battles, there's going to be anytime you drop the regulatory fight, it's a huge win for companies, not because they would have necessarily lost, just because of the legal fees.
Yeah, and you're getting away. Yeah, right. Of course. I mean, anytime you got to go to court or fight something, especially with the government with unlimited resources, it's a hard battle. It's a hard battle to win. You're in for a good fight. I got to thank my Taiwanese source, Peter.
Yeah, I wonder if it's a good sign that they're dropping the fight from the regulators are dropping the fight, or if they've just fired all the litigators. I don't know.
Whatever. Hey, I mean, it happens. It happens.
Yeah. That's the other question. Did they just fire every single litigator? Because we're getting a lot of applicants from ex-regulators right now. So yeah, I wonder if they're just firing all the litigators. Let's go to the next slide. If I sell a spread and the trade goes against me, how much leeway should I give it before closing?
Wow. I've never had the question asked this way. All right, so I'm going to give it my best shot here. Let's call it a tight spread, $5, $3 to $5. You're collecting 1/3 the width of the strike. It's a directional play only on one side. I'd probably be in for the whole kit and caboodle. I probably wouldn't be looking to do anything here. I've got about $3.50 worth of risk to make $150 approximately, and I would probably, that's the bet I'm making on a directional bet. If I was wider, like $10 or $20, and I was making a directional bet just on one side, I'm collecting around 1/3 the width of the strikes, $3 or closer to $5 or $6, or if it's $20 wide, I would probably look for a double, meaning if I got to a $3 loss, I'd probably be looking to sell the other side and make it into an iron condor, especially if there was 3 weeks or more into the trade. So I don't think I can answer it with one quick answer, but usually we're setting it and forgetting it 7 times out of 10.
If it's a defined risk trade, we're probably going to roll with the trade. And just like Tony said, and we're not going to do anything. If it's defined risk, we're probably going to hang in there as long as we can. And if there's an opportunity to adjust the trade, we will adjust it. Like today, use UNH as an example. We did an iron condor in the yesterday. Stock dropped $50 today. It's down to our short strike, which was the statistical chance of getting there was really low, like 20%.
Yep.
But we're not going to close the trade. We're just going to roll down the call side and see if we can kind of make it more like an iron fly. Does that mean we make back what we lost? The answer is of course not. But it means we just gave ourselves a chance. But we're going to adjust the trade before we close the trade. So we'll be fairly aggressive with adjusting. We'll be much less aggressive with closing. I hope that makes sense.
Yep.
Can't give you specifics, but that's kind of how we think. Let's go next slide. When Tasty first...
So before we get to the next slide, I've got a Jaws update here from a very good Taiwanese source here. Daddy Shark, I guess you might call him. He says he's never mowed a lawn. He's never washed a a car. He doesn't cook. He orders DoorDash, but he's a great worker. I told him that he has gotten a little bit of interest on the wire, and we think we might be able to trade him for a player that'll be named later. So I think that's the route we're going to be able to go. We might be able to salvage this for a little bit of something, for a player to be named later.
Oh, player to be named later. That's good. Yeah.
Yep.
Yeah. All right.
So we're going to have to eat the contract. I don't think we're going to have to.
Ooh, that's a tough one. When Tasty first launched, the liquidity in the weekly options wasn't what it is today. Because of that, do you think the rule of selling at 45 DTE might be outdated? I would think there's a similar sweet spot in weekly options, provided the underlying is liquid. I wanted to get your thoughts.
I don't think it's outdated. I love the 45-day time frame. That's my bread and butter. That's what I've been sticking with, and I've been enjoying it. So for me, I don't think it's outdated, but it certainly needs to be modified. We've been working, and a lot of the segments that we do, sponsored by the CBOE, by the way, or CBO as it's now called, really deal with the 0-day options and the optimal way of trading those. Yeah, no, we agree. We agree. And we got some rules on the 0-day options too. If you put on something early and it's around noon and it's not kind of working out, you should really think about looking to close it later in the day, getting a little bit wider. Yeah, we agree with you. We're modifying it.
Well, we're always updating our research, so that never stops. Is there a sweet spot in the weekly options? Well, we've already done a lot of research on this, and the answer is yeah. There's a sweet spot in the daily options, which is early. There's a sweet spot in the weekly options, which is about half of when half the week's gone by, which is not that much different than the 45 days. But considering the model that we use to price options has not changed, it's just gotten more efficient. Why would you think that the decay curve would change at all? It's never going to be outdated. Like, what we do is not outdated. We might find a way to better optimize something, but our research is never going to be outdated. Do you know what I'm saying? Like it's the same pricing model. It's the same decay curve. That's never going to be outdated, but we might find better ways to optimize things. So of course we're not going to change at all.
Yeah, it is going to move faster though, Tom. I mean, just because of the nature of the beast, there's so much shorter time frame.
But we've done research on that. If you do a weekly, if you do something with 7 days to go, you're best off at about 3 or 4 days taking it off. If you do something on the 0 days, you're best off taking it, at the first, 2 to 3 hours. That's it. Research has been very consistent. Let's go next slide. I know your kids are grown, but if they were headed to college now and wanted to work in finance, what would you suggest they study?
Well, I'm gonna go by past performance here, Sandro. I've had 4 kids graduate college.
Shocking.
On time, I might add, on time. Only one followed in the footsteps of his major, and it was really his second major. So I'm going to say don't study anything in finance, because none of my kids were able to do what they really wanted to do, study anything but finance, and then you'll be in the finance field. No, I'm kidding here. I mean, I think you got to be a little bit. We're going the way of obviously going the way of the computer here. I think you got to do something with some sort of computer studies here, whether it be statistics or anything like that. I mean, I think the traditional financial route needs to be modified. So I think a little bit outside the box here. So I don't have a good answer.
So what's funny is I had this discussion the other night. Not last night, the night before last, I did a talk with a group at University of Central Florida. It's one of the largest public schools in America. I think the second largest, actually, with like 60,000 kids. They've always had a big finance group, and We've been going down there for years talking to those guys, that university. They've been very supportive of Tasty. In fact, they were up in Chicago, some event recently, and met with those kids, and they're great. And all of them are in finance. So I do have some recent, discussions going back and forth. About 2 weeks ago or 3 weeks ago, I did a talk at DePaul University and also UIC, which is University of Illinois Chicago campus. And they did a joint for a talk for me. So I talk to these college kids all the time. And it's funny, a lot of kids have financial degrees, but just like Tony said, some of them have, very specific minors. And if you wanted to get into finance, I think at 22 or 23, the key is just get a foot in the door. In order to do that, you have to be able to differentiate yourself by being able to articulate what you like about finance. That is the real key. Now, if you're talking about what classes and what minors are most interesting to us, it's always changing, but math never gets old. Data science never gets old. In today's world, AI can't get old yet. It's too new. And some form of coding skills is a very nice complement. Nobody's going to hire you in the world of finance to be a coder if you're not a legit engineer. Don't get fooled by thinking just because you learned a little Python, you can code for somebody like Tasty or something like that. It's never going to happen. But if you're an engineer, that's a different story. But if you're in the world of finance, being able to understand coding, being able to help your team by coding stuff that can be reused, by understanding AI, by really understanding how data science is applied to the stuff that you're working on, and also, how these math formulas are written are all super important. That's why we hire a lot of, especially for the research team, a lot of people that have data science degrees, physicists like Julia, things like that. We're always into something, mathematicians like Jacob. I mean, those are what's important to us. But being able to articulate and differentiate, that's your key. Got to get your foot in the door.
I would even, Saz, I'd even go a little bit backwards here and go old school too. I mean, you could take a little bit of a sales course too. I mean, not only are you, have to sell yourself, you have to sell what you can do too, and negotiating deals and building relationships. I mean, that could be, a differentiator too. So
I wouldn't argue that for one I wouldn't argue against that for 1 second, because I totally agree. But being able to talk is super important, especially in an era of, social media and things like that. I mean, the last kid that we hired on the Tastylive side from right out of school, has a lot of social media skills in addition, to a finance degree. And he's a kid from Texas A&M, actually, that we just hired. So we're it's way more important to us, kind of what your skill set is. Can you articulate stuff? But he's been trading since he was in high school. That's what I like. I like people that trade. I like people that make decisions. I like people that are risk takers. In addition to having everything else.
Point. Yep, good point.
Let's go next slide. If you sell a covered call and the call is tested, what do? You sell a put then? What do you do?
You pat yourself on the back, you big lug. I mean, that's what you wanted to happen. It was a bullish position. Even if you went to at the money with your covered call, you still had 50, 60 long deltas, and those deltas captured your profit. Now, you may be looking at it because it happened quickly. Let's say you were fortunate enough to have it happen in the first week that you put this on, and you had $600-700 in potential profit, and you only made $200 on the trade. Well, you could sit with it right there, then and there. You'll eventually, if the stock stays high, make your money. But this is exactly what you wanted to happen. I'm not looking to sell a put. if you wanted to, and there was 20 some oddish days, maybe even 30 days, and you were still bullish on the strategy, take that call from 1 month and move it to the next, and maybe be able to move it up a couple of strikes and keep a little bit of long delta the same long delta that you had when you opened the trade. Again, still having to be bullish on it. Sure, go right ahead. But this is the best thing in the world that happens. It should happen on every covered call that you do.
Yeah, I mean, if you sell a covered call and the call's tested, believe me,
won.
Believe me, you put that in the win column and you say thank you very much. And if your call's tested, what do? You mean, you could close out the position and sell a put, absolutely. You can close out the position and take profits. You can close out the position and sell a put. I mean, I'm not sure you can roll the call forward if you want. But that is a high-class problem. You know what? Nobody ever complained, oh, my God, I bought a stock, I sold a call, and the stock went higher. Well, I'm sure somebody complained. They said, oh, my God, I could have made more money if I didn't sell the call. Yes, for sure somebody complained. But we do not complain when that happens because we have been around a long time. And when that happens, you're damn lucky. Take the profits.
Yep, you sure are.
Replace it with a short put. Do whatever you want. But don't ever bitch about that. Never.
That's right. Yep.
You're going to have plenty of other stuff to bitch about trading. Do bitch about that.
Yeah, stay in the game long enough. Believe me, I'll find good stuff for you to bitch about.
Yeah, right. Let's go next slide. You do a lot of shows that generate trade ideas. What's your assumption? Trade some research, etc. How much do you rely on those shows for trade ideas?
I mean, we rely on them heavily. I mean, we do about 10 per segment that you name there, and we want to be 10 for 10. We're usually above 7. So, I mean, it's not like I rely on it to be my, or you do, to be on your bread and butter, but just trying to drive home the point that, anybody can find a trade looking mechanically the way we do, and to fit your assumption. So, yeah, I love it. I wouldn't make a trade that I didn't want to. You know what I mean? That I didn't believe in.
We do this stuff because, first of all, it's important because we talk about trading all the time. So, for one, it's important to practice what we preach because otherwise, then who cares what you have to say if you don't actually do it? Sure. Number two, we want to show that if you follow the mechanics, we don't really care. We don't care who you are. Like anybody can do this. That's the other point. The reason we do it is because if you follow the same mechanics, great. Give us your trade ideas. Search through everything. Give us your ideas. Plus, it's hard to generate ideas. This gives people confidence and everything else. But it's really, more than anything else, it's a little bit of a nod to what we've done here in the network, which is essentially saying, hey, I don't care whose trade idea it is, whose assumption it is. If it meets our criteria, we'll do it.
Yep.
And it shows that we believe in the process. We do about 20 trades a week from customers. That's cool. That's a good number. We're doing a fast market today at 8:40. So in 40 minutes from now, you'll get to see. Let's go next slide.
Beautiful.
What is the efficient market? This is the last slide. What is efficient market theory? And I've heard you talk about it before, but I don't understand what it actually is.
I mean, efficient market theory. I mean, it's basically suggests that the prices that you're getting in the market, meaning the mid price on an option, the last on a stock, or the bid or the offer of a stock, is an absolute price. That's what it's worth at that moment in time. Regardless of what you think volatility might be or should be, or what you think the market's going to do or should do, if you can trade it at that price, then it must be an efficient market because the bid ask is so tight. So basically what you're saying is that there's little to no slippage on an entry of a trade if you have efficient markets.
Efficient market theory essentially says
everything's known. There's no unknown.
Yeah, essentially says that that listed markets, that the price you see in a listed market, if it's S&Ps or if it's natural gas or Coinbase or Tesla or whatever it is, that the prices you see in the listed markets reflect all the information that is currently out there that's known. So that's what makes them efficient. Like they're priced to perfection based on everything that's out there and all the money and all the information and everything else that's out there. That's what efficient market theory is. It essentially says, hey, you don't need to look. If you want to know what Tesla is worth right now, just look at the price. Because that's what it's worth. Like, don't tell me it's worth like a fraction of what it's trading for. Don't tell me it's worth 2 times what it's trading for. It's worth where it's trading right now. That's efficient market theory. Same with the S&P, same with bonds, same with natural gas, same with gold, whatever it is. You could think things are overpriced because they've been on crazy moves and they're very emotional, whatever. Sure, we're fine with that too. But efficient market theory essentially says, or efficient market hypothesis essentially just suggests that everything that's out there and everything that's known, that's where we base our prices off.
That's correct. And that's where strategy comes in. So if everything is priced in and everything is known and everything is fair value at that point, what strategy do you want to apply?
Yeah, you're not going to beat the market. Nobody can beat the market because they know more than the next person. That's the whole point. Efficient market theory essentially says you don't know any better than the next person or the next person behind that what some underlying is going to do. You might be able to optimize strategies, you might be able to trade better, but you don't know what the underlying is going to do.
Very good, sir. You know what? Let's take a quick 90-second break and come back. We got more Tasty Live coming up after this with a little bit of an option, guys. Not for seeing 90 seconds.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tastylive.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No. I mean, I'll stay, but the jacket's not
Come
coming
on, take your jacket off.
Nope.
Come on,
No.
take it up.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades today. I'm Tony the Bat Batiste, and I've got not one, but 2 trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tastytrade. See how it pays to have friends? Terms and conditions apply. Tastytrade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
Tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tastytrade. Make your move.
It's option jive.
Option jive.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with this option jive. Even the S&Ps haven't moved, so I don't know if they're up 350. Rivian's moved a little bit lower. It's down $1 now.
Oh my God. You know what? I can't look at this pillow below my desk.
How do you think she feels?
I can't.
Sadnov, seriously. Pull it out one more time. I'm talking about the pillow.
I can't look at it. I can't look at it.
She wants it for the grandkid.
Yeah, I know what you said. Okay. The poor kid.
I have to send you the conversation.
Poor kid's got that poor kid's got enough to juggle in his life right now. Okay.
I'll send you the conversation.
I don't want to see the conversation. I don't care.
I'm gonna have to black out some lines, but you'll get the gist of it. I mean, she definitely wants you to bring it home for the grandkid. But I got to black out some of the stuff that she said and I said,
Of course.
That kind of stuff.
Of course.
Yeah. Yeah, of course.
Oh. Ruining my day.
You made fun of that pillow. I had no less than a half a dozen people from our firm say, I love that pillow. Where did you get it from?
Oh my God, you're so full of crap. From our firm.
My hand to
God. I put it on the Anthony Bible and my hand to God.
Sadnov, I'm telling you the truth. I don't lie here. Everybody loved it over there at Luckbox. They all want it. Your producer, James, who follows you around when you move all day long off screen, he took it down. Absolutely, Sadnov. People love it.
I'm going to do a buddy pillow.
You want a what?
There you go, John. How cool would that be?
You should do a buddy pillow. That would be more normal, John. Would you want a pillow of yourself sitting on your bed?
John would want one for a family member, maybe like a sister or a brother.
Easy.
Okay, I'm going to tell you right now, if anybody in my family gives me a picture of them on a pillow, I mean, that's a little bit of a stretch.
They make full-size ones too, Sadnov. It could be life-size. We could sell this in the store.
A lot of people don't know. Do we have a picture of our old couch, John?
Oh my God, John, he's not talking about old couch. He's talking about
the white
circa.
One?
No, the couch with Tony and my picture on it.
Before we put office, before we put the pit couch in there that Sadnov would lay on so famously. He was doing a photo shoot for Playgirl circa 1977. I mean, I have those pictures somewhere. I can find those.
That's what we need a pillow
to bite on, John.
No, we had a customer. We had a client who
they still watch.
Yeah. No, but his hobby was designing couch covers, and he made them custom. So we have one with Tony and myself. We got to go get it. I think it's still in the other office. We don't have that couch anymore.
You can sit on our faces and be proud about it.
Yes, be very proud.
It was great. It was really well done. I mean, the faces were in the crease. Like you had to push it into the crease to make the face be one. It was awesome. I'll find it. I have it. I gotta look for it.
I'm looking.
Okay, let's go. We can move on here. Option jive.
Somebody sent me an email with the latest Borowitz report. It's really funny.
It is the season for that. I mean, it is the season for that. We give a lot of information.
Yeah.
A lot of good information, funny stuff is what I meant.
All right, let's do this. What do we got today? We got 8:11 in the morning. If you're new to Tasty, welcome to the show. It's just Tony and I today. Vanetta is off on vacation for a couple days. She'll be back on Tuesday. But we do have, and Jamal is out today. So we're not shorthanded. We just have a little different flavor. So Tony and I are doing a segment here called Trading Small Cap Index. This is kind of an advanced piece that we did part one a couple weeks ago. This is part two on trading the rut or IWM. And then we have fast market coming up and a really strong market measure today. Oh, I'm speaking. Yeah, actually, I take that back. We have Julia coming into the market measure today. So she's going to woo us. Miss Spino will be in the house. And then after Julia...
That's right, we got Bad Taste at 9 o'clock.
After Julia will be Scott Sheridan. So the whole last hour will be guests. And the next, well, let's call it 45 minutes, will just be the Bat and I. We're going to do a small cap discussion here. Then we're going to try to do 10 trades in about 15 minutes as this market opens. It's kind of a quiet opening. We only traded really small earnings last night. We traded Newmont Mining. We sold some puts. I haven't looked to see what the stock's doing. It was unchanged this morning. Maybe the news hadn't come out. I don't really know. NEM. Is it out now, Tony? NEM?
I looked earlier. There was no movement. I'm looking right now. NEM is trading. It looks unchanged, Sadnov. I have here. Let's see if I have the.
Maybe they didn't even have. Maybe they didn't even have earnings. Maybe we were off.
No, they did. It was 140 versus 108, which you would think would be pretty good. Revenue was also up. I don't know. Stock's basically unchanged, perfectly priced. Sadnov, there's that efficient market you're talking about.
XYZ, which was Square, which is the new symbol, it's down about $7 or $8, or that's what it was earlier today. And we did a pretty wide strangle in there. I think we should be okay. And in Rivian, we sold some puts. Stock's down $1. Last night, when the news came out, the headline on Crane Chicago was Rivian misses, guides lower. I thought the stock was going to be about $8, and it opened unchanged. So a little bit weird. They sold it off a little early this morning, so we'll see what happens.
Yep.
We should scratch, maybe make a little, lose a little, depending on where the stock opens. I need the stock around 13. It's 12.5 right now. And that's it. Free market. I mean, we talked about UNH. We talked about Coinbase. Everything else looks pretty much ado about nothing. Let's go. Let's move forward. Let's do this.
Let's do it.
Rut piece.
Let's do it.
Trading the small cap index. Let's go next slide. By the way, this is my biggest long right now, is the small cap. What's the rut do? Oh, the rut's up 16 today. It's a good one. But
it's trying to do the opposite of what it did yesterday.
I've had this position on now for about 2 or 3 months, so it's not something new. We're long the rut. We're short the S&Ps. That's just a position I've had on. Last time we discussed the basics of the small cap index, the Russell 2000. We also demonstrated that while small caps may have underperformed other indices recently, they've delivered strong performance over the long run. Over the past 25 years, the The IWM has outperformed the SPY 14 times and the Qs 11 times, and both together 10 times. The median annual return for IWM is 12.5, surpassing the SPY's 11.2. Today, we'll continue exploring trading opportunities in the Russell 2000. Very liquid IWM, moderately liquid RUT or /RTY. That's the futures. They're all the same product. Last time, I'm sorry, go to the next slide, John. So traders often point out that small companies and their indices show higher volatility than the S&Ps. This observation is accurate. You can see here, a little harder to see the S&Ps in blue and IWM in green, but if you look closely, you can see how green is almost always higher. This means that there may be a little more opportunity in the small caps than there are in the S&Ps. Maybe.
I mean, the tricky part about it for me when I'm looking at small caps is to take away the noise from what the market's doing. Because a lot of times the small caps don't follow with the market. You've experienced that with your NASDAQ Russell or even the S&P Russell's pairs trade, where they go the opposite direction as of late of each other more often than you would expect.
Let's go next slide. So Russell's long-term historical volatility has been slightly higher than that of the S&Ps and the Qs. In fact, 68% of the days, the Russell volatility is greater than the Qs, and 6% of the time, it's greater than the SPYs. All right, so you have higher volatility most of the time. While some traders see higher volatility as greater risk, option traders view it as opportunity. That's very well said. The key is to determine if the Russell's implied volatility overstates its historical volatility. Let's see. Next slide, John. So similar to the S&Ps, the Russell's implied volatility is higher than the historical volatility 81% of the time, overstating HV by 4 points, which is on a par with SPY. So this is good. So it's not, you have higher volatility and you're not being disadvantaged by lower overstatements. That's kind of an important thing here.
Sure is.
You see the overstatement in the S&P and the overstatement in the Russell are basically the same. Let's go to the next slide. So let's delve a bit deeper by examining the components of the stocks within the Russell Index. Most of the time, the IVs have exceeded their HVs. Among the 500 stocks in the S&P 500, 100 stocks in the NASDAQ, and 2,000 stocks in the RUT, a larger percentage of small cap stocks show more overstated implied volatilities compared to historical volatilities than those in the SPX and the NDX. That's a good statistic as well. Looking at a 1-year period and a 5-year period, the Russell, the numbers in the Russell are stronger. That's all.
Yeah, they are. Yeah, you're 100% correct.
Yeah. I mean, that's all we're looking for really is overstatement. Let's go next slide. Lastly, we evaluated the performance of selling options in the Russell over the long term. We analyzed the results selling 45-day 30 delta IWM puts and managing them at 21 days compared to the same thing in the SPYs and the Qs. Oof. Let's see what this is. Next slide. Perfect. So selling options in IWM yields a comparable success rate to its counterparts. It also provides the same return on capital as the Qs and is slightly better than the SPY. This confirms that despite the seemingly high implied volatility in the Russell and its lower underlying performance in recent years, the option trading remains robust and delivers a performance level similar to other indices. I mean, 30 delta put exiting at 21 days, looking at the win rate and looking at the median return on capital, yeah, you'd have no issue with this.
Yeah, it definitely fits the criteria. It definitely fits. Yeah, for sure.
It's right in the range of everything else.
Yep. Yep.
Let's go
It is
next
who we
slide.
thought they were.
They are who we thought they were. The takeaways. A small cap index and its stocks are more volatile than the S&P and the NASDAQ. Barely. However, its implied volatility and its components' implied volatilities are even higher, offering a strategic advantage when selling options. Agreed. And by examining the performance of option selling in IWM, it is comparable to the Qs and slightly better than the SPY in terms of return on capital. And I would also argue that getting fills is pretty good. Like my rolls and stuff and my fills in IWM are all, just wrapped around mid-price, never more than a penny.
Yeah, they're as good as Qs and SPY and better than, say, like a TLT. You know what I mean?
Oh, my God, way better. Yep.
Yeah, totally agree. Good job out of you, Sadnov. Even the S&Ps gained those 2 points that they just lost a moment ago. They're back up 5. We're sitting right there. /VX still up a nickel to $17. We'll take a quick 90-second break. Really haven't talked about bonds, Sadnov. They're just under 115, so they're sitting right there too. Haven't talked about currencies either. /6E is down small, and /6J, which has been on a little bit of a tear, is also down about 2.5 ticks or so. Take a quick 2.5 cents or so. Take 2.5 tenths of a cent. We'll take a quick 90-second break. Come back. We got more Tasty Live after this.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
Oh my God, I forgot to tell you something. Hold on 1 second. My last day, early in the morning, I'm washing my hands in this place, like this communal shower, bathroom area. And the guy in the stall is listening to the show.
You're in the shower in a campsite in Missouri.
There's showers and there's stalls to do number 2 in.
I got it. And you're telling me that somebody...
And a guy starts laughing. He's laughing. So I stop washing my hands and I'm grabbing like towels to clean. I'm listening to what he's listening to, and I hear your voice.
Why didn't you go knock on the door and say...
He's taking a shit, all right?
I know. Oh, why didn't you knock on the door and say, hey, Tony Batista here.
What do you want me to do? Hey.
Right, autograph session happening right now.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I got Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. It was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for 5 out of the last 6 years. And so I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tastytrade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the opening bell. Going to slap you in the face here in about 4.5 minutes. Off. Even the S&Ps have taken back that $3 move that they've had all morning, back up only, well, now $1.50, Sadnov. NASDAQ up 72, Russell up 17. That's the leader in the clubhouse on a percentage basis. And the Dow down 180 and change. But you can see it was under 44,000, about $60 lower than where it is right now, on the heels of UNH being down around $60 or so on government probing. Sadnov, you never want to be probed. Remember that. Bonds up a half a tick to 115. Bitcoin just under 100,000. It was just over 100,000 a moment ago, up about $500. Ethereum was up around 3%. It's up 2.5% or 2.33% right now, which is really a $64 move in Ethereum. You can see Ethereum kind of sideways to higher. Oil down $1, Sadnov. That's a little over a 1% move in oil. Ivy rank is only 15, relatively low in oil. And gold is down $6 and change, still relatively high. Nat gas up 15.5 cents. That's your big mover on a percentage basis, back over 4 and change. It's been over 4 for most of the day, but off of its high of 4.31. Don't want to see that happen again. Like to see nat gas go a little bit lower. There's your euro also, Sadnov, down small, about 0.25 percentage point, and so is the yen. That's all I got for right now. You did an earnings trade in Rivian that we're going to have to look at. I know you're directional there. Yesterday you were 4 for 4. I think today you're not going to be quite as well, Sadnov. You sold puts in Rivian. You should be fine, down $1. But what will you do with that? If you just had naked puts, you're going to look to sell a call?
No, because my naked puts expired this morning. This is today. I'm sorry, not this morning, today. So I think I'm still going to make money on them.
Ooh, a little shorter dated.
See,
there. So
sometimes if you sell the longer dated, then you would be down money. But if you sell the shorter dated, I think it's going to be okay.
Because time has money. Time is worth money. What strike you short in Rivian?
12.5.
Oh, well, you're right there, 1270. So that could go from 0 delta at the end of the day to 100 delta as soon as if the option goes in the money.
Yeah, I sold those puts at around 40 cents or something, 39 cents. So I'm going to buy them back on the opening. I'm going to buy them back. I'm going to put a 15-cent bid in. So this is going to be an example of when you're wrong, you're right.
Well, we'll see where they open, but sure.
Oh, yeah. No. The 15 cents is being very
optimistic. You would expect them to open a little bit higher.
Yeah. I've also got to sell. I'm also long some stock, short some out of the money calls. So I'm going to sell some 13 calls on the opening. Wherever those open, I'm going to put an order in. What time is it? Ooh, got some time.
Well, that's right. You did the covered call 1x3 though, right?
1x2 because you talked me out of 1x3, but that's what I get for listening to you.
1x3 would have been better, right?
Yes, 1x3 would have been better. That's what I wanted to do. You talked me out of it, but that's what I get for listening to you. I already know my rules. When I break my rules, like don't listen to Tony, and then I deserve what I get.
Your assumption that it was going to be the upside, so you got your assumption wrong. That's on you. Sadnov, I was just looking at my Venmo cash. I got a lot of it.
You get a lot of it.
Can I move that to like a place where I could spend it? Do you know how to do that? There's the opening bell, saved by the opening bell. Sosnoff, we are.
Praise the Lord.
Let's see what.
And what's going on? The opening bell, S&P's down $6.
Yeah, you are correct. They just sold off the flirting with new lows, Sosnoff. Rivian, you bought your calls back, your 15 calls, sorry, for a penny. That's all we got there. Let's see what's moving the market to the downside here, Sadnoff. UNH was just down $60. It's down 55. A Crowd is down 5. Costco's down 5. Target is down 2.5. Tesla is down 2. AVGO down 2. Let's see what the movers are to the upside here, Sadnoff. Coin up $9. Baba up $5. What's happening there? PDD up $4. China is in play, Sadnoff. Goldman Sachs, I know you were worried about them yesterday being lower. They're now up $2.50. Meta's up $2. Palantir up $2.60.
All right. Well, you were worried about Rivian. I know you were really worried about Rivian. And I have gotten out. And you know what? Stock's down. We're up money.
Rivian, you
done.
Bought your puts back at 20 cents. You sold some calls out at 27. Your covered call was good for you too. XYZ taking some profits.
XYZ taking some profits. Rivian taking some profits. And you're going to like this, but we're about to take profits in Newmont. Newmont Mining took profits.
You bought those puts back at 11 cents. Newmont Mining NEM down 31 cents inside the expected move.
We went 3 for 3.
Even though you were wrong on direction on just about all of them.
Yes. Okay. Now the problem, children. UNH. Oof.
Baby Shark.
Baby
That's
Shark.
right. You are Baby Shark now. You are no longer Jaws.
Baby Shark is back to the, just so you know, going back to the, let's see, these are $20. What?
I think you're right. I think he has to go back to Baby Shark. I thought he was worthy of Jaws. He is not. So you're rolling down the calls here.
Yes. I rolled down the calls. It's April. I got tons of time left. It's a $20 wide iron condor. What did I do here?
Well, you had the 70-90, you made it to 40, you made it to 60-80.
Yep. I just think I didn't look at the prices. Okay.
Didn't look at the pricing.
No, I know. I messed up. It's okay.
Markets are wide in UNH.
Yeah, I know. Yep, but I didn't do a very good job looking at prices. Let's see, what else do we got here? SMCI, nice little rally today. And what else?
SMCI, let's take a look at that. Up $2.60. I don't know if you are correct. Netflix up $1 and change. Gold GLD down 50 cents. Sorry, Tesla was down $2. It's unchanged.
Surprised S&Ps are down, aren't you?
Down $8 and sliding here a little bit. I agree. Volatility's still up 10 cents, 17.05. I mean, you got a tug of war going on slightly here between the Nasdaq and the Russell being to the upside, and even the S&Ps and the Dow to the downside. You mentioned on the break SKEW, SKEW, Sadnoff, SKEW trading near its recent highs, just under 179. Let's talk a little bit about that, because we really haven't talked about SKEW here. SKEW is the volatility on the out of the money options, correct, Sadnoff?
SKEW is the market's perception of unquantifiable risk. So it measures very far out of the money options outside of 2 standard deviations. And what it's saying right now is that it no like the market risk.
It's bidding up market risk, right? Almost like when you
Yes.
least expected. They're expecting it. Can it happen? That's the way I'm looking at it.
Yes, it does
Like,
not.
be prepared for it.
It does not like the market risk. Let's take a quick look here. What is going on? Oh. Anyway, I'm just trying to figure out what's weird today. Anything? NASDAQ up,
weird?
Russell up, S&P's down, Dow down.
All right, I don't think that's so weird. I mean, it's kind of a mixed bag of tricks. It's not the two indices that usually follow each other. Usually, even the S&P, the NASDAQ go in the same direction. The Russell and the Dow seem to go in tandem with each other.
Yeah.
So you got cats playing with dogs, dogs playing with cats. Everybody's kumbaya. It's great.
Everybody's kumbaya.
China's bid up. Some of the banks are bid up from yesterday. Remember, you talked about J.P. Morgan being lower. J.P. Morgan's up by $1. It's a small move on top of a large move lower. But I guess it's something.
Yeah, J.P. Morgan was down about $12 or $13 yesterday, and yeah, I mean, I think they overdid Goldman Sachs, and I don't know what Goldman Sachs is doing today. Let's see. Yeah, it's up $1.50.
My Indian Taiwanese sources just told me that CELH is halted. So I don't know if it's up $6. I know you don't have a position in there. I'm just telling the world.
I do not have a position. You know, what's really strange to me is pre-market, nothing moved around all night, and they were just up $1 or $2. And then something, as soon as the market opens this morning, it's down 14. I'm just surprised by that. It seems a little weird.
Yeah, you now have the NASDAQ flirting with, there you go, just down $0.25. There you go, it's down $1, and you almost have the Russell lower too. Russell only up 3, giving back just about all of its gains. The Dow back near its lows, about $20 off of its lows, down 300 and change. We'll see how the market behaves here, Sadnov. Volatility been up all morning, but only up 17 cents. We'll see how that goes.
Okay, dokie. All good, man.
All right, we had a confirm and send question about fast market and some of the other positions that we look at, or some of the other shows that we do. Well, we got fast market coming up right now, where we're going to take a look at trades that you suggested. We'll be back in 90 seconds. We got 10 of them. This is Tasty Live. Even the S&P is making new lows, down 16.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tastytrade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tastytrade. Make your move, genius. Tastytrade.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's correct with Fast Market. Okay, it's time.
NASDAQ down 36, Dow down, Russell's about to go negative, S&P's down. Not what I thought today.
Volatility up 20 cents.
Thought they would
close all watertight doors on a nothing day. Expiration Friday? Nah, I don't think so, sad enough. This is just a little momentary blip, much like yesterday. We were down 50 and we came back to down 25 on the day. Hold your panties, you'll be fine.
Oh, we'll see. We will see. I'm Tom Sosnoff. He's Tony Batista. It's 8:43, and we've got a little segment called Fast Market. Let's see. These are trade ideas that have come into us from people all over. And the first one's from Bob L. in Chicago. A high IVR, wide strangle in April, maybe the 8150 in PLTR. You know, it's funny. We have a bunch of PLTR positions on. Let's take a look. They're not doing much today for us. We currently have the March 90-130. So one of the things that you get to do by moving out an extra month is you get to widen the strikes.
Okie dokie.
That's the nature of the business. Let's see where our boy. What's IV ranking here? Still 60. Good.
Yeah.
So let's see what Bob wants to do here. He wants to go to the 150 strike. It's about $1. Markets are kind of wide in there. In April,
markets are a little wide. You're right. Yep.
Markets are a little wide in April. But if we were, it's about the 13 delta on kind of both sides. Pretty delta neutral. I'll do it, Bob. I'll do it. Don't test me. No, we'll do it. Let's see. Take a Phil.
Nice.
What does that say? 174. 174, 164. That's 338. Yes.
Okie dokie.
338. 174, 164. 338.
Yeah, you're trying to do it because you rolled.
Yeah. It's in April. April 80, 150.
Got it.
All right. Thank you, sir. We got it on. Let's go next slide. Either from some Air Force base somewhere or Rancho Santa Fe, California. DSC. Looking at Doge is nuking ag price supports left and right. No way that E85, I'm not sure what that is, and hog feed keeps corn at this level. 55.75 short call spread, 63 days to expiration. So DSZ, we're currently in corn.
I think E85 is an additive to fuel, Sosnoff, like when you have like a hot. I think. I mean, I'm taking a shot here. I'm going into my man card here right now and trying to figure it out. I'm not so sure.
Well, we're already locked and loaded in corn, but what we can easily do here is give ourselves let's take a look for 1 second in corn and see what kind of volume. March volume is pretty damn good. What about April volume? It's pretty damn good too. Man, corn trades okay.
Yeah, it's ethanol. My Taiwanese sources are confirming.
Got it. So we're currently in the front month. I'm going to move this out until I'm going to move it back to April. And I'll give it some bearish tilt. The 545, we'll give a little bearish. We'll do a bearish strangle. We got a bunch of positions on in here. I'm going to leave it on. I'm working a bearish strangle right now to sell it in April. Filled. So sold a little bit of a skewed strangle. I don't like the short call spread idea just because, well, I shouldn't say I don't like it. You know what? I actually don't mind the short call spread at all, but I'd rather have the skewed strangle on. Ivy ranks high. I'm just trying to limit the number of different trades I have on in corn. Corn's had an unbelievable rally. So
that's to their point. Yep.
Yeah. Corn's had an unbelievable rally. And so I kept a kind of a skewed strangle to the downside. So I'm agreeing with you, TSC. I'm just changing the trade a little bit. Let's go next slide. From Bulgaria. I don't know how to say that. Always.
Sosnoff, I got an update on E85. The reason why you're not familiar with it, E85 is the low-grade gas that is poor people use in our poor people cars. So, you and your friend Sheridan over there are used to the high test, so you don't have any of that E85. But us poor people in our poor cars, we use it for our car.
So, from Bulgaria, INTU. This is. What do you want me to do here? Let's see. While the masses hail Dodge and Trump's loud cheer, I'll ride into it till profits appear. Very cute. Sell puts or put spread into it. I mean, they have myrtleized this stock. Is that fair?
That's fair.
They've myrtleized it. It does not have a lot of volume, just so you know.
Stock's down $1 today. I mean, it doesn't have good markets at all. But you are right. The stock was I don't know, over 675 or around 650 to 75 during the beginning of the year. It's lost $100 already. Pretty close to it.
Yeah, this is a tough one as far as knowing how to get filled in here.
Mm-hmm.
I'll put an offer in to sell a put spread. That was a little too easy at mid price. Small, we did.
You look to reduce right.
510, 500.
Got it. You look to reduce size in there too. Would be another way.
Yeah, for sure. You have to. S&P's down 22. Oof. It did not rally. Let's go next slide. The pilots from Panama. Love the pilots. FDX. So looking at a little FedEx here. We don't trade it much. FedEx is another stock that's kind of, it's down $9 today.
Mm-hmm.
Good IVR, very neutral. Did it have earnings or anything or no?
Not that I know. It's earnings March 20th. So no, not there. FedEx down 10 because it said it would get a letter I sent out on Tuesday. It didn't get there till Thursday, Sosnoff. That's why. FedEx down $10.
Well,
even the S&P down 20, NASDAQ down 33, Sosnoff. NASDAQ just turned green a trade or two ago, now down 25. Volatility up 25 cents.
So to the pilots, the markets in here are very wide in March. Very wide. Very wide, very challenging. Let's take a look at April.
To the pilots?
Ooh. I think we're probably better off. When's earnings in here? March
20th.
I think we're probably better off doing April, even though they have earnings coming up. Let's sell. This is going to be a challenging one. I really don't know. The 220, 300 strangle in April, you're going to have to do this small because we're going to have to compare. We're going to have to test the waters. These are the ones you have to do a little price discovery on, figure out kind of where is this thing trading. I don't know.
Yeah.
Markets are wide. I'm testing the waters, and if we get filled, then I'll come to the market. Mid price now is showing 412. They filled us at 416 on a 412 limit. Let's do this. Simon says do this.
You happy with your fill?
I think so. I just put another order in to sell more because I did the price discovery and I didn't get filled on the second order. So we're still working it. But we got filled on filled. Okay. So now we have a little something going on in there. 416 on the strangle. I don't know. Pilots, here we go. Let's go next slide. CMG, Nathan from Oahu, Hawaii. You missed my Goldman Sachs trade on Wednesday. I did. Sorry. I didn't miss it on purpose. Don't miss this one. CMG has been victim to 13F BS. Tom's hero, Bill Ackman. Oof. Time to get long. Sell some naked puts.
They want to do this in CMG?
CMG has gotten whacked since last earnings.
It is. It's still lower. It's lower today by another 72 cents, 52 and change. And they are right. IB rank is good at 40. This probably should be on your radar. April, maybe. Markets are not a lot of trade in here, man. $5 wide strikes on off in April.
No,
if you look at March,
you got to do
March. You got better.
You got to do March because you got tighter strikes.
I agree with you. Dollar wide strikes and much tighter markets. 3-4 cents.
Sold some puts at 69 and 70 cents in March. The 50 puts.
Got it.
There's 70 bid, now it's 71. I don't mind that trade. The stock's been killed. I'd buy stock probably here at 49. Yeah, sure. 49.30. I think okay. I'm okay with that. Let's go next slide. Bill T from Tom's River, New Jersey. UAL, I hate this stock, but IVR staying bid like feel like I have to do something. March 115.85 strangle. Maybe squeeze $3 out of it. I don't know. I think we have a position on in UAL. Hold on. Let's see, Tom. Yes, we are currently in the 97.105 in March. What does he want to do? March? Let's do this. We'll add to this position. He wants to sell the 85, 115. It's a little bit. We'll sell the 85, 120. If you're going to go that wide, you're going to do a little. But I'm going to do more contracts.
Okay.
I'm going to add to my position because I agree with him. Take a fill. What's the price? I do this at 205.
Yeah, because you did another roll in there.
Yep, 205 because I had to adjust existing positions. But I added to my position. Let's see, UAL. Yep. Okay. All right, Tom, we did it. I built up my position 2 in there on that. It's going to be impossible to squeeze.
Beautiful.
It's going to be impossible to squeeze $3 out of that trade because it's only a $2.05 trade. But we might be able to squeeze $1 out of it. Let's go next slide. And the IV rank is 86. Chris from Herndon, Virginia. XBI. You know, we haven't traded XBI in forever. Are the markets in there okay?
Taking a look right now. Not my favorite stock to trade.
Not mine either.
ETF.
But what is
ETF, I should say.
Chris wants to do the 85 puts. They're a little over $1, and
he wants to go in April.
April 85 100. 85 100. Actually, you might want to go 85 101. Okay, so 20. Are you doing this delta neutral?
You'd be a little short at 101. You could probably go up to 102 if you want to be completely delta neutral.
Yeah, 102.85 gets us to delta neutral. And on this trade, hold on, let's see, I didn't do this right. 85, it's about, I don't know, two something.
Two something is right. Market's a little wide in here. It's
209.
So you gotta walk the order down, right?
You gotta walk this one down.
Meaning you start at
I started 209
mid price. Yeah.
Started 209, nothing done.
Probably gonna take 205 to get filled, but
yeah, this is Chris, this is my experience in there says be very careful about getting too big in XBI. If you want to do something there, do it small. Like I'm going to do it small, but this is a tough stock to get filled in. It's a tough stock to adjust in. It's a tough stock for marketing. It's not the best trading vehicle. We're working it. Nothing done yet. We're down to 206. Let's go next slide, John, and then we'll come back to this.
My Taiwanese sources, Sosnoff, just a news flash and why the market is acting negatively. I can't believe you think news doesn't matter.
205.
The New York
205.
The New York Yankees are going to allow well-groomed beards, Sosnoff, on their players.
It's about time. You know what? It's about time. The Yankees have had that stupid rule in place for so long. It is such a ridiculous rule. It really is. From Grosse Pointe, Michigan.
I'm glad you don't have a long-haired hippie freak rule here at Tastylive, Sosnoff.
Yeah, I can't stand the Yankee.
Show off my locks to you.
Yankee rule is so stupid. High IV rank accelerated to Oracle. Oracle does have really mix in the Mikey Butler pre-earnings pump and finish with a Batista call ratio. Oh God. Sell 2 March 160, 150 put spreads by 1 March 190, 200 call ratio 1/2, and adjust into earnings on 312. All right, you got to help me here. I'm not exactly sure what they want to do.
Yeah, I'm gonna have to take a look at this myself. Oracle, March to K mix, maybe pre-earnings pump and finish with the Batista call ratio. Sell 2 of the and buy the March 90 200 call ratio. All right, so let's see what they're doing here. ORCL. He wants to sell the one. This does in Oracle. He wants to sell the 60-50 put spread in March.
Okay.
Earnings of March 10th, by the way. So he wants to sell the 60-50 put spread
2 times. Okay.
But he wants to buy the March 90 200 call spread. So I think he wants to buy the 90 call once and sell 200. Yeah, that's exactly. I'm getting my Taiwanese sources, aka Nick, saying that that's what they want to do. They want to buy the 90 call once, sell 2 of the 200 calls.
Okay.
And do the 60-50 put spread 2 times. So it looks like that whole spread is around 417, 410 credit, something like that, depending on how it moves. 2 put spread, 1. Okay.
Yeah, I got it. 4.
It's fairly delta neutral.
Got it.
I mean, it's got a little bit of long delta.
Yeah, I'm just trying to figure out, where it will fill. We filled.
Mm-hmm.
I mean, Oracle's like 2 3/4 stars, just so you know.
Mm-hmm.
I'm working it, guys.
Oracle markets, they're 5 to 10 cents.
Yeah, but
wide,
it just doesn't fill in between. You know what I mean?
Yeah, my Taiwanese sources say that's called a money trade on the Nikki and Mike show, the money trade.
Oh, the money trade. It's a money tree. I just got to shake the tree.
Yeah, it's like one you can actually make money on, they say. That is correct. That's from my Taiwanese source, Nick.
Okay, well, let's see how much
408.
money we shake off this tree, Grosse Pointe, Michigan. We filled it at 408. That's the best I could do.
That's a great fill, by the way.
I don't know if it is or not. I started at 415. Let's go to the next slide. Don from Michigan, XLY 225 strangle, April. Practice what you research, IBR over 30, closing at 25% or 14 days. I bought the $15 wings for a 918 credit overall. All right. Why is everybody making everything so difficult today? XLY.
You tell me. You tell me.
All right. 225. Well, does he mean the 225 straddle?
Well, I mean, taking a look at XLY, I mean, Ivy rank is 33 and it's 223. So I would have to say this is straddle.
So
yeah.
Don, here's my issue. The 225 options, they have not traded today.
Yeah, here's my issue. The markets stink.
The market on the 220 puts is $3, $6. The market on the 225, the market on 230 calls is 236, 234.60. It's untradeable.
Mm-hmm. Exactly.
Not a single option has traded in April. Let's see. Am I missing something in March? Yes, March is much better. If you trade this underlying, go back to that slide, John, for a second. John, go back one. Hello, John.
Which one do you want, Tom? I'm sorry.
The last slide we're on, XLY. The only thing that's tradable in here, Tony, is March. The only thing, Don.
My people in the chat are a little bit concerned, Sadna. They say you're a little bit slow on the keyboard today. Did you do your arm workout last night? Is that why you're a little sore?
Yeah, that's probably it. 215. The stock is 223. 215.
I thought that was one of the better comments I've seen in a long time.
Yeah, that's not really even that funny. I'm going to tell you right now, this stock's almost untradeable. If you do the 220, 230, no, you can't do that. 215, 230, I don't know, 378. It's about, this is a tough one, Don. Let's keep working this. This is pretty illiquid. I'll work this strangle very small, just as a show of good faith, but I'm not filled yet. Let's go next slide. Dr. Z. Hello, Dr. Z. Looking at
long time.
Silver to gold ratio. The gold silver ratio around 90. I'm getting long silver. What's gold doing today? Down $6. I'm getting long silver and short gold in a ratio of 1-to-1 using the micros. Okay, let's do it. I don't have any position on in the micros. /SIL. Down 23 cents. Beautiful. Filled. /MGC.
You filled.
No, filled. Dr. Z, we just did this at 29.47 on gold and 33.53 on silver.
On silver.
But I messed it up. Because now I did it right.
You did buy.
I know. Now I fixed it. 29.46.20.
You did do your arm workout last night. You have a little hard time clicking the button where to go, like you're a little slow on there.
Hold it. What's going on here? Did I mess it up again?
No, you want to sell MG. You did it right. You doubled your contract for a sale.
Oh, got it. Yes, it's correct. So I'm short,
and your silver was right.
Yeah, I'm short gold.
You
short gold, long silver.
Because you suck. Right.
Short gold, long silver.
Even the S&P down 28, Nasdaq down 75, Dow down 400, Russell down 16, bonds up 16 to 115.11, Sadnov, and volatility up 33 cents.
Yeah, nothing done so far in XLY. That's the only thing I can't get filled in. But I've got to tell you something. It might be time to cover this bond position from the other day. It worked out quite nice. And we are short the March 113 puts. They are currently trading at 29. Our average sale price is 53.
Yes, sir.
Getting long bonds was the good trade.
Yes,
filled.
It was.
We're done. Put a fork in on Mr. Batista. All right. So John put up I think we did 9 out of 10. I didn't do XLY. Don from Michigan, the markets in there they're just not good. And I can't tell really, it's just hard to do price discovery. PLTR, we sold a strangle in April. In corn, we sold a strangle but got a little bit short. It's skewed to the downside. In Intuit, we sold a put vertical. In FDX, we sold a strangle. In CMG, we sold a naked put. Or naked puts. We actually did a couple tranches. In UAL, we did a wide strangle. In XBI, we did a wide strangle. In Oracle, we did a funky we sold a put spread and sold a call ratio spread. I'm not exactly, what'd you call that again? A money trade?
That is correct. That's a money trade there, Saddam. At least you can make some money. It's better than selling your stupid strangle for $1 or whatever the hell you did. I mean, you put it out there.
And then we did the gold silver ratio. We did the gold silver pairs trade. We bought silver, sold gold in the micros. It's currently unchanged, but let's see what happens. That thing, just so you know, that thing will move around in the big contracts. Maybe it could easily move around a couple $1,000s a day on just a one lot.
Yeah.
In the micros, in the micros, it'll move a couple $100.
Couple $100, 1/10 the size.
1/10 the size, but it'll move up to a couple $100 a day just in the micros.
Yep, you are correct.
Yep. And we
Sadnov, oh, go ahead.
No, I was going to say, we just bought back our bond options, flattened those out. We sold our bond notes this morning. If you do have a bond or no position on it, you're in March, you got to roll today or close out, whatever, move it to June.
Sadnov, wasn't the outcome last night with the Canadians? Congratulations again, winning the hockey game against the USA. And this morning, Sadnov, more disappointing news. It looks like you won't be able to get your grandson to Hooters when he turns 15, like I did for all my kids, Sadnov. Hooters is preparing for bankruptcy.
Hooters filed for bankruptcy?
Hooters.
They're
preparing to.
Were they a public company?
I don't believe so.
You know, it's funny. They used to have their own airline that flew out of Gary.
I remember.
They flew an airline out of Gary, Indiana, and they flew to Florida. And didn't they try the all smoking plane too? Something weird like that.
Yeah. Hooters is not a public company.
It's not a public company. Well, they're probably going to
2011 to HIG Capital and other investors.
Yeah, they're probably going to try to reorganize and then, probably not shut down, but I don't know. Like I said, I've never been to a Hooters.
Well, you got to go because before they disappear, Sadnov. Buy a calendar. I'll reimburse you with my Venmo money that I've won from you. We'll take a quick 90-second break and come back.
What would I do?
What
would I do with a Hooters calendar? Okay. Where would I put that? I think that's going to be a little inappropriate. Maybe not.
No, it's not inappropriate. It's fine. We're going to take a quick 90-second break. We'll find out if Julie ever worked at Hooters right after this. Bad taste. We'll be back in 90 seconds.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tastytrade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tastytrade. Make your move, genius. Tastytrade.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tastytrade. The answer is here at Tastytrade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tastytrade. The answer is here at Tastytrade.
We just ripped higher up to 50 points, and I just thought we would stay there, but
the thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tastytrade. See how it pays to have friends? Terms and conditions apply. Tastytrade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Yeah, that's right. That music means only one thing. It's time for a little bit of bad taste. Julia, how are you?
I'm doing great. How are you?
I'm doing great. Julia, we were discussing Hooters, which is filing for bankruptcy
Yeah,
before you came on the
yeah.
before you came on the show. I've been to a Hooters. My son Nick, I took him to a Hooters. My son Vinny, I've taken him to a Hooters. Tom's never been to a Hooters. Have you ever been to a Hooters?
I have not, but I really want to get one of those old school Hooters t-shirts. I love their merch. I think it's great.
I agree with you. It's iconic. It's iconic.
Yeah, it's great. So no, I've never been to a Hooters.
You know what? You know what? I'm going down to Hammond, Indiana, I think soon for a tournament. I will make a run there, and I will try to if I make a run there, I'm getting you a t-shirt.
Oh my God, if you can catch them before they go out of business, that would be amazing. I would love a shirt.
You want a white one?
I'll do the white one. I'll wear
Sold.
one.
Sold. You're gonna wear a white one?
If
she's gonna wear a white shirt, I want in on this.
Well, wait, just because like it's iconic, you gotta I'll give up the black for a day to do that. That's okay with me.
I don't believe you.
Okay.
I don't believe you.
You don't believe me?
No, I want to see this with my own eyes.
Yeah, that's okay. This is gonna turn into an HR complaint real soon, man.
If you are breaking the norm and going to wear a white shirt, I think Hooters would be my choice.
Do Hooter? I don't know. What? Maybe like I don't know. I'm trying to think what else would be like a not black option that would be cool to wear. I don't know. I think that's
you could wear the New York John Lennon shirt. You know, the white.
That far.
Okay.
I don't know if I go that far, but that's okay. Maybe if
I would pay for anything in white. Doesn't even have to be
anything in white. I think I remember this has come up multiple times before, actually, the discussion of me potentially wearing white. And so this is, I don't know, maybe the closest I've ever gotten to doing it. So that'll be cool.
Sadnov even wore a white blouse on the show once. He had this puffy sleeve blouse that he wore on the show.
I
Anything white.
They're cool sleeves. Yeah, they had like the patterns on them and stuff. Yeah. Seemed like a nice shirt.
No, not the patent sleeve. He remembers what I'm talking about.
Oh.
He had like a Zorro. Like a Zorro type
full puff.
shirt.
We got full, like
Puffy
the Seinfeld
sleeves.
shirt, the puffy shirt.
Sleeves.
Yep.
A pirate
Okay, we got
shirt.
the puffy
Shoulders.
shirt.
You remember, John? You remember?
I think we
looked
should,
like a pirate.
we should take it out of retirement.
He
I
looked
don't
like
think I've ever seen
he
it.
looked like a pirate, all right.
Yeah, I
All right, bad taste. Let's go.
do
I got my
it. You
friend
know
Scott
what?
Sheridan
Yeah,
coming
no,
in
let's
here,
just
too.
do it. It's okay. We're off the rails. Let's talk about occurrences.
Let's do it. Let's do
Everybody's favorite occurrences. What's an occurrence and why does it matter? We talk about occurrences a lot. We talk about why it is important to, or why it can be beneficial to achieve a high number of occurrences for certain types of strategies. But I wanted to talk in detail about exactly what an occurrence is, because I think there's some nuances that could lead to an interesting discussion.
Oh, man.
Oh,
we
yeah,
need to
ready to
prove
go.
this in advance. We're going to have a lot of arguments, I think, over what an occurrence is.
What could it possibly be? I don't know, but let's get into it. So we talk, right, about trading often, and because the really goal behind trading often is achieving a high number of statistical occurrences. And the idea behind that is that it reduces strategy variance and increases the chances of realizing long-term averages over time. So if you have a strategy that is likely to have a positive expected value over time, such as a short option strategy when we look at long-term P&Ls, then in order to most likely realize that, you generally want to trade frequently and over a long period of time. But there's a little bit of nuance in defining exactly what an occurrence is. And so today I wanted to talk about it and why it kind of matters. Yeah?
Let's do it.
Let's do it. Let's go to the next slide. Okay, so for a bit of background. I'm sure you guys are familiar with doing your statistical analyses. You guys are familiar with your stats 101, right?
Of course. Yes, we live for them.
We live for the stats. We live for the stats. But when we want to analyze some kind of population or system, we typically want a large number of measurements, right, from that system. We want a large sample size to reduce sort of sampling errors and ensure that the results are statistically representative of that system. Right? If we're trying to measure kind of anything, any kind of system, any kind of population, if we want to get representative statistics, we generally want a large number of measurements from that system, right? And so when we tie this into strategies and sort of evaluating how they perform in the stock market, which is a system, right, that evolves in time, we generally want data that spans a long time and captures a variety of market conditions, which then decreases the variance of this kind of short-term fluctuations on those strategy averages and provides a more accurate estimate for sort of long-run expected behavior. Just kind of what we're trying to do. We're playing, long game, right?
Got it.
A lot of these strategies. So we generally want a large number of occurrences that's kind of rooted in this sort of statistical basis for sort of trying to smooth out our P&Ls over time.
Law of large numbers.
That is involved. Yeah, exactly. Right. Tony, remember the law of large numbers, the central limit theorems all over Yeah.
Tony and I probably talk central limit theorem once a day.
I can imagine, at least. It's on my mind all the time. I guarantee it. But let's go on over to the next slide. So this is kind of our background. So this, right, motivates this trade small and trade often mantra. It's based on the statistical principle and assumes that if we trade sort of consistently, small trades over a long period of time, that's going to reduce P&L variance over time, the variance of different average outcomes that sort of arise maybe from the noise in the market and brings the strategy average closer to its expected value, noting that these averages tend to be positive for a lot of the short-term or short premium strategies that we look at, right?
We built our whole career around this.
It's an important concept. That's why it's
we literally built our entire career, floor trading career around this without knowing any of this stuff.
Right.
Like without knowing anything about law of large numbers or central limit theorem, we did believe in the trade often. Not necessarily trade small, but the trade often.
And I'm sure blackjack teaches a lot of lessons as well.
Not really, because
doesn't?
No, blackjack, it's ways to lose your discipline.
It's actually a really fair point.
Yeah.
It's a really, really fair point. I don't know. I like
Plus,
the blackjack
I would
analogy.
argue that in a casino with negative edge, trade small, trade often is what the casino wants you to do.
Exactly.
But not what you want to do.
But I think just like that, looking at it from the context of that game helped me understand this a bit more. Just because like markets are kind of volatile and crazy and getting
that doesn't help the consumer.
It doesn't, no. But it's just more of a nice mathematical analogy that I found interesting when I was learning about this. But you're right that like it's specifically you want to trade small and often when there's evidence that there might be some kind of long-term positive expected value for that game, right?
Or at least not a negative
or at least not a negative one.
Yeah.
And, kind of gauging that is there's a lot of nuances to estimating that as well. But for a lot of short premium strategies, we have done back tests and there's evidence that this might be true, right? So that's where this small trade often comes from. And it's rooted in this kind of statistical principle, although these two guys figured it out all on their own, which is awesome, right? But this is all background, right? So this is kind of like where this kind of comes from, what the statistical justification for doing this is, right? All makes sense?
Yeah.
Okay, so let's go on over to the next slide. So in this sense, occurrence is really considered any completed trade with a specific underlying contract type, delta, expiration, like 16 delta, 45 DTE, SPY strangle. Placing one of those trades every month or something like that is monthly occurrence. That's what we are meaning when we say the word occurrence. It's a completed trade with specific parameters, with specific underlying contract types, deltas, all that stuff. But remember that when we talk about achieving a high number of occurrences, this kind of underlying goal is that we want to minimize the impact of sort of short-term fluctuations on our strategy averages, right? We're trying to average over a bunch of different market conditions, a bunch of different sort of time-sensitive risk factors, right? So that kind of means that ideally the occurrences that we're counting towards a specific strategy should have some variation in risk profile. That's the nuance that I think maybe we don't talk about as much, but one that I wanted to kind of bring up here. So for example, if you sell a 45 DTE 16 delta SPY strangle at the open and then sell another one at noon, that might not really give you the impact of two truly distinct occurrences, right? Because the market conditions may not have substantially changed in between the time when you open the first trade and the time that you open the second trade, right?
That's possible, but we do consider those to be occurrences.
I know. So technically they are. Like in the general sense, these are just trades. But if the goal of achieving a large number of occurrences is to kind of smooth out our P&Ls over time, you're not necessarily going to get the impact of having a distinct occurrence, I guess I should say, depending on how you space out your trades.
There's a difference between, so the way that I would explain it is like how they explain things online.
Oh God, I don't know if that's how you want to do things.
No, like there's a certain number of viewers.
Yeah.
But then there's also like unique viewers.
Yeah.
So what you're talking about is unique viewers.
Sure.
We refer to everything as kind of total views.
Sure.
Because for simplicity.
Sure.
So we don't want to break everything down and have to put an asterisk next to everything. So we don't think of things in terms of unique viewers. We think of things in total viewers.
Sure. I think that I completely understand the perspective of simplicity, and technically that is true. If you put on a trade and you close the trade, that is an occurrence. But if your goal is to achieve occurrences with the specific intention of smoothing your P&Ls out, right?
Yeah, I understand. I agree with you.
Understanding this nuance of what the kind of unique or distinct occurrence is, I think is important, right?
Yeah, I agree.
Make sense? Yeah? Let's go to the next slide. So, under normal market conditions, right, there is usually a stronger case for counting a trade towards a unique occurrence for a particular strategy if there's a little bit of buffer time that's passed between trades. Really what you want between your occurrences to kind of make a strong case for counting them as unique is to have a change or a shift in the risk profile of the trade. That doesn't necessarily need to have a long time to pass in order for that to happen, right? Because if you think about a crazy market, or when the VIX contracts by 20% in a day or something like that, you have gotten that shift in risk profile that can justify counting kind of unique occurrences differently. But for normal, just regular, typical market conditions, usually how we would kind of define that or define the strength of counting something as an occurrence is the passage of time, because a lot of these risk factors are driven by duration and changes in market conditions, which kind of take time to propagate. Make sense?
Yes.
Okay, so let's go to the next slide. So this was kind of an interesting study. I was talking with Jacob about this last night to get his thoughts. I was going to use theta to kind of measure this, but he's like, yeah, maybe just look at sort of how the P&L variance or the P&L standard deviation changes depending on how you spread your trades out in your data set. And I thought that was a great idea. And you kind of see something really interesting here. So what we're looking at is we calculated the P&L volatility, so the standard deviation of P&Ls for 45 DTE, 16 delta SPY strangles, 2013 to present. These are held until expiration. And then we measured how this standard deviation changed depending on if we opened the trade every day, every other day, every third day, et cetera, right? How we spaced those trades out. So this graph shows what those P&L standard deviations are depending on how we space those strangles out in this data set, basically. So what we found is that the P&L volatility ranged from 670 to 710 when the strangles were opened between 1 to 5 trading days apart. And then it dropped to 630, so pretty significant drop when the strangles were spaced out by an average of 7 trading days or 9 calendar days.
So what are you saying with this thing?
Let's go to the next slide. So there is a reason for this sharp drop, and that's mostly just because there's just this natural shift in expiration cycles, right? After about 7 trading days or 9 calendar days on average, right, then the 45-day contracts from the previous cycle were close enough in that duration to count as a 45-day occurrence, if that kind of makes sense, right? Basically, your expiration cycle shifted up, and now something that was like 50 days is close enough to 45 days to count as another occurrence. So this is just natural shifts in expiration cycles. But when we shifted over into expiration cycles, we saw a pretty significant drop in the variance of P&Ls, which kind of suggests that spreading your occurrences out far enough to, at the very least, ensure that each occurrence has a unique expiration cycle might help with smoothing out these fluctuations, these P&L variances over time in regular market conditions. And that time frame, that kind of buffer time for 45-day contracts is about 9 calendar days, at least for SPY. Does that kind of make sense?
Yes.
Does it?
Yeah. I mean, I didn't know you would come up with 9 calendar days, but sure.
It's kind of not that surprising, but it is nice to have a number, which is
it's nice to have a number. I agree.
It's kind of nice to have a number. Like if you're like, okay, I want to space out my trades to kind of, if my goal with getting these unique occurrences is to smooth out my P&Ls over time, how many days should I
I think that's interesting because we've never done that before.
That's a new thing.
So you're basically saying if you have 2 of the exact same trades, 9 days apart makes them distinct and unique occurrences.
Their risk profiles are different enough, right?
The risk profiles are different enough after 9 days that they're not the exact same trade.
Right. So if I had 16 delta SPY strangles, right, and I'm trying to get that duration to about 45 days, if I'm trying to put on, however many occurrences, then spreading them out by about 9 days, right?
I got it.
That's the number, yeah. At least from this one particular back
it's a good thing to have, Julia, because we never went like that. We would always say, I don't know, wait a couple of days or next day or something like that.
Yeah. We never had any context around that.
Which is also fine. Yep. I got to emphasize that. It's also fine because remember, we're trying to make sure that we're getting different risk profiles.
Yeah,
and that can happen over a day or 2 days.
I just want to be very clear. We're talking about unique occurrences as opposed to just occurrences.
We're talking about unique occurrences.
Yes.
Like if the variable that we're trying to optimize over is smoothing out our P&L over time, and we want to maybe use unique occurrences as a way to do that, then 9 days is about, again, a lot of nuances here, but not on average about 9 days is how much time to spread out occurrences by, at least according to this study.
Okay.
Yeah?
Yeah. That's cool.
I like
it. Neat. Next slide. Yeah. Okay, so to conclude, trade small trade often is based on this sort of statistical principle that consistent small trades over a long period of time reduces P&L variance that might arise from like the noise in the market, right? But if the goal is to minimize the impact of these short-term fluctuations on our strategy averages, then our trade occurrences, specifically unique occurrences, should ideally have some variation in risk profile. And so one way that you can do this, obviously, like there's a lot of different factors that can cause the risk profile of a trade to change. But in kind of like regular old market conditions, one way to do this is by spreading out occurrences far enough apart to ensure that each has sort of a unique expiration cycle. And that's about 9 calendar days for 45-day contracts, at least for SPY. Good.
It's something different. I like it.
Kind of different.
Yeah, I don't want to discourage people from occurrences because like we count adjustments, we count recentering, adjustments, opening, closing, whatever it is.
Yeah.
We don't do a lot of like one of the things that Tony and I do that saves us a lot.
Yeah.
Is we don't like fall in love with a trade to the point where we say, okay, I put a trade on in the morning and now it's $1 better this afternoon. We're going to do more of it.
Yeah.
Like we don't think like that.
I know that was an extreme case for sure. Just
because it rarely happens for us either. So
That's
I mean, we don't really come up with that too much.
Well, this is something that I got a lot of questions about. Like every time we have a live show, I get questions about it. Like emails, I get emails about it, which is like, well, why don't I just trade 10 puts, right? Is that 10 occurrences? And I mean, in a way that kind of is, right? But like you're really not getting the sort of time diversification, I guess I should say, from spreading those trades out over time. So if you put on a trade every day, and market conditions change for a bunch of different reasons, those are occurrences as we define them. But when we're thinking about using occurrences as a tool to smooth out sort of these short-term fluctuations, then, you know, getting kind of space or getting a buffer time from those fluctuations is something that's, I think, kind of important to keep in mind. But again, this is a huge simplification. This doesn't account for like all these factors that you talked about, like adjustments and rolling and like crazy changes in volatility intraday, for example. Like there's a whole bunch of factors that affect this. But this is kind of more of just for regular old market conditions, for market, you know, index, ETF options, that kind of
understood.
stuff.
We get it.
Yeah.
Yeah.
Cool.
Thanks, Julia. Appreciate your
Very
time.
nice.
You're a good sport.
Very nice.
You're a good sport, and that was a very nice bad taste segment. So I appreciate it. But you know what? Everybody's replaceable, and we have to replace you with Mr. Scott Sheridan. That's right, from Tastytrade World Headquarters. If you're going to be replaced, Julia, be replaced by one of the best. Mr.
Honored.
Scott Sheridan.
Truly honored.
Taking your phone calls, 855-238-2789 or 855-BE-TASTY. That's the phone number to call. Give us a buzz. Phone line's open now. Thanks, Julia.
Peace.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Why are you forcing me to show my love and affection for my wife through I have to buy flowers and chocolates, and if I don't do that on this particular day for 24 hours? Yeah. And by the way, she bites. She bites. If I don't do this,
where are you in the relationship? Are you at the point where she's like, yeah, I don't really care?
Where is he in the relationship? How much trouble can you be in? That's where he's at. Okay.
Wait a minute. Where are you? Because
he lives in that danger zone, which is he lives in that little bubble at the end. I love that question. Where is he in the relationship? Well, there's 2 bags that are packed living in the front closet. Okay. I'm closer to where you are than where Scott is. He doesn't know.
No. You gave me an over-under on my marriage of 18 months. I went up to you. I gave you a shot. You were one of the first people I told. I said, Tom, I got married. Do you have any advice for me? He goes, I give it 18 months. And he walked away from me, Scott. That's the only thing he said.
He's threatening to strip, Bat.
Well, it's a little hot.
I know, I heard.
It's hot in here, so
It's not hot. It's not. Finally, for once, like it's not hot in here. Maybe you're having a hot flash.
It's so hot in here. No, I want to take this off.
So take it off.
But
Take it off. Do it now. We need
I don't
the
want
ratings.
to expose parts of my body if I take this off, so I have to be careful.
Please put your hands together and welcome to the stage, Cinnamon Sauce Grande. Oh no! Yeah! Yeah!
Oh God!
Woo! Where'd all the money come from?
Where's all this money from? James is locked and loaded, man. He's locked and loaded today.
What's the money?
Tom, do you shovel with those guns out like that?
I don't even.
Do you do a show for the neighborhood for all the ladies who are working at home? Do you get out there and do a show?
When I shovel in the snow, I usually take my shirt off and then shovel with my shirt off in the snow.
Like this. 14 inches of snow. Be careful.
How about this, Sognoff? $500 right now. I'll go down there personally and do it with my snowblower.
Oh, done. No, done. You're going to bring your snowblower down for $500? How about this? Because I'm such a nice person, I do have a snowblower. It's all yours. It's beautiful. It's a big snowblower.
Scott, when you put this away, did you drain all the gas out of it?
Absolutely not. Jews don't do that.
Okay, it ain't starting.
But I'll put money on it that when I go pull that starter, that bad boy fires right up.
I got $20 says it doesn't start.
I'm gonna have a video. We'll fire this little bad boy up. Seriously, I don't think I've used it in 5 years.
Tom is not allowed to do this unassisted.
A snowblower? You know what? That's actually, Beth has a point.
I'm going to tell
We
you
might
something.
need.
There is no bigger waste of life than a snowblower. They're more work. They're more work.
Shoveling?
I could have the whole thing shoveled by the time you get the snowblower started.
Police
Do you have a shovel?
I
No,
got
he
like
uses a
6
broom.
shovels.
He uses a broom. You don't use a shovel.
Like all the old ladies, he uses a broom.
Yeah, he's a broom.
Tom didn't shovel. He's lying.
Here, he's gonna take a picture. Watch this. He's just showing his phone. Did you take a picture?
No, I'm
Here,
going to go
flip
look
the
at my
shovel.
driveway right now on my camera. How do I take a picture of this, Beth?
Oh, man.
Oh my God.
Oh my God! Just
You don't know.
click both buttons on the side of your phone, you monkey. Oh my God! I can't with him.
Hey, Beth.
Hey, Tom.
Oh my God. Here.
I
oh,
just
here it comes.
text you
Okay,
a picture of my
he's
driveway. I
send you
just
a
took it from my
photo.
phone.
Wow. Good job.
You see that?
That.
Oh my God! That is the poorest job I've ever seen in my entire life.
Hey,
Yeah.
What did you do? Did you just sweep it back and forth like that?
it was 5:30. It was 5:30 in the morning.
My mother in a muumuu could have done better than that.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tastytrade, make your move.
Tomas, we are back, my friend. So you know what that means. Enough out of you.
Ooh.
Tastytrade
Ooh.
World Headquarters, your friend of mine. Taking phone calls today, 855-238-2789 or 855-BE-TASTY. The very popular Mr. Scott Sheridan from the Scott Sheridan Studios.
Okay. Just a quick question. Got to get this out of the way. Tony, total pro. You're ready for game time regardless of what happened the night before. Tom, did you stay up for overtime? Because
Yes.
if you did,
Yeah, whole game. Yeah.
Yeah, he's a little slow. He's a little slow today.
I'm not slow today. I'm fine. No big deal. Piece of cake. It was. You know what? It was a great game. I couldn't fall asleep. I mean, I wanted to watch the game.
Scott, I have to ask you because my Taiwanese sources told me that you sometimes like to watch hockey games. When you do, you don't usually watch them, but when you do, with toe spreaders on, did you have?
Oh, the best. No, but I've got them on now. I do have them on now.
What kind of kinky stuff are you into over there?
You know what? Text me. I'll explain later. Okay. It's the greatest thing I've ever done for my back. No question about it. So, yes, I could while I was watching the game. No, I didn't last night, but I do have them on right now. I'll show you.
Do you get a pedicure with the toe spreaders for your back?
No, don't do the pedicure.
Hold on,
I'm
hold
not
on.
opposed.
Why do you have a toe
opposed.
spreader?
This is a little over your pay grade. Okay. So,
I'm just curious. I don't really need a long. I don't need like a 2-hour explanation. Just tell me, why do you have toe spreaders?
Because it's helped my back. It's just amazing what it has done for my back. I'll leave it at that.
Now, are they legit ones that people will wear when they go to get like a pedicure?
Okay. If I didn't want to really upset people by showing my foot on camera, I would take my shoe and my sock off right now and explain to you. I don't have an extra set. I got a bunch of them around the house. I don't have one next to me. On Monday, I will bring you and I will show you what it does. Now, there's the yogi toes, which are the big ones. Would really get the toes out like this. Okay. You can't put a sock and shoe on with that. That's good for watching hockey. Then you got the other ones that I guess would be more like a pedicure, like to separate the toes, but it's rubber. So, and it's got a little thing, whatever it was Thomas say, a thing.
Do you tap dance when you have these toe spreaders on?
I haven't started tap dancing yet. I'm a little upset about that. All right. I'm still working on that one, but no, I haven't done, but I do ride with toe spreaders on. Don't say it. Don't say it.
I'd ride with those toe spreaders on too. That's what it takes, you kinky SOB. All right, listen, I got phone calls, so let's.
Look at that. Those are good. Those are over under. I don't have the over unders. I might need those. I don't know if that was John.
Hold it. What are those? What do those do?
Okay. I can't tell you physiologically, like I'm sure we have viewers out there who could explain what it is with the fascia and the feet, but first of all, most people wear shoes that are too small. Toe box is too small for sure. You for sure with the motorcycle boots that are like 3 sizes too small. Okay. Now, what happens is your toes then do this, with your feet then do this, which then shortens everything in your leg up to your glutes and then hurts your back. There you go. That was the quick answer.
So my toes are, my feet are, my toes are already webbed together.
He has his toes up in the air.
Yeah, your toes are webbed.
Yep.
Right. Do you have webbed toes?
Yeah.
All of them are webbed?
Yeah. So I could swim really good. Yeah, webbed toes. Yeah.
Yeah, I've seen you swim. Okay, so right, we won't talk about that.
TMI.
Okay, they're like flippers. Okay, so the toe spreaders might not work for you, but you could do with your toes, just take a knife and just slit the webs and just open them up a little, right?
Okay.
Just do a little surgery on yourself because you could do that.
Yeah,
Like, why
easy.
not? Like, you don't need a surge. You don't need a surge. Easy peasy.
Easy.
Then you slide them all the way down. So think about your toes being like this versus this. As soon as they get this, it releases everything in the bottom of your
My toes
foot.
aren't like that. My toes are like this.
Dr. Toe Jam. I'm sorry.
Like what? I can't see your hands. Wait, your hand. Let me see it.
Like they're together.
All of them?
Yeah. They're all fit in. They're all fit together.
For all the nights that we have spent together, I never noticed that.
I can't help you there. I mean, I don't.
I thought I would have noticed that. That's okay. Some people have webbed feet. Might not work for you, Tony. If you don't have webbed toes,
do not.
Try the toe spreaders. I'll send you some. They're great.
I would pay to see Tony walk around in toe spreaders.
Toe spreaders?
Yeah.
I got them on. If you want me. If you don't want me, if you're not worried about me,
I'm gonna wear it with my leg spreader that I have too. I'm gonna do that. I'm gonna do that
for the inner thighs. That was a good one. The inner thighs, you do like this, and it gets.
Scott, you have nouveau everything. They're telling me. Can we get to your list because I got phone calls waiting.
You mean when this segment started, you didn't think this is the direction it was going to go?
I did not. I did not.
Happy Friday.
Happy Friday.
Do you know what's crazy? Do you know what's crazy?
Yeah.
I bet you don't know
go
what.
ahead, tell me.
I bet you don't know what today is.
What? Oh, the 21st. Kelsey Grammer's birthday.
It's February 21st. Do you know what today is?
Yes. Oh, it's my half birthday. You're welcome. Thank you. It is my half birthday. So if you want to wish me happy half birthday, you should go ahead. Go ahead. Tell
February
us what it is,
21st.
you don't care about Kelsey,
Tony.
You don't care about Kelsey Grammer, and you don't care about my half birthday.
I don't know.
So go. Here it comes. Did you start Tasty on February 21st? What is it? This is obviously something about you because the world revolves around you.
Oh my God.
Sun revolves around you. Everything revolves around you. So go ahead and tell us what is this?
First of all, it's Expiration Friday.
Triple witching.
We knew that.
You did not know that. And
it's Expiration Friday. It's the third.
Not
Friday.
only
Did
is
we
it
not know it's
Expiration Friday, it's the most bearish expiration of the year.
So far, it's
we've
working.
talked about it ad nauseum. Yeah.
Well, we talked about it a lot. How short are you, genius?
Okay. Like, you're telling us something that's in the rearview mirror. Like, if you wanted to talk about this, talk about it yesterday. And you tell everybody you got to get short coming into today because SPOOs are going to be down 42 at 9:48 Central Time.
You know what, Scott? I cannot be responsible for every single person in the entire world that trades. Okay, I got enough. My hands full just taking care of two Batistas and
and me.
I got 4 phone calls. They responded. Can we get to the list, please? The third time I've asked you. Let's get to the list.
Top 15 someone going through the system.
You got to do it fast.
Oh my God. No broad-based indices or futures. I'm going to go as fast as I can. Number 15 for Tom, SMCI at a 70. For everybody else, PLTR at a 69, Tesla at a 31, CELH at a negative 39, NVIDIA at a 43, XYZ at a 5, UNH at an 81, BABA at an 82, Rivian at a 25, Meta at an 8, Hims at a 114, Amazon at a 17, Walmart at a 38, AMD at a 6, Microsoft at a 22, and number 15 for Tom, SMCI at a 70. Rounding up the next 10, NEM at a 38, Intel at an 83, NU at a 39, and Baidu at a 61. Tony, that was as fast as I could go.
You did a great job. Thank you so much. We'll go to Sammy. Sammy in Dallas.
Hey, guys. Can you hear me?
Yeah, sure can.
Hey, I made a request, I guess, maybe a year or a couple of years ago. I think, Scott, you were on the call too. Like, I wanted to know what was the underlying price when I, sold an option. Like, for example, if I sold a SPY option today, I want to know what was the underlying price at the time I made the trade. Did you guys get a chance to see if we can implement that?
I'm sorry, you want to know, Sammy, the leg price of a spread? So if you do a spread, you want to know what the legs are as opposed to just the debit or credit?
No. I want to know the underlying price of SPY.
Oh, the underlying price. Got it. You want to got it. That is coming in our alerts. I believe that you could send me an email, Scott at tastytrade.com, and I will get you the answer. But I believe that what we are adding is not only price, but IV rank as well. So I think there's a couple of configurable selections there that you're going to be able to add, and you will be able to then see what it was when you made the trade. Yes, we have a whole new alerts package that's supposed to come out this summer, the beginning of it, and that's part of it. So send me an email. I'll get an update.
All right. That's it. Thank you, guys.
Fantastic, man. Thank you so much for calling in. I appreciate you holding. We're going to go to...
We get a lot of requests, just so you know, we get a lot of requests for that.
You know what? That was excellent commentary by you. That was really
couldn't
useful.
Couldn't live without that. We couldn't live without this.
You know
either.
what? The show's now complete with that comment. Oh my God. Okay,
couldn't live without this either. Kansas City, Justin in Kansas City. What's up, my man?
Hey, I haven't talked to you in a while. Except through text message.
Thank you, man. Appreciate your time. Thanks for holding.
Yeah, I also agree with Scott. Tom, you should have warned us yesterday that we were going to have a big down day today.
Oh my God, I only said it 30 times this week, except nobody listens.
Thank you. Right, nobody does listen to you. Go ahead.
Maybe he's right. Maybe he did tell us. I don't know. I don't watch the show enough, I guess. But also want to say rest in peace to Hooters, because I guess we're going to lose Hooters, or are they going to reorganize?
They'll probably reorganize. Then we'll lose them.
They're going to reorganize.
Is going out of business.
They're going to reorganize.
Who owns Hooters? Is it part of another company, or is it just Hooters?
Private.
Who?
It's it's a private equity firm.
Oh, they bought. What was it? It was public at one point, wasn't it?
I don't know if they're. I don't know if they were ever public.
I think it was.
Oof.
Well, I sent Sarah a text message and told her they were going out of business, and she said, "Oh, dang, they had the best naked wings," which maybe I think was a euphemism, but we'll see. So my question, I kind of noticed on the E-mini futures, the S&P, NASDAQ, RUT, Dow, how come all of them except the Dow has options?
What do you mean?
Dow.
Oh, on the
futures.
On the ES Dow futures.
Yeah.
No, ES Dow.
All those major indices have options except the Dow future, which I thought was interesting.
Yeah, I don't know.
But you can DJX.
No, I know, but I don't. He doesn't want those. He wants the ones under CME for SPAN.
Yeah, I just thought it was interesting that those major index futures all had options except the one, which was the Dow.
Do you know it used to? When it first came out, it used to, but I don't think anybody traded it. That was the problem.
I mean, the Dow. Who even looks at the Dow? Sorry.
We had a trader in that pit when they first went live at the Board of Trade. We had our own guy in that pit, and that was a disaster.
Didn't last long.
That was a disaster of another kind. But I think they got rid of those options. I don't think that ever worked.
Huh. Oh, okay. Well, I was just curious, and I'm glad the toe spreaders are working for you, Scott.
Thank you, Justin. I appreciate that. See, now, what Tom and Tony don't know, which I didn't want to get into, was
just take the compliment. Just take the compliment.
No, Liz and Jenny and I had a whole conversation about. Liz and Jenny and I had a whole conversation about this. See, now you're interested about toe spreading because I'm talking about Liz and Jenny.
Pictures, or it didn't happen. Pictures, or it didn't happen.
John, James, somebody, we got tape. Let's go back to last Friday, or was it last Friday or 2 Fridays ago? I don't know, 2 Fridays ago, I think, whenever you guys were both on vacation, which you do every other Friday, whatever it was. Good content. Okay, continue.
Thank you. I think we're going to Denver. We got Kevin in Denver.
Taking the call.
Kevin, how you doing, sir?
Hello, how are you?
Good.
Hey, first of all, as a Canadian living in the States, I'd like to say thanks for the graceful way you took the result this morning. Thanks, guys.
Listen, it's great for hockey. It's great for the game. It was a great game. Hockey won some fans last night. Hockey's going to be a lot more popular than it was, 48 hours ago. Great.
What do you think that ticket was? Like, to get a ticket.
Couldn't have been
to get a ticket there.
Couldn't have been closer. Couldn't have been more evenly matched.
It was.
I've
You're
got
right.
a question for Scott. Excellent platform, thank you. Even though we all know Tom did most of the programming.
Basically all.
Wondering if there's an option, if it could be selected that when you're trading futures, that it also shows the notional value as well as the buying power.
There can't be. We tried. We couldn't do it. It got too confusing with the spread portion of it. Got too confusing. Like the underlyings are easy. Like individual options are easy. But how do you do notional on spreads? And so many people have so many spreads on. The calculations were messing people up. That's why we didn't do it.
Okay, I appreciate that. I knew there's probably a good reason. And also wondering whether there's the possibility to introduce sort of automation to some trades. Like if say we're putting on a trade every Wednesday at a certain certain delta, et cetera, or is there a way of doing any sort of automation? I know there are bots out there that do that.
Well, 100%. If you're capable, we have an open API. Documents are out there. They're available. If you're capable of using an API, I don't use it, but the feedback on our API is beyond outstanding. So if you want automates,
the reason we don't do it, Scott, is because if we build it in, then we have a liability and the risk of.
We're not doing it. I'm not saying us. We're not building it so that, because again, if we build it and all of a sudden something happens and the trigger doesn't happen, then that's on us. But we have an open API, and again, documents are all out there. If you log into Tastytrade, and I think it's under developers. Hold on 1 second. I think it's under developers on the left-hand side. Let me log in. Hold on. Log in. Sorry, give me 1 second.
Don't worry, Scott. We have all day. We own the network.
Listen, I'm trying to give an answer, okay? So I believe back testing. Shoot me an email and I'll tell you where to go. But I believe that we have it. And again, I can't say from personal experience, but the feedback that we've had on it is unbelievable. Like, it's the best that anybody has used. That's what I frequently hear. So yes, you can do it if you have the ability to connect to the API.
Perfect. Thank you. And one last question. When you I know how to put on a pairs trade, but can you close a pairs trade in one trade, or do you have to close them individually?
You have to close them individually.
Okay.
I mean, here.
You can use the pairs trader.
No, you can use the pairs trader, but what happens is they both get routed as individual orders. The CME does not allow you to spread a single order over two products. So you're going to be filled there. It's the same thing as routing two separate orders.
It basically fills bid offer.
So you can't just put the opposite pairs trade in the pairs trader and it'll close what you've already got.
You can.
Yes, you can.
You can change the price to higher and lower too. Like, so if you don't want to get filled right at that price right now, which would be hitting the bid and taking the offer, you could move it, and then one will trigger as soon as that number fits and hit the other one. Now, if markets are wide in those futures, they become market orders. Correct me if I'm wrong, Scott. They become market orders, so that price is not a guaranteed price like on an equity spread, but it's the best thing that we have.
It's effective. Well, not effectively. You are studying what you said. It's two market orders. That's it. Yep.
Very good.
Thanks very much.
Thank you.
I've seen a couple of your live. I've seen a couple of your live shows, and you guys do a great job. Thank you.
Thank you, man. Appreciate your continued support.
Bye.
Last one, Pennsylvania. You're going to go to Bank of Pennsylvania. What's up?
I have to shorten this because we don't have a lot of time, but I never knew there were two gold prices: London gold and New York gold. COMEX versus ICE. Which one are we trading if we buy futures on
New
gold?
York.
No, we're trading. You were trading the CME gold.
ICE. We don't trade ICE. We don't trade any ICE products.
There's lots of gold markets. There's London, New York, Chicago, but you're trading Chicago.
And these crazy stories about moving the bars from the vaults, talking about possible physical settlement, or maybe it's some mark-to-market thing. Do you have any insight on that? I mean, it's a non-issue. I'm just curious.
There's no more physical settlement. They got rid of that, like, I think about a decade ago. Now they force you to cover. The only physical settlement are certified hedgers.
I'd have to write to the Wall Street Journal because they mentioned physical settlement.
Yeah, there's no more physical settlement for retail investors. There's only physical settlement for hedgers. They changed the rule a while back. It was just a pain in the butt.
Okay, last question because we got to go. But I'm going to try to stump you. What is BaFin, and have you ever been there?
What is what?
What is
BaFin? BaFin.
BaFin.
I know what Boofin is back in Brooklyn, but I don't know BaFin.
It's on your email disclaimer. Your whatever they call that. You know, your long-winded email. It's the German
disclaimer. I don't know what
regulator. It is. But the word has 25 letters in it. I don't even know. But read your email disclaimer because I've never seen that before. But hey, guys, I'll let you go. I know it's a few minutes after 11. Have a good weekend.
Thanks, Bank.
Thank you.
Thanks,
Appreciate your time. And I do apologize to Eddie. I apologize. Eddie, send me an email, bat@tastylive.com. I skipped over you. It was my mistake. I apologize. Please send me an email. I'll answer your question. Scott, thank you so much for coming on. Have a great weekend. Sadnov, unless you're a black lab, web feet, I don't think there's any place for it on the human body. But we're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tastytrade. See how it pays to have friends? Terms and conditions apply. Tastytrade.
Looking for a better broker? and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tastytrade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tastytrade. Make your move, genius. Tastytrade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tastylive.
There's a big beast in the financial world, and it's not the bull. If that's you, join us on Tastytrade. Genius loves company.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tastytrade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tastytrade. Make your move, genius. Tastytrade. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tastytrade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tastytrade. Make your move, genius. Tastytrade.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking, the beautiful brunette. To the left of me is Miss Jenny Andrews, and we made it through this week, barely, but we made it.
We did make it. We made it. But you're on the up and up. Every day you're getting better. Every day you're looking better and better.
Listen, I play my Rocky music as I walk like a turtle on the treadmill, getting stronger each day.
Hey, it was a good week for you. Big step. You made it out of the house once, and you got on the treadmill.
Yep.
And
it's a big week. It's a big week. Now, I wish we were filming our breaks because me, Jenny, Tony, our super producer, John McGloin, and Scott Sheridan were all ordering toe spreaders.
Scott, I thought you were going to say we're all talking at once because Scott's talking about his toe spreaders. We were asking John about his time off, and I'm trying to shout about the market measure coming up.
I think everybody was ignoring you because I was talking toe spreaders the whole time.
And I was just trying to talk about the market measure. But hey, I see we're popping the platform. Let's pop in the platform. My account took a turn. It was up. I got in the shower. I got out of the shower, and it took a big turn. So,
yeah,
right.
Wait,
right.
I was laughing though. Did you see where the settlement is? Because it's nowhere near right here.
Is it just pretty much unchanged?
Unchanged. I think it was like 61.16 or something like that. Exactly unchanged.
Because on the open, we weren't really moving. We were not moving too much. So SPX settlement 61.13. SPX right now is 60.79.
Yeah.
So we didn't really move much on the open.
Yeah.
We honestly have a lot to do today. We asked Kai to put together some, best of market measures for Fridays for us so we could see anything we missed. So we're going to go over some takeaways from one of this week's market measure. We've got tweets to get to. We have not a million, but we have a lot of red in the money signs, meaning those options are expiring today.
Well, you and I have totally changed where we like weekly instead of durational trades. It's actually been helping our account. My account is taking a bigger hit today than this. We're in kind of protection mode. We're still doing okay considering it's the second month of the year, right? Expiration of the second month of the year.
Yeah.
So yeah, super exciting. I mean, it's not bad. We gotta handle this, but it's expiration Friday, the real expiration Friday, even though every day is an expiration now.
Right. So we do have quite a bit to take a look at, a handful of earnings to make adjustments to, and nothing was terrible. XYZ was the only one that was bad. But I think they're all manageable. I think they're manageable.
Did you see those crazy kids and those crazy energy drinks?
Yeah. Celsius up $7.
It's something I put in my son's account because he knows what it is because all the kids drink it. So he's very happy today.
Well, that's good. Good for him. Up $7.
Yeah.
Other big movers, XYZ to the downside. XYZ is down $13. So that was a big. When I saw that, I thought this is the reason we like diagonals instead of naked puts, because naked puts down $13. It would have been, that was well beyond its expected move.
Thank the Lord. I will gladly donate $340 instead of, what would be a $7 donation. And then you're rolling it and trying to keep it alive.
I know. Honestly, down $13, I expected a bigger rank, and I thought, well, I wouldn't mind selling puts in XYZ but why is the rank negative? That's really surprising.
Well, since Tom took off the fence, it can go negative.
No, I understand. I'm surprised with the down $13 that we would have a negative rank, that it wouldn't keep some vol in it. So
yeah.
I thought we'd get in with selling puts, but not with a negative rank. I think we just have to say,
no way, Jose, we're not doing it. We're not going to do it with a negative rank. I mean, we're just going to sit on this. It's worth 12 cents. But the interesting thing is, and I'm not saying the silver lining, silver lining is, it is. We only lost $340, number one. Number two, we have 13 days for that to come back.
It's fine. It's fine. At least we had the rest of them are okay. Like the rest of them are totally manageable, and Celsius was the only winner. But the other ones we'll do something with them. We definitely will. And we'll get to that. Before we get into managing this account, I want to remind everyone, if you haven't signed up, sign up. This weekend is the digital collectible beginner trader from start to finish. So I don't want anyone to miss out on this. I want to make sure that all the newbies that I know are getting this. But Liz, you said it's actually not very basic. It's a little more advanced.
So that's what Tom had said. He said he thought he was going to take it to the place of like, what's a call, what's a put. It's you have to have a base of knowledge, I believe, which is great. I think that's fantastic. I think you can go get your base of knowledge somewhere else. Like you can know what a call and a put is before you go to this. And I think that's a good spot.
So sign up for that. And coming up after that, you have advanced options with Mike and friends. Mike and his whiteboard and friends.
Mike is whiteboard and some friends. It's going to be amazing.
And then you'll have the digital collectible of that.
Yeah, so super cool. Everybody sign up. I mean, I did this a long time ago. When I went in, I signed up for all of them.
That's a good idea.
Yeah, I didn't go in and do one at a time. That's why I don't need to remind myself. I've had these things been locked and loaded. It took 3 minutes, right, to get all 3. Not even.
It's very quick. It's very quick.
Yeah.
You don't even have to log in. We are taking live tweets today. Include your hashtag LIZJNY. This came in from Frank yesterday. Could be tonight's main course for the neighborhood. Oh, for the neighborhood coyotes. Oh, but look at the wild turkeys Frank has.
Oh my God, I love it, Frank. That's fantastic.
And who was going on? Who left for vacation? Mikey and Lady H at the airport headed to the Feb dive trip, flying Delta. We haven't looked at Delta in a while. Goal is to land wheels down and keep them down.
I like it, Mikey. It's good to have goals. That's perfect. You guys are going to have a wonderful time. I love. These two took on scuba diving recently, not recently, but within the last couple of years as a bucket list item. They're my idols. I love it.
I know. So I'm trying to see, what city are they going to? Atlanta. Oh,
Atlanta.
Did he say that? Did he say that? Right?
Well, I mean, I think you stop there and then you go somewhere else.
And then go somewhere else.
They're going to, and I always say the Raton or the whatever it's called. I put the in front of it, but that's where they're going. And I think you probably have to stop in Atlanta.
Stop somewhere.
Yeah.
Okay, so we are taking live tweets. Just include the hashtag LIZJNY. We'll get to Twitter. Do you want to do management first or market measures first?
I want to do market measures because I want to give a massive shout out to our very own Kai because he's awesome. You ask and you shall receive. We asked for a recap of some market measures and he did it. Now he gave us a couple. We actually, which I love, he gave us a recap of the one that we did on Wednesday as well. So we're not going to do that one because if you need to, you can go back and watch our show. But we appreciate it, Kai, more than you will ever know. So I want to give a big shout out to our very own Kai.
Right. And that one on Wednesday was, just to refresh everyone's memory, that was about if you have under $25,000 and you're stuck with that 0 DTE pattern day trading rule, talking about using the 1 DTE in SPX instead of the 0 DTE. So that is the one we're not going to go over, but we are going to see, when we're not on, we don't watch every minute of the other shows. So sometimes we miss a market measure and we want to know if there's something important, what did we miss? What do we need to know? So that's why we asked Kai to put together these takeaways. And we say this all the time. We want to know the takeaway. We don't care how the sausage is made. Give us the takeaway. So that's what he's doing for us. He's taking the weekly market measures, giving us the setup and giving us the takeaway.
Yeah, he is, and it's awesome, and we appreciate it. Okay, Jenny, before you do that, you got to decide about Shajun. Earlier the better. It's 10:16.
I'll do it. Yesterday's what lately we've been seeing, if we would have left it, they would have come in.
Yeah, but let's do this. So we're down. What are we down right now? We're only down 30. Are we only down 38?
260. Yeah, we're only down. All right, we're in
260, 310. Put in an order for 310. Bada bing, bada boom. Hopefully we get a quick $50.
310. And this is not a trade recommendation. We get emails on this. Some people like it, some people don't. Not a trade recommendation. We're doing it. We're trying it. But
I'm not gonna lie to you. Sometimes Jenny likes it, and sometimes she doesn't. So nothing's a trade recommendation.
Yeah. All right, but it's in there. And the order to close it is in there.
Perfect. Beautiful. Okay. All right. Sorry, I did not mean to distract you. I just figured let's do it instead of, because I think 10:30 would be too late. You know what I mean?
Yes, I agree. Get that in before we start this. Now, weekly summary of market measures. We're going to definitely, and these market measures are sponsored by the SIBO. We all love the SIBO, right?
We love the SIBO. It's our home. It's where we got our start. And we always say, be nice on the way up because you'll find yourself right back in the pit on the way down.
We were talking about that. How many people end up back where they started? There are people we're two people. I started the SIBO and now we're back at the SIBO.
Yeah, you can't keep us. You can take the girl out of the SIBO, but you can't take the SIBO out of the girl.
All right. So weekly summary. Here we go. Here's a recap of one of the market measures that we missed, measuring the odds of large daily moves in high volatility stocks.
Okay.
So I like that.
So I do like this because this is, we've kind of been saying this. Is this ride the wave? Is this buy the dip? Like you can kind of take this in different directions. And I love when the research team takes things that we've kind of been talking about and take on it.
Right. And I think large volatility stocks, well, you're getting paid a lot of premium in there. But if you're selling premium in all these large volatility stocks, what is the chance that you're going to get a large move and get hurt on that position?
Yeah. Right. Well, yeah, right. It's there, which is great. Okay. So these are going to be pretty quick. There's not a lot. There's not
magnitude. We can assess the probability of such shifts taking place. So we're not going to go through the whole market measures, but how can we see, how do we know what's the chance of a big move in an ETF or a single stock? They go through the math and the study, and here are the takeaways, because that's what we want. That's what'll help us trade. We want the takeaways.
Yeah, we do want the takeaways. And, just kind of before we even get into it, Jenny, we talk about these are high implied volatility stocks, right? So we're always searching for the high implied volatility. And, for every gimme, there's a gotcha. There is a higher movement to high volatility stocks, and that's why it has a high volatility.
Right. You're getting paid to take the risk.
Yeah.
Okay, so takeaways. There's very little probability of having a bunch of large moves back to back. So, and bunch of large moves back to the back, meaning like day 1, day 2, day 3, day 4, like so many days in a row of big move, big move, big move, or big move across the board. Like big move here, big move there, big move in Apple, big move in Netflix, big move in Amazon. What do you think?
Oh, I think it's individual stocks. I don't think he's when I'm looking at this, that would be my guess, kind of from the setup of the study. But once again, I could be wrong, right? But so I think you could have a bunch of big moves back to back with lots of stocks. I don't think you're going to have back to back. Like we looked at DraftKings and it shot up on earnings. I mean, the fact that it's going to shoot up and shoot up and shoot up and shoot up, that I think that's what they're saying. There's very little probability of having a bunch of large moves back to back. I mean, look at PLTR. PLTR was big move, big move, big move, big move. And that was very rare. That's why the implied volatility was so high.
And it was up today, but is it down now? Like there were a lot of things up today that I'm curious to see where they are now.
PLTR is still up. I mean, don't get me wrong. It's only up 1% and $1 because it's a $100 stock, but it's up today.
Right. So it was up more this morning, but yesterday it made quite a comeback. Okay. So let's see. According to our study over the past 10 years, individual stocks have exhibited more than 3 times the frequency of large daily movement compared to ETFs. Is that Jajoon?
Sorry, that was so exciting. How long? Wait, hold on. Can you go?
It must have only been like 3-4 minutes.
Yes, I think that's our record.
It'll be a Jajoon record. Okay, that's why a lot of people love trading ETFs, right? How many people have we met on the road who only sell ETF strangles? The ETF strangles, ETF jade lizards, ETF spiked lizards. People love ETFs, less likely to have some big moves than individual stocks.
And that's the nature of the ETF, right? So an ETF is an exchange traded fund, which is a basket of products. So because it's a basket, you're going to smooth out those big moves. It's not going to have the massive, we always talk about that. Individual stocks can have event risk, right?
Right.
And the ETFs kind of don't really have that massive event risk, minus, something happening in the overall market.
Right. But, less. So, I mean, it's right here. Individual stocks, 3 times the frequency of large daily moves compared to ETFs.
Yeah. So a lot of times, the holy grail is a super high implied volatility with an ETF, but you'll notice ETFs usually have a lower implied volatility than the individual products that are moving them.
Because you can see right here, they're less likely to have that big move. But maybe I used to sell strangles in IWM. I haven't in a while. Let's take a look at that after this. Because that's IWM, one of the ETFs that's a little bit lower price and more realistic for us selling a strangle.
IWM has been my creme de la creme this year.
Right. I know you've been in it, but you haven't been selling strangles. You've just been long. You've been doing diagonals.
No, I've been doing weekly puts, weekly.
Oh,
weekly,
yeah. That's been great. Yeah.
Actually, I'm sorry. I'm not even weekly. This is how rule breaking I am. I'm going to give myself a certified badass card. I've been selling daily because I don't care if I get put the stock. And when I do get put the stock, I close it again and start selling out of the money puts again.
After we finish this, we'll go into IWM. We'll take a look at what you've been doing and we'll look at some strangles and we'll compare a couple trades.
Okay. Sounds like a plan.
All right. Finally.
So since early 2025, we've seen more large market movements compared to early 2024. Really? Okay. So
this year's been kind of volatile. We've seen back and forth movement.
Yeah, we have. And a lot of times, even earnings, you'll see massive moves to the upside and massive moves to the downside, offering profit opportunities and increased liquidity, but also posing risks like losses, stress, margin calls, and slippage. It's requiring strong risk management. I love this guy. I love that you threw stress in there.
This is so funny that it says stress and margin calls. Margin call. Who this? Wrong number. Oh, stress. Okay, if a position's causing you stress, it's too big. It's too big. Or I guess in the beginning when you're not used to trading, some positions can cause stress. Nothing causes me stress anymore. Or if it does, then I close it because then I know it's too big for me.
Yeah, you know what causes me stress? Teenagers, not positions, right?
What's going on?
No, they just, like I said, you just want to make sure that they're going to be functioning adults. That's it. So they're the ones that cause me stress, not positions ever, because I'm never going to be too big.
Although this morning when I opened my account and it said I was down, I don't know, a lot in MJ, I was like, what is going on in MJ? That wasn't causing me stress, but that was causing me irritation for sure.
That was more like, what the hell is happening? Because even Google couldn't tell me. I mean, I Googled it every which way but loose until finally they told us it was a 12-for-1 reverse split, because I don't even think they knew what was happening.
I didn't know there was a 12-for-1 reverse split. Okay, let's go and look at IWM, because that's the only ETF that we could really afford naked strangles in. But I want to hear you tell me about what you've been doing, since IWM is your creme de la creme. What have you been doing?
Honestly, it's like right now I moved this morning, so I'm sure it's getting hurt because we weren't down as much this morning. I moved my 0-day to my 3-day, and I just keep moving it, like legitimately. I mean, and you'll get about 70 cents a day.
So right. So if you sell the at the money put in the 3-day.
And I keep it close. Like I don't mind. I don't mind doing the 220. I don't mind doing the 222. I think I'm in the 223 right now. And I was like, all right, 60 cents isn't bad. So it's almost a synthetic covered call.
And just keep moving them out day to day to day to day to day.
Day to day. And here's a fun fact for you, Jenny, which I didn't actually know how this was going to work out. Because remember, we were talking about things that close later. I forgot to roll it yesterday, and I rolled it at 302.
Because these ETFs usually you can trade them till like 315, I think.
Yes. Yeah.
Now, I
rolled at 302 yesterday. I mean, whatever. I would have come in long and then I would have sold out my shares and done another put, or just sold a call until it got called away. I'm fine with it. I would have been fine either way, but I figured I would test it yesterday, and I did. I rolled at 302.
Now, when you're doing the dailies, you're not getting much room to be wrong. But the nice thing about the dailies is that I know this says $4,000, but when you're in the dailies, you can find something for a nickel. Here, the 213 is a nickel. You're using 700, so you can replicate this short naked put and give up a nickel for not a lot of buying power. Now, you know me, I do the very short term weeklies and IBIT, and I'm just trying to every week get some premium, and I will move it. I will pay to move it. I will, and I did that this week, like paid to move my strike down, or paid. So let's say
show what you're doing. Like go to IBIT, because this one doesn't. I mean, don't get me wrong, it's down $2 today, but it's been within 19 and 24 for a while. Like I don't have to move them too much. I'll move them a little bit because you're taking in so much premium, but you don't have to do it that much.
So let's say you had, let's say you had the 224 and now it's a couple dollars in the money because we're falling today. So if I were moving this to the next week, I'm always just trying to get that at the money premium. So, but you're going day to day and I'm going week to week to week. If I went to...
And you'll notice there's a lot of premium day to day to day to day. And I don't know if this is the right way to trade or the wrong way to trade, but I figured I don't mind being long IWM, but I want the premium.
So let's say I had the 224 that was expiring this Friday, and I would go to next Friday and I would actually move it to the right out of the money. So it's actually costing me money. And this is kind of how I treat IBIT. I keep it right around, at the money. I might move it to here so that every week I'm moving it. If I have to pay to move it, I pay to move it, but I'm just looking for that decay every week.
And you know what's interesting? And you're weekly. So if you take a look at IWM, you actually went to the 7-day there, which is far. You don't have that much. Like you can move it. If you go out an additional day, there's so much more extrinsic value that a lot of times you can keep it within that same range because there's so many more days to play with.
Right.
Yeah.
So, but if you're doing this, and I know you're doing this.
Well, it's because I'm doing this because I don't mind being long IWM. And if I want to be long,
yes.
And I'm an over trader. So if I wanted to be long IWM, instead of just going out and buying IWM, I'm going to sell daily puts until I get put that stock. And it's been, look at that range. It hasn't moved much.
that much, right?
Oh my God, did you get saved in IBIT today? Remember we were hoping for an uptick on Friday?
Oh, in coin, it had it this morning. Like it was crazy. It was crazy. So this morning in coin, I was thinking of you the Friday. So there's still SPY. This is still SPY. No, coin was up.
Coin was up. Coin was up like $9. Yeah.
Yes, it was up. So let me see if I could get.
You're saved on Fridays in coin.
I know. I can't remember now. What do I do if this chart's stuck? It's stuck on SPY.
That is stuck. That is SPY. No, that's Coinbase.
No, this chart's stuck on SPY.
Oh yeah, that is stuck on SPY. Even though it says Coinbase right there. I don't know what to do.
So I can't remember what to do either.
How about hopefully our super producer is listening. Let me make sure mine is working and we could just switch. Hold on one second. Let me see if my is working.
So it was up $8 today. It was up, and I was like, the Friday run. And then I got out of the shower, and then it was down.
Okay, so let me do something real quick, and then hopefully our super producer can take you down and pull me up, and then you can do your switcheroony. So John, pull her down, and I'm going to share my screen.
All right, I missed it. Then I'll stop sharing, and you're going to share.
Perfect. And then I'm going to take this over, and you see a nice Sequoia. There you go. There's the Coinbase chart.
Okay.
So here's your Coinbase chart. And so let me move you real quick.
Yeah, look, it was up $8 this morning.
Yeah, it was up $8 this morning. I was thinking of you. I thought you were going to be saved by the Friday rally.
And it got right because my put spread is the 265. My short put is the 265, and it was trading. You see as high as 267. So I was like, oh man! But I didn't close it. I didn't close it. I was waiting for a full profit end of the day.
Well, it could come back.
Yeah, you never know.
Yeah, it very well could come back. You can act like you've been here before.
And open up MJ so people can see MJ because I don't know if we have stock in MJ. I guess not. Oh, yeah, we do. Yeah, we do.
Oh my God, we do. What do we have here? Oh, we have 8 shares because we must have had, it was a 12-for-1 reverse split.
Okay, and I'm going to show people how to get rid of these little shares. So this is what I saw, this bar, and I was like, what is going on with MJ? I'm going to show you how to get rid of fractional shares. Do you want to just get rid of our MJ position?
Don't you have to call?
No, I'll teach you all how to get rid of fractional shares.
Okay, talk to me.
Because I got rid of my MJ this morning. I was like, this reverse split kits to the death. I'm getting rid of all of mine.
Okay.
So go to close it. Close position. And right now you have to eliminate the 33333 and just sell 8 shares.
Oops, hold on. Okay.
Okay, so sell your 8 shares, market, 20, wherever you want to sell it.
Market. I'll do a market order.
Not market. Sorry, limit. Not market. Limit. So wherever you want to set your price, 24.85 or what?
Yeah, I mean,
yeah.
Okay.
Okay. Now you go back and to clean up your account so you don't have these fractional shares, click on that close position, and here you have to hit market. Just leave your 0.33333 market ship. Gone.
Oh. Look at you.
I know. Cleaning up.
Look at the big brain on Jenny.
I like to keep my account clean, so I don't like having all those little fractional shares.
Yeah, that's crazy. Okay, good. So we're out of MJ, not in a good thing, but
well, hey, so this is how the reverse split worked. I don't know what, we probably had 100 shares. I don't know how many shares we had. Probably 100.
I'm sure we had one. We probably sold the put 100 shares.
Yeah, we probably had 100 shares.
And now 12-for-1 reverse split, 8333. That sounds about right.
Going from
Jenny,
2 to 24.
I would like you to give a slow clap to our buddy
Jajun.
Look at this. Today, 10:17 to 10:21. So we've got 4 minutes. That's
4 minutes. Good.
4 minutes, eh? Okay, so that's awesome.
All right.
Now,
ADI.
Jenny, let's clean up.
I don't even know what ADI is or what it's
ADI
from.
was an earnings trade that we put on a 217 calendar for. Now this is in the money, so we're going to have to close it.
And you can go, if you want to see if you can really get 20 cents for it, go to the 7-day and see what the extrinsic value is in the 7-day put. No, it's nothing.
Yeah, you can't get anything for it. So we're going to close this. I'm going to close the whole thing because you have to close it. And I'm going to put in for 10
A
cents.
nickel? I don't think you'll even get 10 cents. You could try.
We'll go a nickel. I mean, if it price improves, great. And we're filled 9 cents.
Oh, 9 cents.
Yeah, hey, that's something.
Okay.
Yeah, nothing.
So
okay. Look at this. Look at our winner. These caffeinated kids are taking us to the promised land to the tune of $250.
Good. I mean, so $250 is definitely more than we would have made if we just sold a put in Celsius. So that's good.
Heck yeah. So I'm going to ship this. I'm going to take this to 05. Okay, we should still have some premium in there. Perfect. 405. We took $250 out of those caffeinated children. Disney, we have a lot.
This is I know, Chad. Pop out our order chains. I'm curious to see what we've got going on in Disney. What our year to date is in Disney.
So we're down quite a bit.
Oh yeah.
This is 30 days. That'll be year to date.
Yeah, year to date.
We're still down quite a bit. No, Disney, we've had calls, diagonals, put spreads.
Yeah, 111. Let's just sell a put. Although 15 rank, I don't know.
So this was a diagonal that we had in, and this is the residual of the diagonal. Okay. So if you're going to be with a 15 rank, I don't know. So we love Disney, and that's probably why we're long it. If you leave this, you're going to come in long Disney, and there's no extrinsic value in it. So we're going to sell that. Now, here are our options, Jenny. I'm going to give you options, and you get to choose. Okay. This is choose your own adventure day for Jenny. So we can keep the dream alive by doing I'm just looking at this, 115. No, I don't like this at all.
And too much.
And the $5 wide strikes are a problem. So we're going to get 20 cents back for whatever we do. But here, what if we did 80 cents on the 14-day is not bad, then 30 cents. So we're going to pay $2.62. We're also going to get back 20 cents. So it's not going to be that much. So I'm going to go to the 14-day. Just because the rank is so low, if we want to be long, this is kind of where we're stuck.
I'm
230 to 233 on a $4 wide. Fine.
And this is going to be my last. This is going to be our last chance at a diagonal in Disney. If this doesn't work, we're switching to naked puts.
So naked puts.
I'm just selling puts. I know the rank is 15, but I'm just selling puts in there just because.
You can go to the 110 and you're just using $2,000. Now, granted here, wait, you could buy this. You can get 172 and use only 282.
And I know the rank's the 15, but I'm doing that instead of just like hoping for it to go up.
It's hard because the rules are, there are no rules, but with a 15 rank, you're supposed to do something but sell puts, but I kind of like the puts better too.
I like the puts better. It just gives us, it doesn't have to go up when we could still win, but the diagonal's not that expensive. Again, go ahead with one more round of a diagonal. And if we lose on that again, then switch to selling puts. Maybe by then the rank will be higher. Yeah. I have a lot of, I usually don't, but right now I have a lot of put spreads in just in case the market doesn't really do anything and things aren't going up. But if we sit here, they're still going to make money.
I don't mind a put in, only because it's Disney. Do you know what I mean? Like whatever, if we take the stock, we get long the stock, we get long the stock. If I'm going with the put spread, I'm selling the 110, 100 for $2.
Yeah. I kind of, if that drops down and we lose money on this put spread, we'd be losing on the diagonal too. I know there's a little more risk here, but at least it doesn't have to go up for us to make money on it.
Yeah, that's why puts have their time and their place, and I love it. That's why I like the IWM puts, because I love the puts, because it doesn't have to go up for you to make money. Puts are neutral too. Okay, so that's Disney with the little in the money sign. Let's keep moving forward to make sure we get these, and then we'll put on some other new trades.
Liz, can I ask you, since I'm taking over, since you're running it and I'm taking over pushing out, did you push out the earlier trades?
Hey, check this out, Jenny Andrews. Watch this.
SPX.
June.
Okay. I just needed to see where so SPX. Got them.
Yeah, you got those.
I just wanted to see where you left off.
Yeah, those are already pushed out. Okay, so then Snap is the 12 put, which is basically a synthetic cover call. Let's kind of go to I'm going to pop out our activity in Snap. Year to date, we're down $27 in Snap. And here we're down $27. So this is our only put in Snap. I'm going to take this, close it. There's zero extrinsic value. We'll go out and sell the 12. You're getting virtually nothing. In this situation, Jenny, I'm going to pay 64 cents and bring it down to at least the at the money, so we're getting some extrinsic value.
I would.
Yeah. So I'm going to ship this. We're only putting an additional $1 in capital, but we're at least getting extrinsic value.
Mm-hmm.
And we had a naked put, so it's synthetic covered call. Okay. Moving forward, Taiwan Semiconductors took us out. Oh, look at this, Jenny Andrews.
I am busy. We have so many trades to push out. I am busy pushing everything out onto the follow page.
I can do it while I'm doing the show if you want, because
let's see. What do you want me to see?
Taiwan Semiconductors. We're long.
Oh, we were assigned. We were assigned.
Did you see that in our buying power this morning when you were going through our stuff?
No.
Yeah.
No, okay. Go. I'm just curious. Go to try to sell a put somewhere and see how much buying power we have in the account.
Okay, so Taiwan Semiconductor, we're long the shares. Well,
not in Taiwan, and something else. Just pick something else. Like go back to Disney or go to something. Try to go to something and sell a put. I just want to see what it says our buying power is.
I can tell you what our buying power is. I always keep an eye on it. Our buying power. Wow, we must have been assigned yesterday because we have a lot of buying power. This must have been here for a couple days.
Oh, because you're saying that put is giving us the buying power back?
Yes. Watch this. So it's not that much. It's $3,000 in buying power, but we still have quite a bit of buying power left. So it was the same as it was yesterday. We just didn't see this yesterday.
How is it only holding up $3,000 in buying power?
So let's take a look at this. So we've got a long 100. So if you left this, hypothetically speaking, you're Rip Van Winkle, you're not paying attention to your account. This is something that's no harm, no foul, because your put would be taken away by your other put, right? So this would you'd come in exercised and assigned, and this would wash each other out minus your, $5 here and $5 here for closing it. So to take this, we can close this don't want to do this for.
But do you see what I'm asking here? Like that $3,000 in buying power.
Yeah.
If that spread, the distance between the stock and that 212 is only 1,200. So if that put were giving us back that, like, it would only be 1,200.
It's not. That's what I'm saying. You know it's balls. I know it's balls. It doesn't happen. And that is from Dairy Girls. But yes, it's not. Like when we went in, I mean, Tom and I were, he's like, okay, it only happens sometimes if you have the stock and this, and it's a perfect storm. Taiwan Semiconductor, 4.29 million shares of traded.
Stock, it would be holding up
$1,200.
$10,000 stock, 100 shares of stock would be holding up $10,000.
Yeah, but it's not.
So it's like the buying power. It's like the margin of a naked put.
Yeah, it is. So we're going to close this. Here's what I was going to show. 112. It's going to be like right around there.
Sure.
I'm going to say 49. I'll try to get 1 penny, squeeze 1 penny out of them. See if we can get filled. There we go. 49. We squeezed a penny.
All right, and we got some money, some buying power back. But we have enough buying power. We didn't really need it, but now what do we want to do in Taiwan Semiconductor?
TSM. I want to see what our year-to-date in TSM is. Give me 2 seconds. I'll check it right here because I should have checked it before. TSM. I can't do it on that one right now.
Let's go to Taiwan Semiconductor, see if we want to place a trade.
So it's got a 32 rank, and we are up on the year. Look at this. We're up $235 year to date in Taiwan Semiconductors. So really no harm, no foul. So if we wanted to.
$200 product.
Yeah, so very similar to kind of what we were looking at with the 30 rank, I might do something like this. Get 212. I mean, I understand that you want a third of the width of the strikes, but that's why I brought it down. If you want a third, you're going to have to bring it up to here. But I like. No,
I don't care. I 200 on a $10 wide, I don't mind.
I don't either, and it's in 28 days. It's not like it's a 45 day. So let's do this. Let's sell this. We've got a 31 rank. We're still pretty good there. Okay, so TSM, where is it? I'm going to take it down a wee bit. It's pretty liquid. 210. Perfect. Okay. We have price improved 211, so that's awesome. Okay, next up, which we do have still, is our UVXY. This was I'm very curious to hear what you have to say about this one, because this is what I did. I had a couple, so I closed them, and then I closed half of them, and then I wound up selling out my long call, very similar to what we did here with a one lot. So I have the same thing, and I wound up being like, hey, I don't mind having this in because we've had some wild days. So I went out and I wanted to sell another one.
What you mean, put on another zebra?
Hold on, yeah. So I wanted to put on another zebra, and so I'm getting rid of the one, and I'm putting in another zebra. And we can do a.
You could do a one. You've
That's
got
two
there.
21. So you're only putting an additional $2 into it.
Yeah, you can. Sure, I don't care if you want to keep that going. I completely took off mine on another time. I don't have mine anymore because instead of having these, I just have on bearish triple Qs positions. So instead of having UVXY as a bearish position, I just have bearish triple Qs positions.
Yeah, and I look at this as like an extreme hedge, right? An extreme hedge, meaning like if you get some violent move, that's where this is gonna come in. Other than that, we've saw it. There's days where you could pop up. Like I took it off, and I'm pretty sure it was almost paid for on the day where it popped up, and then you can get out of it.
Right.
So right. I don't mind keeping it in. The only bearish delta we have right now, we are long.
We just have that and the SPY diagonal.
Yeah. So let's guess what our beta weighted delta is. I know what it is, Jenny. What do you think it is?
50.
60. You're very close. Good job. You get a gold star.
So it's only $200, sure. But let's just make a pact that if we make $100 on that trade, we get out of it because we made money on that. There was a day that trade was up quite a bit, and we never took it off.
The problem,
but it was up in the morning, and by the time the show it wasn't up as much. So I almost think, and I know you're trying to make a lot out of this, but I was happy taking $100 to $200 out of mine. And not waiting for something big to happen.
And I agree. That's part of the problem with one lots, right? So I covered the cost of one, being like, no, you got free protection on it because you're taking it. It was $120. I think I took $100 out of one, so I was like, oh, I'll sit on this one. You know what I mean?
But I kind of think with these, you almost need a GTC to get out because it seems like you can take a look at where VIX is now. But we've had so many days where in the morning VIX popped a little bit, and by the show it's down again, or not down, but much lower.
And in my best Tim Knight impression, these are lower highs and lower lows, right? This is trending downward.
Right. There was one day, see that one day pop that we had the trade on that day, and it popped very quickly, and you can see it got up as high as 22, and it closed at 18 that day. So it was a very, very small period of time to get out of it.
And we say that we kind of, and that's what's kind of not, you're right. We should have the pact with this because we can't try to keep those on for anything. But look at this. If you did have it on, you can get out, 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 you can get out. Like there are days when you can make money.
You just have to put in GTC to get out and not wait for the 2-day, 3-day follow-up.
Yeah. So I want to see actually what this costs because I know we had the other one in. So
well, you can just go to the position page. It'll tell you what it's worth.
Oh, I know. This was $3. I just wanted to put it in because we put it in with a closing order. So I'm going to close this for $4.
Yeah, that's all I would do.
That's 50%. That's at 50%. I'm just going to go $4. We put it in for $2.98 and closing it for $4.
And then GTC and just let it go. And if there's a day where the market's opening with really high vol and it's really high, we'll get price improved.
Yeah, right. Okay, so that is the end of our in the money signs, which is great. We got a lot of buying power back. I'm going to pop into Twitter to see if we got to everybody.
Oh, then they are waiting for their connecting flight. And let's see.
No, we saw this one already.
No, it's another one. Look, waiting for connecting flight in Atlanta. And he's got his I'm not happy unless I'm unhappy shirt on.
So I saw this already because it was an hour ago. You must not have been updating.
No, because that's the one that we had pulled up.
I know. I was looking at this before the show. The I'm not happy unless I'm unhappy. So sorry about that.
I just love that he's representing Tasty with his I'm not happy.
He's always representing. He's the best. Yeah. And then we got Frank the Great coming in with our economic calendars, which we appreciate. And that was a couple hours ago. And then Mike, they are in Atlanta. So yeah.
Yep.
And what is this?
Good morning, ladies. Rolling time on SPY. My 606 put expires today. Looking at March 7th or March 21st. His call is at 6:20. So he's rolling the his covered. protection. So right, he's buying a put and selling a call to protect his SPY. So he bought SPY at 600. His call is 620. Put is 606. Let's take a look at that.
And he says it's better to roll a put in a down market or an up market. Up market. Well, it depends.
Yeah, I mean, yeah, you've got a bullish position on. It's better if the market's up, but let's see. He's got the 606, 620 that's expiring today. The collar around his stock, and he bought it at 600. So if he buys his 606 back or sells out his 606 put.
So here's the 620, 606 put. This is fine. You're not in bad shape. You sell out your collar, right? So actually you need to buy this.
He just got to buy that back, but that's
in reverse. And then you'd probably go 14 days?
And he didn't know if he should go to March 7th or March 21st.
I mean, honestly, I like collars a little bit nearer term. And then I would do the same thing where you've got 72 cents you're playing with. So you're getting cash there. Personally, I try to do a zero cost. So I'm going to go to, what about like the 600? 600, 612? You're taking in 87 cents.
And I know then he's capped at 612 and he did have the 620. But this is only 14, and he can move it. He can shift it. If you can move that call up and not take in any credit to give him more profit potential.
That's what I'll do with my collars is shift them with the stock. I mean, that's why I go nearer term instead of farther term, because I don't want to be locked in at 612. But nearer term, you can kind of move it.
Yeah. So then his put is at the price level where he bought SPY, so he's protected at 600 level. And if he wants more profit potential, you don't have to take in a credit. You can move it up.
For sure. You could take this, and if you wanted to be you can buy this one or sell this one. It doesn't really matter. I mean, but I like to look at it as zero cost. But I do, with the zero cost collars, I do move them.
Yeah. Right. You're not thinking like, I've got to keep the same strikes.
Yeah. No, I do kind of shift them with the stock. But that's a great question. So I appreciate that. Thank you very much. Listen, Jenny, forever. And I love the panda. Pandas remind me of your daughter. Doesn't she love pandas?
Oh, well, she did go through a panda phase. We went to the San Diego Zoo to see the pandas.
Yeah.
That was long ago, many years ago.
Yeah, she did go through a panda phase.
And do you remember that if that was on, and I don't know what year this was, but that was on our way to Hawaii. And I just know when I was in Hawaii, the market was down every day, right?
Oh, yeah, it was.
Wasn't the market down every day?
It was Thanksgiving, and the market was down every day.
Whatever it was, I was in Hawaii and the market was down every day. And I did not even.
No. The market was up every day because you were short.
Maybe. Whatever it was going against what we wanted. And all I did was trade and watch the market all day. Didn't even participate in the family activities.
In the waterfalls. Okay, so Punished Pixels comes in 31 minutes ago. Happy Friday. I know the show account is a lot of customer trades and not everything is coming from you. Would you be able to share your yearly returns on the show account? I'm wondering what the figure is that I should target. Our show account right now is doing pretty good. I think we're we're not supposed to share.
Well, I think like legally we can't say a percent because then it could give this all came from the legal team and I don't know why the ins and outs of it. But our show account is doing pretty well percentage wise. But I know it has both. It has what's your assumption viewer trades. It has some of our trades. It has a mix of trades in it. And I sometimes I wish we could all have multiple accounts on the follow page, like my trades on the follow page, your trades on the follow page, not just the show account on the follow page, because our show account is a mishmash of many people's trades. But so are Tom and Tony's. They get lots of viewer trades coming in too.
And so are ours, and I don't necessarily know. I think it's pretty interesting. I like being able to trade with handcuffs, meaning a smaller account in this account, because I think it's a very realistic approach to trading. Our accounts are yours is a lot larger, mine is a lot larger, and so they're not the same. I have a tendency to take bigger swings. So if you looked at mine, it wouldn't make any sense if I'm doing it because my multiples are so much bigger than what you're seeing.
Yeah, but I don't think on the follow page it goes out in multiples, just ratios. Like if it's a ratio like 2 by 1, it goes in the ratio, it doesn't go in the multiple.
that's what I don't think is fair. Is I think that if you're looking at a bigger account, you are taking sometimes it's less products and bigger things. You know what I mean? And bigger multiples, very much like our Jack Tucker friend here, who's 10 by 10 by 10, 3 tranches today.
He went from 8 by 8 by 8 to 9 by 9 by 9 to 10 by 10 by 10. Jack Tucker.
Jack Tucker had 2 tranches yesterday, 3 tranches today. Today is the day you collected $15,000 in premium.
Oh man, Jack Tucker.
I like it, Jack.
Yeah, what's it? 60, 60, 60, 100, 40 points wide. Let's check that. 60, 60, 60, 100.
Okay, SPX.
SPX.
60, 60.
60, 100. It's right in the middle. Jack, 60. Good luck. Fingers crossed.
Wait, 60, 60. That's.
Oh.
No, it's not right in the middle. It's not right in the middle. Hold on.
We're trading 60s. We're trading 60, 78. Wait, you're in the AM. You're in the AM. You got to get into the
where the hell? What the hell is happening?
You're in the AM.
Thank you. That makes me feel so much better because I was like, what the heck? Yeah, 60s. Yeah, Jack Tucker for the win.
Yeah.
I like it.
No joke. Jack Tucker.
But take a look at this, only because it was so confusing for me to look at.
Yeah, because it had the AM was like where this morning's settlement was, and it hasn't adjusted.
No, that's what I'm saying. I was like 60, 60. Why is it 60, 65, 60, 68? Like, what is happening?
And just FYI, Liz, I have no clock here because I don't have my.
We've got about 4 minutes. We actually have 3 minutes because we're going to end on time, so you can go talk to your vet. But I just want to make sure we got to everybody on Twitter. It is 54.
Yeah, right. I had to give my phone. Clarence is in surgery, and the surgeon might call, so I had to give my phone away in case they called.
Yeah. And we did quite a bit today. So here, let's see if we can check your work, Jenny Andrews. Activity.
Oh, I didn't. I still have a few more to do.
I can do them after the show too, so you can go talk to your vet. But here we go. This is today. So here we go. SPX Jajun in within 4 minutes. We closed our MJ. Jenny taught us how to close a very. I'm actually gonna use your little trick today and maybe clean up my account. ADI we wound up taking a loss. Celgene we took a win. Disney we changed it from. What would it be a diagonal to a short put? Snap, we rolled it out in time. Taiwan Semiconductors, we got put the stock and then wound up getting right back in with another put. So we're back with Taiwan Semiconductors and UVXY. We can decide to close it on Monday if we want, but a Band-Aid over a bullet hole, we have a short position in UVXY. You want to know what our beta weighted delta is after that UVXY? Hold on.
It's probably the same because we had UVXY. It probably didn't change.
No, it went up. Now we're at 75. What did we put in?
Well, because you had two long calls in UVXY.
Yeah.
Well, and we sold the put spread in Taiwan Semiconductor, but I got everything out. Every single thing is out on the follow page.
It's Taiwan Semiconductors. Hold on, let me see.
Now, here's a question. Do you want to take $90 out of that SPY diagonal?
Let's take a look-see, shall we? Okay, hold on.
But we are long 70 delta, so that does give us some short delta.
I mean, honestly, we put this so far. I would take $90 if it was a short-term diagonal. We've got, and this is the long game right here, Jenny.
Yeah.
You can, if you want. Hold on, I'm going to cancel this order. Close position. If we want to, we can kind of reestablish.
See how much credit you can get.
You should get about $100, right? So yeah, we should get about $100, and you're taking $100 in risk off the table.
Then you have $100 in risk off.
Yeah, we'll do that. And that we know we can do. You can kind of reestablish and keep following it and take some risk off the table. But that's what you should see. Whatever you're up is what you should be able to get out of it.
Right.
And we did. Okay, Jenny Andrews, good luck with your vet today. Have a wonderful weekend too.
Yeah. What about you? Do you have any basketball games?
No, we blew them out of the water last night, and the playoffs start next week.
Oh my goodness!
I know, can't wait.
Crazy playoffs. Good luck to the boys.
I know it'll be fun. One and done. If they lose one, they're done. So I'm hoping we go all the way. All right, everybody have a wonderful weekend, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you all on Monday. Have a great weekend, everybody.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tastytrade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tastytrade. Make your move, genius. Tastytrade. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Tom, when you're scooping the offer, what are you doing?
That means when you're scooping the offer, you are buying whatever you can get your hands on at the best available price.
What does it mean when something trades by appointment?
Trading by appointment is when like you're in a pit back in the day that had like one or two market makers in it, and if they were having lunch, you had to make an appointment to make a trade with them.
In the pit, if you said, I'm going to buy your book, what did you mean?
If you're going to buy the book, that means you're going to buy everything that is posted in an electronic book. So every resting order that's posted in the book up until a certain amount.
If you say take a fill, what's happening?
If I'm taking a fill, that means I'm a broker, and if I'm a broker, that means I did something horribly wrong because I'm a market maker.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tastytrade. Genius loves company.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man, Mikey Butler, with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day, my favorite hour of the day. I get to spend it with my buddy, Mikey Butler. How are you, sir?
Doing great, doing great. It is a nice little Friday we've got here. We've got, a sell-off in the market, which is rare, but welcomed. Some two-sided action here. Unfortunately, I'm on the other side of every single trade in my portfolio except for Bitcoin. So
that's sometimes how it goes. It's okay.
But I did get bailed out in Celsius. That was a fun little move to the upside. I basically had a worthless call yesterday, and it was in the money when I closed it for a small loss.
I like it. Yeah. Celsius had earnings after the close yesterday. They announced some partnership with another drink maker. Obviously, the move is welcomed for this stock that has done nothing but go down. I also had a position on in there that I closed out this morning for a nice little winner. I think somebody in the chat gave me that trade idea, so I'll give them props for that. Also, a number of other things that I closed out today. I had an NEM strangle. We closed out of that for a couple bucks. We got totally bailed out on HIMS. HIMS having a huge move today. It was down like $12 or $13 at one point today. It's down 14 right now.
we had a leftover long put from a put diagonal spread that we sold. We legged out of the short option by just buying to close it. We were left with that long option, which obviously into a $14 down move is going to be quite fruitful. So I took that one off. On the flip side of that, I had a Carvana position that I also closed out of this morning about this price that was a bigger loss than my win in HIMS, but overall got back a couple $100 on that one. So that was a nice little move there. Carvana is a stock that had a significant rise to the upside, a little bit of a pullback after earnings.
Yeah, a lot of these stocks just went straight up and now they're coming straight back down, which is nice for anyone that took some short delta. But yeah, I'm not surprised at all to see HIMS just collapsing here. It was behaving like a meme stock, and this is how it works.
Yes, very much so. Quick little market update. We've got E-mini S&P 500 futures 6,100 here. We've been chopping around this zone. The low of the day was 60.87, so about 13 handles lower from here. We've had about a 60-ish point range, so one of the more volatile days of the last week or so here to the downside. The NASDAQ is down 150. You got the Dow down 386 and the Russell down 29. The Russell has been by far the weakest of the group all week, really taking it on the chin here. Really hasn't gone anywhere all year. Oil selling off a bit, /CL 71.03 down $1.46. Volatility futures upticking 35 cents. Nothing huge here. 17.30. You got the VIX itself at 16.53. Bonds up 20 ticks, so rates coming down a little bit, which should in theory help the Russell, but it is not today. Gold down $5, silver down 39 cents, a little bit of a bigger move in silver. And then Bitcoin back up to around 100,000. I think we did touch there in the overnight session. The futures are down 185. The spot is up 47, not moving a whole lot there. Some big moves in the market. We were talking about Celsius, obviously had earnings after the close yesterday. XYZ, which is Square, I put on a position there, a little upside crab trade. That one didn't work out. You could see that move to the downside. You also have big moves in Tesla, down 11 and change. Nvidia gave up its strong start to the day. Amazon and Google both getting killed. They are down pretty significantly from the highs. Amazon down $4 and change. Google down the same amount-ish, $3 and change. Some other stocks that are kind of dragging the market. You've got UNH down $45. That's dragging down the Dow. On the flip side, kind of helping the Dow. Apple on the upside. So it's certainly been a little bit of a mixed bag today in terms of movements in some of these stocks.
Yeah, definitely. I see someone in the YouTube chat asking about Wingstop. Wingstop just absolutely hemorrhaging to the downside. They reported earnings a couple days ago, and Hooters, rest in peace, Hooters.
I know, it's really sad. I have fond memories.
Announcing bankruptcy.
Yeah,
so the question is, what are we doing in Wingstop? Absolutely. Yeah, I bet.
They used to be. My dad was mentioning it this morning that he would take me and my friends for my birthday when we were in our mid-teens. So it was quite the experience, and certainly a Tony Batista-esque birthday present. And we would buy the calendars. So we'd buy the Hooters calendars, and we'd all have them up in our bedrooms when calendars were a thing.
Classic.
Yeah, good memories.
Good memories indeed. But yeah, I'm not touching this thing with Tom's money. I would say this is I don't see how you can get long Wingstop if Hooters is going out of business.
Well, there's also it doesn't look like the liquidity is all that good. I mean, you don't have weekly expirations. I mean, the bid-ask spreads don't look terrible, but when you look at like the volume or open interest here, I mean, nobody's really trading this stuff. Even in the February expiration, into earnings, you got a handful of options traded. It's not one that I'm looking to mess around in.
Yeah, I hear you there. But yeah, other than that, I closed the TLT call zebra I had. I had the 88.90 call zebra. Got a nice little pump today, 60 cents or so, and just got out of that for a loss. But I'm not getting back in there. I mean, we're not getting this big rally that we need. And I looked at the FedWatch tool for the implied probabilities of Fed rate cuts or interest rate cuts. For March, 97% chance we stay. For May, 76% chance we stay. June is the first 50-50 rate cut. And I mean, I think you really need to see some rate cuts before you see TLT move in a big way. So I'm done trading it until further notice.
TLT and bonds in general, I've always had difficulty trading, so I usually just stay away. I know we both had that zebra on, and it didn't work, but I agree with you in the fact that it's just not an interesting trade for me. I think there is an interesting trade though, and something that I have been trading a little bit this year. But oil, this move in oil. I know you've traded the micro crude contract. It might be a time to put on a little iron condor. You have a little bit of a pop in volatility here. Looking at like a CL iron condor here, maybe.
Yeah, sure. I'm just going to buy the straight up contract into this move. I've just been buying the contract when it gets around 70 and just holding it, seeing if we get a pop. So I just got filled at 70.94 into this move.
There you go. Yeah, I was thinking about playing this kind of range that we've been in from 69-ish up to 76-ish. So looking at like a slightly long leaning iron condor, or maybe even like a 1.5 point wide put spread to a 1 point wide call spread, something along those lines.
Yeah. Sure thing. Yeah, I think you can do a lot of different stuff in here with the two-sided action. But yeah, I've had success with the micro crude just straight up, so I'm just going to stick to that personally.
Yeah, I'm going to do this. I'm going to do the 68, 66.5 on the downside, which is like right around where we were looking at for the lowish. There we go. And then the 76, 77 on the upside. So a little bit of extra risk on the downside, a little bit of long delta on this trade.
Yeah.
It's a little
Definitely.
something.
I like it. Yeah. Celsius volume is mad today. That's for sure. Yeah, good earnings. Finally seeing a boost here. Hopefully James, our buddy James, is still in this stock hand over fist. But yeah, they had, let's see. They basically were expected to post a scratch on EPS, which they did. But they bought Alani Nu, so that kind of like Hawaiian looking can. They gobbled them up. So I think the market is reacting to that more than their actual balance sheet. So yeah, we'll see if they can capitalize on that.
Very nice.
It's got a long way to go to get back to 60-ish from last year. But yeah, crazy world we're in right now.
Yes.
You want to join us?
I was going to give you two. One of the biggest movers to the downside in the S&P 100 is FedEx.
Ooh. Wow.
I don't know if did they have earnings yesterday? No, I don't think so. They have earnings on the 20th of March, but you're back to, lows in one of your favorite stocks. I know you're until proven otherwise. And so I figure this would be like an until proven otherwise type chart for you.
Yeah. Apparently some insiders sold 3 million of shares.
Okay.
But delay, I don't know. The news is the news, but yeah, they did. This is a non-earnings move, so pretty big move, but pretty big rebound from the lows. Let's see. This is the options are pretty cheap here. Actually, I was expecting some more craziness. Yeah, I can bite on this.
I'm just trying to throw things your way, Mikey.
I
look at Walmart too. Walmart.
Yeah.
2 down days, down like 10% from highs here.
Yeah. 250, 265.
I'm gonna buy a little dip in Walmart. Small.
I'm gonna buy the dip in FedEx.
There you go.
250. I'm gonna buy the 250 call in April, sell the 21 day 265 for $1,200. And then if we don't recover, I'll roll into the earnings cycle, which is the March 21st monthly. And that will allow me to pick up a lot more premium. The 270 call in the earnings cycle is trading for 4 times the amount as the 265 1 week prior. So this $12 debit, we can reduce that significantly rolling into the earnings cycle if we don't get the reversal. But I was just filled at 1230.
Very nice.
Buy a little dippy do.
Why not?
And I'm already in Walmart. I'm long Walmart, short Baba. So that's where I'm at right now.
The China stocks are going nuts today. Baba up $8 and change. You had PDD up 6 or 7. There you go. Baidu even catching a little bit of a bid. I know JD's been very strong as well, but yes, the China stocks have been on a tear.
Yeah. Please roast my diagonal. Sure, Andrew. Yesterday, an SLV bought the April 31 put and sold the March 28 put. What should I be targeting for cost basis reduction? So April 31, March 28.
So you're in some goofy expirations.
Well, the April monthly. April monthly, March monthly, 31.28.
Okay, I thought you were saying the dates.
Yeah.
31.28.
Yeah.
All right,
so SLV,
you gotta be making some money today.
Yeah, probably. This one, like diagonals in a 27% IV stock, are just gonna be really tough. Like even the at the money premium in SLV is only 60 cents. Which is why typically if we're playing a directional move in SLV or like TLT, same story, we'll just do the zebra instead of a diagonal. So in April, buying the 31 twice, selling the 30 once, puts you into a $250 debit with no downside in terms of profit potential, and you're putting up 29 cents of extrinsic value. So I would rather be in the zebra in something like SLV than a diagonal where you're only picking up 20 cents.
Agreed. I already am in it at worse prices, so I am short silver as well here. But I don't think that setup's too bad. I mean, when you got the one thing I would keep in mind when you're trading any sort of diagonal is making sure that it's worth the time to sell the short option. Like if you're just selling a short option to make it a diagonal, that's not what you should be doing. And so looking at like a 19-cent put, it's kind of a cheap option for me to have. And this goes to what Mikey was saying of like, maybe just do the zebra or buy the in the money put as a synthetic short stock position, a little bit further in the money. Just to piggyback off what Mike was saying.
Yeah. Super low IV products like this.
Yeah.
There's not much premium to sell.
Yeah.
All right, moving on. I think it's time to do a flight to quality, sell everything, go long Palantir.
We did get long Palantir yesterday into a nice move. Somebody, was it Dronin that gave us that trade? I think it was, and he wanted us to
I think so.
to turn it into a crab trade, which I was trying to do this morning when the stock was up, $1 or $2. I think we got the high of the day was 109, so it was $5 from here. So it was up, $3 or $4 this morning. We had this call diagonal from yesterday, long the 110, short the 120, and I think this was like a $200-ish profit this morning. It's only an 80-cent profit this morning, or at this point. But I was looking to sell the 225, 235, and I was looking at it at like $2 at the time, or I wanted to get filled at $2. Let's see what I think I put the orders in. Let's see. Oh no, I never put the order in. I was looking for it to be about $2, and we never got to that point, so I didn't get filled. So, but I have long delta there, and if you don't have long delta, Mikey, you could do that. I give it the blessing.
I think I'm gonna wait for a little bigger sell-off here. I mean,
$30
what's the difference between
sell-off from the
Palantir?
highs?
Yeah. What's the difference between the Palantir chart and HIMS, other than double the implied volatility in HIMS? But yeah,
that's fair.
I'm gonna wait. I just bought the dip in a pretty big way in FedEx, so let's see if we can get some more opportunities here. But yeah, I like the idea. SPY put diagonal trade from Wednesday, took $100 out of it today. Nice.
Very
Did you do
nice. I still have this on. I don't think I'm quite at $100. You probably had either a better entry or a little bit different strikes. I'm up about 80 cents on this. I'm long the 605 put in April, and then in March I sold the 590 against it. So I did this when we were let's see where we were. I can do the market snapshot. So I did this when we were trading at about 610. So we're we've come down 5 points from the highs, which is good, but you got a lot of time left until expiration. 28 days until that short option. So I'm gonna leave it on. It's a slight hedge. I mean, I am leaning long, so I'm okay with having a slight short delta play here with SPY. It's about 20 short deltas, and it has some positive gamma. So if we keep going down, it'll actually hedge me more than what it's hedging me right now.
There you go. And if you want to join us and pop in some questions, head over
Trade
to Tasty
ideas
Live.
too.
Yeah, head over to Tasty Live YouTube channel. You'll see this video as the live feed, and you can join us. Got the Cherry Picks newsletter link pinned at the top of the chat. Get it while it's hot.
Yes.
All right. Tony had a broke wing butterfly and was wondering how to convert it into a free butterfly. In what stock? Either way, if you have a broke wing butterfly and you collected $400 for it 81 days ago, what you need to do is, if you've got the 109 put, short 2 of the 114s, and then long 1 of the 115s.
Do we know the stock?
No. A free butterfly in this case would be moving the 109 put up to the 113 put. You basically want to create a symmetrical butterfly, and the debit you pay to move the 109 put up to the 113 has to be less than $422. So that's the math behind creating a free butterfly.
Yes.
Buffalo Joe's up by Northwestern is the only place to get wings in Chicago. I've never been there.
It's great wings. That's in my stomping grounds. That's my hood. That's New Trier Township. I mean, that's,
there you go.
Well, it's in Evanston, so not exactly, but that
Close.
is a place that I have frequented many times. We actually had them at the Super Bowl party that I was at. We brought in a whole tray of the wings. They're great. They're great. They're little and super crispy. So they're just great. I mean, and they give you like 100 of them when you get an order there.
Yeah.
It's great. And they use Merck's cheddar cheese for the cheese fries. So that's also a massive win.
Sounds like a glorious
great,
spot.
Great spot. Really is. And the best thing on the fountain, they have RC Cola.
Wow. A rarity.
Which still brings like a little bit of nostalgia back.
Yeah. What a time. What a time.
Yes.
How would you play a naked strangle in SMCI at the 58 strike in March?
Oof.
Straddle.
SMCI has a lot going on. I know that they have, so you got the 58 straddle. I'm sure this has blown up a little bit just because volatility has exploded here. You've obviously had a big move to the upside. They do have two catalysts coming up. So you have the issue with the delisting through the NASDAQ, which is part of the resubmitting of their financial reporting of some sort. And I don't know the exact date that both these things happen. I want to say the 25th, which is like middle of next week, but I'm not 100% sure. So that is certainly part of why you're seeing volatility expand here. And I'm sure part of this move higher is speculation in that sense too. In terms of managing this position, it's a tough one. It's just so expensive to even buy the wings here. Because if you're short you've got a almost $20 straddle in terms of the value. Buying these wings, it's going to cost you $2 or $3. If you go to the 38, and then on the upside would be like the 78, it's going to cost you $500 just to cap the risk here. So it's a really tough situation. If you want to reduce your overall exposure, you could probably roll this out and just widen out, turn it back into a strangle. So do something like, the 50, 80, or 50, 75. I mean, you're going to pay some sort of premium to do this just because volatility is just through the roof.
Yeah. I mean, $18 credit for a $50 stock seems like a big range, but there's a reason you're getting that much premium. It's got to be really small on here if you're doing something like this.
Yeah, gotta be careful.
Ton Zebra works for FedEx. Can't speak, can't trade it. Blink twice if I made the right. If buying the dip is the right thing. Blink twice.
Yes.
Raider, appreciate your support. Dronin says, I missed on February 11th the Dronin special on Wingstop, the bearish broke wing butterfly.
Oh yeah, I remember when
250.
Yeah, I remember when we were talking about that.
Yeah, I guess I missed it, but yeah, we're not going to trade anything that doesn't have a weekly expiration because it tells you that the liquidity is not strong enough to make weekly expirations, which means you're just going to have bid-ask problems the whole way. Maybe not getting in, but probably getting out.
Yeah.
Oh, the broken butterfly is in ZB.
In bonds?
ZB. Yeah. March 21st. 28 days out. So yeah, you have to sell out of the 109 and buy the 113. So that currently is a $375 debit, which means that if you'd made that move, then you would keep $100 or $50. You have a 1 point wide free butterfly for a $50 credit.
Yep.
Should we short some natural gas today? Maybe a call spread? I am already short. I have a long put spread, long the 3.6, 3.5 vertical spread in March that I'm down significantly in. But yeah, the cold snap is about to be over in Chicago, in theory, next week. But
yeah, it was
we'll
funny
see.
because I had an email about Boyle, which is one of the ETFs. I forget one of the leverage ones. I think it's 2x. Yes, 2x. This would be an interesting time to look at being short in this.
Yeah. Yeah, at these significant highs.
Yeah.
But yeah, I mean, I got to stick with my trade here. 33 days left. It's definitely it would be profitable if we get a move down. So
yeah,
we'll see what happens. We'll see what happens.
Just expensive.
Yeah.
Do like what about just like a put spread? Just an at the money long put spread.
Mm-hmm.
They're still kind of expensive too into next week. The 90. I was looking at the 90.85, but it's $6 if you do get that big down move, because this will move 2 times the percentage move in natty gas. So natty gas, or should, there is some drag and drift to this as well, depending on what the forward curve is. If we look at natty gas, so there is some contango here, which is dragging it. That's why it's not down a full 8-9%. But the diagonal, I don't know if I love this. I guess I can move it to like there's not a ton of liquidity here as well. I was looking at this. Do I want to put $700 on this? Doing like the 90-80?
Yeah.
What do you think?
Why
Say
not?
go for it?
What do you have to lose?
Money?
Yeah, I don't mind it at all.
I can't even. Closing only.
Well, either way, shorting natty gas right now, significantly better situation than before.
Yes. I have that
natty
on
gas.
Well.
Smack Lovin aggressively adding shares in NU into the dip. Do you see any opportunity in a poor man's covered call using leaps, like the $10 call in Jan of 2027?
Sure. It's a cheap way to get some leverage here. I don't think it does. It have a dividend? No dividend here. So yeah, versus buying the stock, you're obviously paying a little bit of extrinsic value, $100, but if you're buying the stock in a margin account, it's going to use about $500. So you're using significantly less. It is a tough one to trade. I imagine the short-term premium is just about nothing.
Yeah. I would just buy the call. If you're buying a 2027 call, there's no reason to sell premium against it. If you're hit on the short side of the call, you're gonna wish you didn't sell it. So, because there's just no premium here. If this was a product where there was a lot of call skew in a higher IV environment, then yeah, I would sell premium. But with 693 days to go, that is a lot of time for your theory to play out. And having a short call on for 30 cents is not the way to do it.
If you're going that far, you might as well buy the stock, I would say.
Yeah.
Just because it's $500 in a margin account to buy the stock versus the $390 you'll pay in the 10 strike. I thought they were going out to January of 2026. If you went out to that January, I could see, giving up, to use only $250, $60 versus the $500 is a little bit more, doable.
Yeah. Stuck in a lot of long diagonals, Amazon, Google, PayPal. What's a good negative delta play? Well, those all three of those, I would say the NASDAQ is what I would go with. But SPY too. NASDAQ has a little more beef to it in terms of directional move. But Yeah, SPY or Qs is where we would go if you're looking to hedge continued downside moves.
Mm-hmm.
Poor man's covered call on Hood.
Oh yes, this stock has given up the whole earnings move.
The whole kit and caboodle.
Got up to like 66, 67-ish. I think the high was 66.91, so it's off about 20%.
Mm-hmm.
Don't mind that thought. And it had earnings, so that's not an issue right now. So we want to do a poor man's covered call.
Yes. Poor man's covered call. No suggestions on strikes.
So generally speaking, somewhere between a 70 and 90 delta. I would just go to this 40 strike call. I went to May's because you want to go somewhere between 60 and 90 days typically, or it depends on how long you want to be. You want to be, exposed to the stock position, which that option is, and then somewhere in the March expiration, or if you want to go to April, selling about a 20 or 30 delta option. You want to have like 50, 60 long deltas net on the position. You could sell like the 65, put you at about 60 long deltas. Your break even price is basically where the stock is trading at. So 14 or the 40 strike call plus the $14 and change debit puts your break even at 54. The stock's trading right at 54, and you have some extra, potential rolls baked in there because you could roll to the weeklies and whatnot throughout. So if you want to be long the stock, that's how I would set it up. I think this might be an interesting one for just like a call diagonal spread for me, just to put a little smaller of a position on.
Mm-hmm.
Do something like because volatility has not really moved here into this move. Do like the 55.60 for $3, April, March. And it's a cheap way to get 20 deltas.
Yeah. I like it. I like it.
313.
Beautiful. I realized this would not be tasty mechanics, but selling in the money call spreads on the high call skew names. Is there any specific delta or pop or P50 that would make sense, or is just not?
Do we like
in the money call
like
spreads? Yeah. So selling an in the money call spread is the same as buying an out of the money put spread.
Mm-hmm.
So that's what we would do. You're going to have way better markets just buying the out of the money put spread. Unless you're talking about out of the money call spreads.
Yeah.
Selling out of the money call spreads above the stock price is different. But yeah, it's really just a matter of where you want your risk to be and how much you're willing to put up or risk. So there's no right or wrong answer. I would say it's going to be tough to collect a lot when you're selling on the call skewed side because you're buying an expensive call to define your risk.
Yeah.
But if you're selling in the money call spread to the downside, we would just buy the put spread. You're going to get better markets. It's the same trade.
And you have to keep in mind with the risk profile is the exact same. So if you're selling an in the money call spread that's 10 points wide and you're selling it for $7, you would buy the out of the money put spread for $3. So it's the same value, risk and reward on both those positions. The biggest problem with selling in the money spreads in general is there's two problems. One, you have these wide bid ask spreads, and just looking at HIMS, I can show you here, here, if you did the short 40-45 call spread here, these markets are 20-30 cents wide. On the put side, they're 10 cents wide. And so this isn't as bad as it could be when you get into, further in the money options, like when you're looking at the 30-35, this spread is $1 wide. On the put side, if you were just to buy this put spread, this is 20 cents wide. So there is some slippage that you'll likely give up. And you can even see it like in this 35 strike call that you'd be buying, that's $2 or $3 wide. So that's a huge issue within the money short spreads and selling them in the money versus buying the out of the money put spread. The other issue is the assignment risk, and especially in something that has some sort of borrow fee. So I don't think HIMS is a hard to borrow stock, but we can see it's not hard to borrow. But if you are trading that's something that is hard to borrow and you sell an in the money call spread, even though it's a spread, you can get assigned on that short option and you'll pay the carry cost of whatever that trade is. And when we were looking at the GME times and some of those other stocks, some of those borrow rates can be over 100% on a yearly time frame, and you get charged the per day value of whatever that is. So, that can be a substantial sum of money, especially if something squeezes or, you have to hold it over the weekend. That's a lot of times when you do get assigned because the weekend counts Friday, Saturday, Sunday as your carry time. So there's, it's not just like market days, it's physical days or that's a bad adjective, but actual days. So that's another problem with selling in the money spreads and why we don't do it.
Yeah.
Long-winded.
Yeah. I work with a 7-figure account and I'm thinking to run naked SPX puts so far out of the money to collect nice premiums on the 30-day. Is it a good idea? It is a high probability trade. I like the idea of selling a put in SPX. Mm-hmm. I really like the idea of not levering up and just, if you have $1 million, you can sell 2 puts and you don't have to worry about any kind of volatility because you can afford the buying power increase. You can afford the volatility. If the market's down 30-40%, you're not going to be in a margin call because you're basically cash secured. So just sizing it, if your idea is to just sell puts forever, your size has to be able to absorb a 40% sell-off in the market or more. So because eventually you will run into that. So I love the idea, but just make sure your size is correct. It's not going to be a sexy trade, but over time it has proven to be a very high probability trade because the E-minis have always recovered from crashes historically. So if that keeps going, it'll be a nice trade.
Yes, and you could certainly look at the E-mini futures as well if you want a little bit extra leverage. I think 2 contracts, I get it. I think you could size that up a little bit if you wanted to, but just don't be the whole point. And we've talked about this multiple times in terms of span margin and even SPX that has standard, margin. It isn't extra leverage. These things take into account volatility. Volatility is one of the main factors in what goes into the buying power calculation and the risk parameters. And so changes in implied volatility, even if the market isn't at your strike, can greatly increase the amount of capital you have to put up in risk for the position. You got to remember, the brokerage can go as far as cash securing it. And that is, that is within the margin is not like a given. It can be, cash secured. So you have to keep in mind that, size, you never know how big a small position can get until something happens. And so, if you're trading ES futures, ES puts, or SPX puts, just keep in mind of the size always. Yes.
Ryan has a 42-figure account. He's thinking of buying the NYSE. Is this a good idea? Seems like it. Options trading's up. Stock trading's up. Futures trading's up. Why not? Let's see. What do you think of an Amazon for a broken wing butterfly with no risk to the upside?
So like a put broken wing butterfly?
Yep. Looks like it.
Yeah, I don't mind it. I have an upside play already here. Crab trade. I think I'm out about $100 on this move. $300 on this move. This is a big move. $5. I was looking at this earlier today when we were trading at like 220. But yeah, I had broke wing butterfly here. If I was going to do one, I'd probably go in March. Just because when you're trading a standard broken wing butterfly, and any butterfly really, they're slow moving trades, and you really have to hold these up until around expiration. So maybe something like the 210, 205, 295. If you wanted to get a little bit extra credit, you could do like the 215, 210, 200. I mean, widening out the spreads is always something you can do depending on what your risk tolerance is. But yeah, I have long delta here, so I'm ready to rock.
Yeah. A 5x10, you're going to pick up like 10, 15 cents, but you're really playing for a move down towards your spread.
Yeah.
With that kind of setup. What are we doing in Roku?
I think somebody gave me a trade in there that I closed out of the other day.
Yeah, I don't have anything.
Yeah, I closed out of this, I think maybe yesterday. Are the days blending together? 2 days ago. Or do I still have this on? No. Did I not post this?
I don't have anything in Roku.
I did close this.
I had a 190 put diagonal that I closed for 75-cent profit.
Yeah, I closed this for 421, so I took 90 cents out of this. Did I not? Oh, this is my close. Yeah. Yeah, I closed this 2 days ago. I wish I still had this on because it's probably another $1.
Yeah. But yeah, this would be a close, I would
463.
say.
Yeah.
You've had 5 red days in a row. You're right. You're right there. That's your best case scenario.
Yeah. It's a great trade.
You guys are silly geese in this chat. NASDAQ is like a fire sale. Yeah. Pretty wild.
There's some big moves underneath the surface.
Yeah.
Tesla, CrowdStrike down $17. MicroStrategy, your favorite, almost 300.
Ooh.
AVGO, one of the chippies. What's SMH doing? SMH down $4 and change.
MicroStrategy is just coiling. This is very low implied volatility in MicroStrategy, which is now just strategy, I believe.
Yes. Nothing micro about it. It's macro.
No. But yeah, we're knee deep in IBIT. Love the position we're in here. But yeah, we'll see if we get a little pop here in the big. Johnny, watching whiteboards from 9 years ago, back in the day. Appreciate your support. Should I continue watching? Is there a more updated relevant series of yours that I should keep in mind? Not a series, I would say, but there is a free beginner options course if that's what you're looking for on tastylive.com. There's also, I would also say, if you go through that course, that's more updated information and graphics, but all the old whiteboard stuff is evergreen, so it's still relevant. I would say as you're going through, just like jot down on a piece of paper concepts and strategies you want to learn more about, and then just search for them on Tasty Live, because we have endless content and you'll get the newest, most popular content for specific things you're searching for, like iron condor setups or strangle stuff. So
yeah,
just depends on what you're looking for specifically.
I will go out on a limb and say I think that as a network we've covered everything at least once.
Yeah.
I don't know if there's something that we've missed. We even had the show with Sahil the other day on the second order Greeks, which is something we don't talk a ton about. But even if you want to learn about those, that was a really good segment with Tom and Tony and Sahil, aka Baby Shark, aka now Jaws.
Jaws.
Yeah.
I like it.
Yeah.
I like it. Can you tell us the difference between a broke-wing butterfly, a wide broke-wing butterfly, and a normal broke-wing butterfly? So normal is just doubling the width of the debit side. So if you have a 5-point wide debit side on like a put broke-wing butterfly, we're going to sell a 10-point wide put credit spread against that to create a credit if we can do it. A wide broken butterfly might be a 15-point wide or a 20-point wide credit spread. So you're taking on more risk to force a bigger credit up front, but it's not a risk one to make one. If you have a 5x10 or a 10x20, it's a risk one to make one situation where your max profit's $500, your max loss is $500, or around there.
Mm-hmm.
That's pretty much it. And then just thinking of like what would be a wide broke-wing butterfly relative to a narrow broke-wing butterfly, that has to do with the stock price. So if you're looking at $100 stock price, a 10x20 is pretty wide. A 1x2 is very narrow. So ideally, we're giving ourselves a decent amount of space to where we can have a profit range, and then we're collecting a small credit. Shouldn't we see a higher VIX with the market today? That's been the question for the last couple of weeks here.
I mean, yes and no. It's sort of a existential question because volatility is a reflection of SPX prices and fear and speculation and all that stuff. So by saying that, what you're saying is like, oh, this is just a nothing burger and nobody really cares, which is what the market looks like. And the second part of the question is, is this a big move? And relative to the VIX, it's really not. The VIX at 16, 17, 18 reflects a 1% expected move in either direction on a day-to-day basis. That's what the number spits out in terms of like the risk. And so, having a 1% move is what you should expect with the VIX like this. So I think because it's to the downside, people get caught up in that being the mover of VIX, which it typically is, but this is not this isn't a realized volatility moment. This is realized volatility is right at implied. This isn't like a tail type, volatility event. It's just a down day, at least right now, to what the market is pricing.
Yeah. If we got a 60-point sell-off when the E-minis were a $3,000 product, that's different. That's the same as a 120-point sell-off today. So it feels like a big sell-off, but it's really not when you look at the notional value of the product.
Yeah. But you are getting a little bit of a bit involved here. We're getting there. 1765. We're at the highs of the day, up 4%. So there's a little bit of unease.
Yeah. What you need to see is continuation to the downside and an increased volatility to the downside. So today you get a 60-point sell-off. Monday you get a 100-point sell-off. Tuesday you get a 150-point sell-off. Now you're going to see volatility react. But what we're seeing now where it's like down 60 and then Monday we're up 40. It's like the chop is just expected if it's, within 1%. Google getting hammered.
Yeah.
But Apple is
all
up
the big
250.
boys.
Yeah, Apple I think is going to be the one that's moving against the pack, probably because of the Baba partnership. The thing that dragged Apple down was their lack of competitiveness in the Chinese market, and now they're pairing up with Baba to try and change that. And you can see the chart of Baba reacting very positively. Apple, the same thing. So, yeah, while this move is kind of concentrated to U.S. names, I would say Apple is an exception today, and I would say it's likely tied to BABA.
Mm-hmm.
Couple minutes left here. Rapid fire. If you have a diagonal spread on and they go against you, at what point do you buy back the short call and lean long, or do you just close it? If it loses basically all of its value, we'll just close it and then lean long with the call, or we'll convert it to a calendar spread if you can get some premium to do so. But that's pretty much it.
Yeah, you want to you don't want to cap your upside for pennies on the dollar. So once you've realized the value, there's no point in keeping it on.
Yeah, I have a 225, 235 call diagonal spread on Amazon. The short call I sold for $300. It's trading for $120. So I've made more than 50% on it, but I'm still going to keep that on because $120 is not nothing. And even if we rally back up to 235, it's not going to matter because it'll be a profitable trade. So if that short call was down to like 40 cents or 30 cents and I had made 90% of its value, I would just close it and just lean long with the call. So that's kind of the threshold, I would say. Are there videos that go with the beginner futures course? There should be videos. I don't know. Maybe there's
no. I think that was when we did the rebranding and we had all sorts of. I think those need to be redone.
Futures for rookies.
Oh yeah, that's with Katie and Pete. That's still around.
Yeah. Yeah. Futures for rookies. I will put a link in the YouTube chat to that one.
Mm-hmm.
Do you think old VIX estimations are accurate as looking at the implied range or 0-day options? So what's the 0-day again? There's a 0-day VIX.
Yeah, there's multiple of them. It's VIX 1D is it's the 0 and 1 day expiration. So it's today and Monday's option prices. There's also, I think there's a VIX 7-day, or maybe it's a 6-day.
Something like that.
Something like that. Or 1M. There's multiple of them if you look them up. They have the VIX 1 year. Okay, that's the another one. I think it might be 6M. Anyway, the VIX 1D is the 0 and 1 day VIX style calculation for implied volatility on the SPX.
There you go. Last one real quick. How do you get an idea of direction and velocity using VIX or VIX futures? We look at every single VIX futures contract, look at the contango or backwardation curve. Right now we're in contango and volatility is really not moving even in this move today, which is why we're kind of writing it off. But if we see continuation and we see that contango flatten out, even going to backwardation, if we go into backwardation, we will already have a 500-point sell-off in the market and we will have 100-point days in either direction. So that's kind of what we're looking at.
You can't you also don't know whether we're going up or down. I mean, you can't tell the direction. If we knew that, I wouldn't be on this show. I'd be on a beach somewhere, which maybe I'll do soon.
Ooh, there you go. That's it. We're out of time. Thanks for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick is at Trader Nicky Bat. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned, and we will see you same time, same place, 11 a.m. Central on Monday. Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move. Get a bonus of up to $4,000 when you open and fund a Tastytrade account. Make your move, genius. Tastytrade.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Got the need for speed? No problem! At Tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tastytrade, make your move.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tastylive.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tastytrade. The answer is here at Tastytrade. Yes, and how many days to expiration is best? And do I have the right choice?
We are back. It is still Friday, February 21st, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's back in the saddle, and boy, what a good day for resident bear Ilya Spivak to return. Happy OPEX Friday, Ilya.
Thank you, sir. What a day. It's good to be back today of all days.
It's good that my only significant equity long right now is ES, but we do have a move in the NASDAQ to a level that we've been eyeing this week because it is a week of February OPEX. Josh, we can go right to the slides because we have much ground to cover here on this Friday. OPEX seasonality equals Friday selling, perhaps. On Tuesday's overtime show, when it was just myself, no Ilya or Radigan, we went through a bunch of charts, particularly those that were pertaining to seasonality in the second half of February, where if you were long, you kind of have to be aware of what you're going to be getting yourself into. But moreover, could there be an opportunity amidst some of this weakness, technically speaking, to look at a new long delta opportunity in the NASDAQ near the 1 month moving average, a level that we've returned to today? So while this is a bad day, and we've had a number of headlines from UNH and an investigation from the DOJ, and of course, more tariff talk and talk about Ukraine, Russia. Ultimately, $2.7 trillion of options expired today. And it looks like this is an excuse for the market to get unglued a little bit here. But Ilya, the data haven't been good either. There were revisions to inflation expectations. We had PMI surveys that came out. Walmart and Amazon are now down 10% from their highs earlier this year, which, as America's two largest retailers, should probably be a red flag. Ilya, let's get into it. You probably have some things on your mind after we look at today's data. So before we go to the spotlight, talk to me about those PMIs and those inflation expectations.
I mean, the idea that this is OPEX is, to me, the excuse. If people want to come out there and say, oh, this is OPEX, maybe today that's what we're going to talk about in some of the headlines somewhere. I don't care. Here's why I don't care. Because for those of us that operate in a 45-day span, those kinds of things don't much matter. They're not going to make or break a position. If I'm looking at 45 days to expiry type of positions, and I go to the most classic Tasty methodology, if that's what I want to do. I don't always abide by it, to say the least. I'm a directional kind of macro heathen when I trade. But let's say you even lived in a Tasty kind of world in a pure way, and you were looking at about 20 days in a position, from about 45 days to expiry to about 2021. OPEX wouldn't matter. It wouldn't matter because it's a one-day event. It's a one-off. What we're watching here is not that. And the economic data very clearly shows it. We just saw that the service sector in the United States, the only part of the global economy that had been growing for nearly 2 years, had its first month of contraction. The first one in 25 months. Overall, U.S. economic activity growth slowed for a second month dramatically to the weakest in 17 months. The only bright spot was manufacturing, and there it was front-running of tariffs. Costs surged across the board, in fact, because of those tariffs expectations. And when you look at where the manufacturing bump came from, never mind that manufacturing is, of course, a much smaller part of the economy, which is how we end up with such weakness, even though manufacturing bumped up a little. Even that bump, temporary. Because once the front running of the tariffs runs its course, that's it. Manufacturing sector is back into a slump. The internals of the service sector side, meanwhile, are atrocious. Weaker on everything that matters. On orders, on activity, you name it. These are very bad numbers for a second consecutive month. Give me a third, and we're in a very dismal trend.
Ilya, that trend is actually something that Chris Williamson, the chief economist at S&P Global, pointed out. Optimism about the year ahead has slumped from the near 3-year high seen at the turn of the year to one of the gloomiest since the pandemic. Companies report widespread concerns about the impact of federal government policies, ranging from spending cuts to tariffs and geopolitical developments. Sales are reportedly being hit by the uncertainty caused by the changing political landscape, and prices are rising. Prices are rising amid tariff-related price hikes from suppliers.
And of course,
Prices are
what did we
rising
hear from
from
Walmart
tariffs.
this week? What did we see from retail sales numbers last week? We're watching the unraveling of the only pillar of global growth that was working for the past 2 years. Remember, it's the U.S. service sector where growth is. There is no growth elsewhere. China is stalled. The Eurozone is stalled. Most global economies depend on either the U.S., China, or the Eurozone to buy their stuff. That's where demand lives. It's 58% of the global economy, and the other 42% is dependent on that demand. So you look at this thing and you go, okay, if the U.S. service sector was the only thing that was growing going back 2 years now, and all you've got left now is not that, what exactly is growing? Nothing? That smells like global recession to me.
I've seen some arguments in financial media the past day or two that perhaps the reason why China is making such significant advances in AI is because of their deflation, which is a unique argument.
That is capital C cute.
So let's talk about the calendar next week. You mentioned that we're looking at potential stalling U.S. growth. Services PMI down below 50. Excuse me. Down below 50. Thank you.
Scary news, I know.
But it is interesting because for those that don't follow the PMIs, we were seeing PMIs staying above 50 previously, and we do this probably once a month. I'm sure you explained it.
Last year they were at tremendously hot numbers. The S&P global PMIs have been tracking the economy with very good precision since the rate hike cycle ended in 2022, early 2023. They've been spot on.
Yeah, the PMIs have started becoming more reliable because right around COVID for a year or two after, they were kind of like,
and the ISM are still a little fuzzy, but the S&P global ones are getting very, very clean.
You know, we talk about this market kind of similar to what we've seen for the past month in a sense, like Tuesday, Wednesday, Thursday. Those are the good days of the week. Monday and Friday have been bad. We shared a chart from Mike Siccardi. I think it came via Bank of America a few days ago, where if you look at the annualized return of the S&P 500 by day of the week this year so far, Monday is somewhere in the neighborhood of like minus 34% annualized, and Friday is somewhere like minus 46% annualized. But Wednesday, if you're only long on Wednesdays this year and you don't trade any other day of the week from any other side, you're up like 96% year to date so far. So like there's this kind of weird rhythm right now where it's deleverage early in the week, lever up through the middle of the week, and then sell off on Friday. Maybe OPEX is contributing to that, maybe not, but the data haven't helped. Will we get any data in the next few days to help change that course? Ilya, one thing that you may not have noticed in recent sessions because you weren't, you were on vacation, Fed officials have not had any impact whatsoever when they speak on market prices. You know, outside of Powell, no one else is even causing bond stocks anything to lift. So forget the speeches that are next week, right? Unless Powell comes out and says something obtuse, you're really looking again still to the White House and then the limited data flow that we have globally. The end of February has 6 events that are considered high rated on the IG calendar. 6. They all fall between Thursday and Friday. So the first half of next week, you know, we talk about no Fed decision coming up. We talk about Fed speakers that are clearly not leaving any imprint on any asset whatsoever. The bond auction calendar is fairly light. 2's the short end of the curve. So if you're trading ZT or ZF, I suppose you have something to pay attention to. But otherwise, you know, for us, we only focus on ZN and ZB here. Early next week, you know, I guess the question is, are we going to see more of the same? Because as we shared on Tuesday, coming from friend of the show, Ryan Detrick over at Carson Research, the second half of February, it doesn't matter if you look back 10 years, 20 years, going back to 1950, the second half of February tends to stink. And so we're seeing whatever unpinning with the options expiration today on top of the bad data. And then you throw in the bad seasonal backdrop. And no wonder, Ilya, when we turn our attention to the stock market here, where do we see the S&P 500? Just sitting at its session lows, 60.55 now. Wow, that's an ugly looking chart. That certainly upends the best laid plans of mice and men, bringing us back to levels we had seen last week. But Ilya, we did advance to a new high this week in SPX and in SPY on a closing basis. We're now backing away from them.
Though? that mid-December top, it still holds.
Yeah, in the futures, right?
I rolled my put verticals today because essentially, if you're short at the top of that range, has anything changed? No, right? Also, I feel that, we just closed that. We had new daily closing highs this week. So this pullback consistent with what some of the seasonality suggests. Yes.
I'm interested in the NASDAQ here because all week long we've been saying
failure.
It is a failure and it could be an outside engulfing bar, but sticking with the strategy outlined in the last few days, if there were to be a pullback and were it could get down to the 1 month moving average, would I be interested in taking a look there? And my answer is yes, I would be. Now, the question is, how is volatility playing out? Tony frequently speaks of trading what's in front of you. And, yesterday when we were looking at the market breaking down midday, when Nick was joining us on Futures Power Hour, he and I were both saying vol really isn't going anywhere, right? S&P was down 0.5%, but vol was up 10 cents. That didn't seem to make a lot of sense if it was a really big flush. Sure. And sure enough, stocks rebounded the rest of the day. You can't point to that today, though.
No.
Because if you look at VIX futures here, right, this is a pretty sizable move. We're up 95 cents right now, up at 1790 in VXH5. And we go over to the VIX itself.
If you close like this, by the way,
$2.
If you close like this, by the way, obviously we've seen some really long wicks, as you just showed in the futures. So we've had bigger intraday spikes than what we are seeing here. But it's the body of the candle that's really important, because when you get those really crazy intraday spikes, you go, okay, well, so the markets had a momentary freak out, and then they very quickly came back in. This is what I mean by I don't care about OPEX, right? It's a one-day thing. It comes, everybody clenches up, and then it eases. Same day. You close like we're closing today, this will be the biggest increase in the VIX in what? Basically the biggest one all year so far?
Yeah, outside of the weekend gaps.
Outside of the weekend gaps, this will be the biggest rise, single-day rise in volatility since going back to mid-December. And guess what? That's that high on the S&P. That's the high on the NASDAQ. And also the top on Fed policy expectations, that range that we've been watching, which ostensibly, you and I have talked about this over the weeks, this is why the market is slowly stopping to care about what Fed officials say. Because after that January meeting, where all they did was a little performative two-step that repeated what they said in December, they didn't say anything, they didn't change anything. We just saw the minutes this week, and even though I was on vacation, I'm a nerd and I can't be helped, so of course I read them. When you look at what's going on here, the Fed has basically said, we're wait and see mode, we'll think about stuff, who knows, we'll see you in March. And that was really the bottom line. And
see you in March. I read it as like see you in June.
For any moves, yeah. I mean, ostensibly, and I'm being generous, you're right, the next SCP is in March. They're not looking to do anything for a good long while, and they're telling you that in your face, point blank. Hey, we don't know, you don't know, we're fine-tuning, we'll see you later. Fed policy expectations haven't moved since December, pretty much. They've been basically stuck at the same 50 basis points through this year and next since, drumroll, mid-December.
We'll take a look at the SR3 and the CME Fed cut odds when we bump over to bonds in about 5 or 10 minutes. But, the long and short of it is 3 cuts priced in through the end of 2026. That hasn't changed.
That's it. So and that third one is suspect.
And the third one is oscillating back and forth, right? Is it going to be December 26th? Is it not going to be this week? And particularly with the data that we saw this morning, you could see bonds starting to move up in a way that they overlook the inflation expectations data and they are more concerned about growth. So when thinking about the NASDAQ trade, or even though it's the VIX, it's not VXN, but we can go over to VXN to make this point. I'm spending my afternoon looking to see how vol evolves going into into the close, right? Because if we start to see, and let's just go back to VIX futures because this is the future show. If we start to see that vol begins to come off the board in the second half of the session and the NASDAQ is holding up right around its 1 month moving average, that becomes then appropriate to say, you know what, maybe this was the flush and we're starting to see some early signs in the tape that it's appropriate to get long here. But this is the spot that a few days ago, if there's a pullback, what would be the ideal place? 21,850 or so, right to that 1 month moving average, currently 21,852. I don't have any NASDAQ long positions on right now. So this pullback today, who cares? Is this a good place to buy? If I'm still bullish and this is a breakout, pullback to the breakout point and chance for a march higher, I like the risk to reward where, if next week we find ourselves going into Monday closing at 21,700 or below, the trade is structured with enough time that it's going to be a small loss, but risk to reward, better place at getting long fresh at 21,850 or so than doing it at 22K or 22,300. So not great. My ES position is suffering, but the plan is still viable. So we have to read that tape during today's move, Ilya. But I know that you just rolled your positions. The one place where we have been waiting and watching patiently, and this is why we stick to the levels, 23,037 in the Russell, 2,337 in the Russell, January 22nd swing high. That was the place we've been looking to be breached to initiate a long, and it really never came together. The flip side of that was if we see a pullback and we get down towards recent lows, could it potentially be worth looking at a long closer to 2,200? That answer may or may not be yes, because the Russell has been very sensitive to the way that interest rates have been moving. When bond yields were going down, the Russell was benefiting. When bond yields are going up, the Russell was getting hurt. The past few days, bond yields have come in and the Russell is getting creamed. That's because it's not focusing on the interest rate sensitivity of the debt that these companies hold, but more over the economic prospects of what recession could potentially look like. Again, the PMI before.
And I've been holding short for about 9 days now. We talked about this right before I went on the vacation where I thought the range was holding. I thought that line through the sand had given us a failure to breach. So for about 9 days now, I've been sitting in a put vertical on this. It's taken a while. Today's been the day, but boy, did those PMIs take some steam out of this thing, as expected.
And I think just to anchor the PMIs, right, when you see a reading of 49.7, these are diffusion indexes that are anchored around 50. And so when you're above 50 and the higher you're above 50, the faster the rate of growth. When you're below 50 and the farther you are below 50, the faster the pace of contraction. So the service sector, the largest component of the U.S. economy, has now flipped from growing at a slower pace to now contracting, according to the PMI survey, right?
Yeah.
That's a big difference, right? If the Fed is easing into economic weakness where the economy is growing, fine, right? That's the cushion. Now, if the Fed has to cut because recession may be nigh, they're cutting with inflation in the upper twos. Hold on a second here. Is the downturn in growth going to be enough to drag inflation lower, or are we thinking about stagflation? Now, it's not there because the labor market's still holding up, and to have true stagflation, you need high unemployment, high inflation, and contraction in growth. Obviously, we're not in those conditions yet, and from recent labor data, it seems like we're not close to that here. But this is, sticking to what happens with the NASDAQ, I'm much more comfortable being long the NASDAQ than trying to scoop up the Russell down here at the lows, simply because that mechanism, that relationship between rates and small caps is evolving in a way that seems more recessionary prima facie than anything else.
Yes. And that's really the scary bit. So I have been a broken record on this for almost a year, basically saying, look, the global economy is operating without a safety net. The one thing you cannot do is break the U.S. service sector. If you break the U.S. service sector, there is no backup. What we're looking at the data and seeing today is that one thing which could not afford to snap has snapped. Now, this is 1 month's data. However, in the previous month's data, what we saw was an eye-watering collapse. It wasn't a move into contraction. The service sector grew in January, but it grew at a rate that was dramatically weaker than anything we saw last year and much, much weaker than expected. The move from month to month in U.S. composite PMI was neck-breaking last month. And what did we say last month? We said, okay, whoa. 1 month of data. Let's not get ahead of ourselves, but if this continues, this is really bad because this is the one thing that can't go wrong. Forget tariffs, forget geopolitics, forget noise over here and noise over there. Anything can get papered over as long as there's growth. Because if there's growth, then there's money tomorrow.
Right.
If you lose money today, it's okay. There's money tomorrow. As long as there's growth. But if there isn't, there is no money tomorrow, which means you're not going to risk the money today because you can't afford to lose it. And then you get risk aversion and liquidation. And people go, you know what? If I'm not going to be sure that there'll be money tomorrow because the economy itself is growing, I'm going to do everything I can to protect the money today. Because who knows when it'll grow again if there is a real turn. Could be months, could be quarters. Who knows? And so from that perspective, people just start running for the exits. It doesn't matter what's going on. It doesn't matter what the returns on things are. Those things go out the window. The only thing that starts to matter is I want my money tucked in the thickest mattress that I can find. And that's what we're seeing here. Dollar is up, even though this is terrible data for the U.S. economy, because liquidation, risk aversion. Yen is up because liquidation, risk aversion. Every stock index is down. Liquidation, risk aversion. This is looking like the data underpinnings for something quite ugly if it is not very quickly arrested. And the likelihood that it's very quickly arrested, given how rooted it is in the driving essence of policy, it's not going to U-turn tomorrow, is it? So
probably not.
We're looking at something that is perhaps finally the post-COVID tightening reckoning.
The sector performance, which, I bring this up often and swear by, is not good under the hood. In terms of the top performers, only one ETF that we typically track on overtime is in the green today, and that's XLP. Never like to see staples lead. Other defensive names are doing pretty well, like XLV is only down by 0.32%. Utilities only off by 0.35%. Okay, on the flip side, what's really losing? Historically speaking, the ETF on a sector basis that shows the greatest propensity to decline if recession conditions are setting in, as we've discussed for a long time, Ilya, is retail. XRT is down 2.82% today, leading the broader market. It's not dissimilar from XLY, which is down by 2.27%. Semis are off by 2.31%, right? These are all gains that are outstripping the headline indexes. So when we think about sector rotation right now, and you look at XRT, this is the uptrend from the lows that you have at the end of October 23, right? Like these are serious lows. Really, these are me texting Dylan. It's time to get, uber long stocks lows. This is when the genesis of that myth arrives. That's early November. That uptrend is breaking. This is a bad day for stocks. If the golden goose of the stock market rally was, as long as on the macro level growth is in between 2 and 3%. Inflation has a 2 handle. The unemployment rate has a 4 handle. Don't worry about the noise. We have a significant indication that that's falling apart. And the data are finally, the reality is finally catching up to the markets here.
Yes.
So again, I have my blessed laid plans to buy the NASDAQ. I want to see volatility cool off intraday. It's not exactly doing that. Vol's up across the board. It may be sticky into the close here. So I'm going to wait patiently, but I'm going to stick to my plan so long as the conditions remain in place. But there are a lot of things not to like happening under the covers right now. And as we get to the halfway mark of futures power hour, one of those things is that bonds do not care about the higher inflation expectations that come out of today's data sets. They are much, much more concerned with what's happening with the growth side of that story. And so ZB here, trading it at 115 and 31 ticks, it might be on pace for its high close of the year right now, which is 116 back on February 5th. I don't know if we can call this the head and shoulders pattern or inverse head and shoulders pattern still, Ilya. Instead, I'm looking at this more of like a potential symmetrical triangle. And while a symmetrical triangle after a downtrend would typically mean continuation to the downside, it is a neutral effort. And this is beginning to look again more like a potential bottom now that's forming here in both notes and bonds. If we are really concerned about recession, and that's what the stock market's telling us, I would look at ZNH5 and its 2.5 IVR as a very cheap way to get some bond exposure right now in a market that is starting to clench up in a dramatic fashion on this OPEX Friday.
Yeah, I mean, I'm looking at this very, very closely. I mean, obviously, you know, I'm inclined to look at horizontal levels. So when I look at what the bonds are doing here now, I see it approaching the previous swing high. And my mind tells me, okay, there's a risk reward consideration here. Either we're going to break that level or we're going to maybe have a little pullback right there. And I can maybe get a better way to get in a little bit lower. Obviously, I'm very much on board with long bond exposure. When there was that big shakeout, I took mine off. It made money because I was long ZB from the bottom. And so I said, you know what? That was a big sell-off. My trade is still to the good by a few percentage points of equity. You know what? I'll take this money. Good. Money made isn't money lost. You can't sneeze at it. Let me not let this gain become a loss. So I've been waiting. I've kept my long yen exposure, which is essentially the same idea, because of course, what do we see today? Bonds are up, yen is up. That's been the story for 5 years now. If we take a look at how the yen has performed relative to the 10-year yield, for the past 5 years, it's been the same chart. And of course it has. We've talked about carry trade dynamics endlessly, but to put it in simple terms, the Fed matters and U.S. rates matter for global rates. So as the U.S. and the Fed go, so too do borrowing costs everywhere. And borrowing costs in Japan are essentially zero. Yes, they've hiked rates a few times. La-di-da. They're at less than 0.5% for most of this period. They finally got to 0.5% now. Obviously, that's orders of magnitude away from where the rest of the world is and where the U.S. leads. So, of course, the carry trade is nigh. People borrow in yen, they buy higher yielding things. When bond yields go up, that becomes relatively more attractive because you get more yield. When they go down, less attractive. That's why the yen and yields move in lockstep here as the Fed first reacts to inflation, then ends the cycle, starts going the other way. When the focus is the Fed and rates, the yen is going to lock in. So I've had that on. I'm very much looking to get long the bonds again. At this point, it's just a matter of risk reward. Both ZN and ZB are at those swing highs. Let's see what happens here. If you take those highs out, I'm long with both feet. If you stall here and maybe into the beginning of next week while you get that lull in the data, you pull back a bit, okay, I'll use that as the opportunity. But any way you slice it, my intention is to be a buyer as soon as the setup looks marginally attractive.
If we look at this from the yield side of things, the 10-year yield now down at 4.415%, quickly approaching the lows for the year. That uptrend that carried us all through the fourth quarter, it looked like we were reclaiming it back in middle of February, but that was lost immediately the next session. And we've started to set this series of now lower highs. A move below the yearly low here would suggest that we do have confirmation that a new downtrend in rates has begun. And it doesn't seem like that's a downtrend in rates for good reasons, right? Like one that the stock market would cheer on right now. Because the rate cuts, like the Fed has said, they're not going to do much of anything until they see it transpire. Okay, they're not going to skate to where they think the puck's going to be. They can't possibly adjust policy right now to counteract any impact of tariffs, if that's lowering rates or raising rates, until they see what form and function the tariffs take. So as the PMI data shows today, right, even though the tariffs aren't necessarily here yet, they could be coming. Maybe they're not. It's just a negotiating tactic. It's a sort of Damocles of uncertainty that's driving decision-making at this juncture. And if that just means the economy is stalling out in the short term because of this uncertainty, then yields are probably positioned to go to the downside. Right now, I still have my exposure in ZN in the call spread here, the 111, 113 call spread. So that's poking its head above water. And this was put on a few weeks ago. So there's still 63 days to expiration. The whole point was like, if we're going to see something happen, if the economy is going to get hit, let's see what the tariffs do. It's going to be up front in the next 2 months, if that's real. Same thing for ZB. The short put spread remains in place. So not as high convexity as I'd like, but it is at 28 days to expiration. So consistent with that, could we put on the short 10, this 108, 110 put spread again? No, because the conditions in the chart have evolved. At the time it was put on, right? You're talking about a market that had just seen a flush to one Fed cut maybe over the next 2 years and 25% tariffs across the board. In the interim period, we've now seen the economy, again, as the PMI reporting showed, some of the highest optimism about the year ahead for the U.S. economy to one of the gloomiest outlooks since the depths of the pandemic. And now more Fed rate cuts are coming in board here. So I think the long deltas in bonds remain appropriate. In ZN, because the vol is so low, I like the long call spreads in a more traditional tasty way. Now that vol has perked up a bit, 30.4 IVR, a short put spread in ZB would make sense. And so next week, depending upon how price evolves, if we go out, this is 28 days, so we're going to have to go to 63 now. And thinking about recent swing levels here, if we wanted to be a little bit more aggressive, we can operate around 114, perhaps 113. Either way, though, as a short put spread in here, you go short put vert, we're 63. It'll just bump you up so it automatically places you here. And 113, 114, it's a 72% probability of profit. We could widen that out a little bit. Goes down from 2 to 1 to 3 to 1. But you can find and size up a decent trade here where you get a pretty good risk to reward right now, assuming that some of these swing levels hold. So that will be my plan. I'm going to roll out from the 108, 110 into the 113, 115, most likely, depending upon where prices are. But the long deltas in bonds or notes, I think, are making increasing sense. And when you compare the cross-asset flow with what the yen's doing today and what the sectors and stocks are doing today, it begs the question, is the market now more fearful of recession than it had been previously? And I think
it better be.
It seems like the answer is yes. So my ES position today, just mismanaged horribly. A few days ago, we get to the other side of the decay curve, long 6150, short 6300. I should have locked that in and rolled it out. Didn't. It's turned upside down on me.
I don't have. I had the same thing with my ES and NQ exposure. I let it basically get the OPEX today to roll it. And should I have done it earlier while I still had some theta in there? Of course.
Perhaps.
Of course.
But it became a better trade. But it became a better trade.
Yeah.
Not the end of the world. But so ZN is up, ZB is up. I think we need to read through the market and recognize the fact that there are rate cut odds being pumped in here. We don't need to go to the SR3 H5, but out to the Z5 for that December expiry. And we could see today that there is about an 8 basis point bump from yesterday, which is equivalent to about a 32% increase in a 25 basis point rate cut by the end of this year. So we're starting to see this drift, right? If Fed cut odds are moving up because recession is now the bigger weight in consideration than inflation and tariffs, well, that should be good news for bonds. And I suppose one more layer to this, Ilya, before we move on to gold and silver. If you really do think that tariffs are a consideration that could hurt the bond market because of the inflation pass through, then the short put spread is probably the better play for you than the long call spread. Just philosophically, if the growth concerns are balancing out the tariffs, maybe the market stops falling as opposed to rallying. I'm going to be a little bit more aggressive on the call side, if only because if I'm wrong about my NASDAQ trade that's coming up, it probably means that bonds are making a more aggressive advance to the upside. And I'd like to have that convexity to offset any potential losses swinging an NQ trade. Other than that, though, I got nothing else to say here on rates.
Yeah, I mean, I think it's very important to kind of separate what the tariffs and the growth stuff is doing, right? Because look at how the markets responded when it was, oh, he makes the announcement of the tariffs. Oh, he has a deal with Mexico and Canada day of. Okay, this is fine. It was fine. Nothing did happen. Okay, yeah, some more tariffs went up on China. Those 10% are nothing to sneeze at. They're a serious additional cost. They will hurt anybody that's buying things made in China. That is a lot. It's a lot of inputs into a lot of U.S. companies. And by the way, it is U.S. importers that are paying that, not China. Let's just be clear. But okay, fine. That was the modest version of what people were afraid of. What we're seeing in the PMIs here today is much worse. It is that people are afraid and uncertain because they don't know where things are going. They don't need the tariffs to happen. They need to be afraid that they're real. They need to be afraid that it's possible. And of course, it's possible. We're watching that it's possible. China got them. Mexico and Canada got a 1 month reprieve. We're going to be back at this in less than 10 days? And if the question was, is this administration going to kill sacred cows? Would it have significant tariffs against Canada and Mexico, or is it ultimately a bluff? Well, obviously it's not. Because if the slaughtering of sacred cows was what you had to see, this week you saw it. We are fundamentally reshaping, at least rhetorically, the entire underpinnings of global peace and security established in 1945. We're questioning NATO. We're questioning our European alliances. We're saying that it is not a given that we're going to honor those commitments for the first time since the end of the Second World War. Now, you can have whatever political opinions about those things that you want. That's not the point here. This is not a political analysis show. It's a market analysis show. That level of earth-shaking change, that creates uncertainty. That's what the PMIs are telling us, that people don't know what's going on. They don't believe anything is a given, and therefore, hide my money, I don't understand. That's what we're watching in markets here, is people going, I don't know what's going on, and I'll see you when the dust settles. In the meantime, I'll take my money off the table. Thank you very much.
It's hard to quantify confusion versus uncertainty, but it feels like there's a distinction between the two. And I think when you go into confusion, I think that's worse, right? Like there's always
100%.
There's always
it's the worst kind of uncertainty. But I don't even know what I'm uncertain about if I'm confused.
Right. Ilya, gold here today is off the lows. It's been pinned up near the highs. It's at a new all-time high yesterday in the futures market, and it's back to 29.53. Silver having a little bit of a rougher session, still down by 1.14%, but ultimately, again, off those lows a little bit. We did have a fresh closing high for the year yesterday. I'm still leaning along deltas in both of these. these are uptrends. I'm a momentum guy. The uptrends haven't broken. If we're heading into a balkanized trade world and a world of new geopolitical relationships, gold seems like a nice place to be hiding out. So, yeah, I mean, what if we close up here? This will be the second highest close ever.
Yeah.
So I'll continue to press on. The position was rolled forward, long 29.50, short 3,000. The beat goes on. Gold and silver continued to post good gains. This time next week, I'll be at 26 days to expiration. So would I be rolling the position further? Absolutely, because it's still an uptrend. And I run the risk as per momentum guy. There's going to be a chain or trade in the chain of trades that breaks eventually. And that's fine. Got to be comfortable with it. So we'll take another stab at the gold long side of things as we have been operating for most of the year. And if it doesn't work, then it doesn't work. But the trades have been structured in a way that it allows for breathing room and taking, recycling the profits back into a similarly sized or scaled trade, looking for 3 to 1 or 4 to 1 to the upside.
Yeah, I mean, I'm kicking myself for missing the second leg of this gold move, basically from the break of the high that was set there in late October, right there. I mean, I essentially traded the lion's share of the move from the bottom of the range up through that stalling in mid-January. So what I've missed is essentially the second 50% of the rally that we've had from those lows in mid-December. I caught the first leg, then got out ahead of those highs. We've, of course, since punched through those highs. So I'm looking at this stalling here and the flattening out of momentum indicators, even as we set higher highs, to basically say, okay, this looks like now divergence relative to momentum. Maybe that's just sideways chop. Maybe it's a larger pullback here. I don't think you can really bet on a very significant pullback in the current environment. And I think if you look at what the dollar is doing today, I think you can see why. The risk aversion is mainly benefiting yen, which, by the way, is something everybody should be even more scared of. You do not want the yen to be outperforming the dollar on a risk-off day, because that's liquidation. That's worse than just, oh, this is a little uncomfortable, let me go to cash a little bit. It's Friday, it's OPEX, I'll come back next week. This is scary level liquidation when this is the configuration in the FX markets. This is the kind of thing where, if you want to take a dramatic example, you look back to COVID, you look back to the fall of 2008 and of Lehman and the crescendo in that crisis. The defining thing that starts to happen as the liquidation gets really into panic mode is people start to dump their short yen exposure and get out of all things not nailed down. And the dollar, of course, soars, but for against the yen. This is what you don't want to see. This is the hair on fire.
When the yen rallies and the Nasdaq,
markets.
When the yen rallies and the Nasdaq goes down, it's people that are unlevering trades, right?
That's right.
You're taking the world's safe haven funding currency to buy high beta stuff, and when high beta is whacked and the funding currency is up, it means that there's perhaps a carry unwind happening, which can't be ignored.
That's right. And this is the thing. The thing because with gold, all you really have here now is basically hope for some amount of pullback as momentum anchors. You don't have much room because the dollar is going to ultimately weaken in this environment, and you're seeing that happen. If the dollar were on better footing, you would be seeing it much stronger against the euro, against the Aussie, against the pound. It's not making headway. It's getting a little bit of liquidation bid, but look at it at the yen cross, it's collapsing. And the little baby gains it's seeing elsewhere, it is just testament to how gold has a very significant tailwind now. So I'm looking for a little bit of a pullback here after the stalling, and I want to be very long.
Copper is something that I'm keeping an eye on here because the trade was lifted a little while back and looking to re-engage on the long side again. Not quite, looking for, again, 450, 453. I had my eyes on it this morning, and I just couldn't get to a place where it was comfortable. So, maybe I missed it, maybe I didn't. I'm going to continue to watch it here. I like copper. It's worked out well this year so far, but we need to stop over in the world of energy before we ultimately make our way to FX markets, Ilya. Natural gas is back up. There was a headline today from President Trump that moved the market that there's not enough electricity in the country, and we need a lot more electricity moving forward to help power the AI companies that are coming in.
Sounds like a Musk-ism.
Well, we had this push higher in natural gas. We've since come off, but we're still up by 2% overall. It is a 60 IVR, though, and that is a fundamental difference between NG and CL, which a big plunge today back to effectively that line in the sand, right around 70 or so, but it's still only a 20 IVR. So I continue to look for an opportunity to operate in an iron condor, short iron condor trade here near the midpoint of the 52-week trading range. I don't have anything on yet, so I'm really not trading energy at the moment. But with natural gas, if there is a pullback, we have the opportunity to sell a put spread. With crude, if we can get a little bit more juice in the vol side, depending upon what your risk tolerances are. Mine isn't there yet. I just think it's not worth the squeeze. We've been talking about this for weeks, Ilya. If you did this back in December or back here in early February, or really any point over the last few months, we've been tethered around 70. And so operating on a long enough basis with enough duration, the market can go up or down, but you return to 70 and you reset with enough duration and to continue to try to sell whatever vols in there. I haven't done it. I regret not doing it because it would have worked despite the fact that the juice really isn't there from my point of view. Doesn't mean it's not viable. What's your take on oil now with this geopolitical realignment beneath our feet?
Well, so what I did here was, shock of shocks, directional. I sold, as you know, near the top of the range, around 78 equivalent on this chart. So essentially where the June high was retested. And that worked. I've been out for about a week and a half, 2 weeks now, as we hit that 70 mark, and it looked like we wanted to bounce. I got out. I'm waiting at this point. I want to be short. My bias is still on the downside. I don't see any good reason to want to be long crude in an environment where the one part of the global economy that can't afford to slow is shrinking. And you're awash in supply, and geopolitical risk, if anything, is receding. Now, let's be clear. The situation in Ukraine, in that theater, has become a lot spicier this week. There is apparently a fight between our president and Volodymyr Zelensky around mineral rights. Apparently, Scott Bessent, and this is reporting from the Wall Street Journal that I've been reading over the past couple of days. They've been breaking this story. Scott Bessent apparently showed up in Kiev and said, sign away a 50% stake to the U.S. For Ukrainian mineral rights. They have tons of things like titanium and lithium. They're just incredibly underdeveloped. So if you wanted a bulwark against all the materials dominance that China has in processing and in sourcing, Ukraine is a great bet. And apparently Zelensky said, well, we want some security guarantees. And Bessent said, I don't have those for you. And so now we have a war of words. Somebody's calling somebody else misinformed. Somebody else is calling somebody else a dictator. It's a whole thing. And as ever with the president, this is probably a negotiation, and you shouldn't read too deeply into it. Feisty wordplay is par for the course. We can be best friends tomorrow. So there's all manner of consternation here, but none of it has really moved the needle on oil, basically since going back to 2022, when this whole thing started. The Middle East theater has been a lot more let us say, jumpy of a catalyst. over the past year or so. We've had Israel and Iran shooting missiles at each other directly. That's certainly unnerved markets. But that theater is going toward cooling, not heating. Iran is basically defanged here for the most part. They've lost Syria. They've lost Hamas. They've lost Hezbollah. They're getting a renewal of the maximum pressure campaign of the first Trump administration. They have nowhere to go here. They got into a fight, and ostensibly, they've all but lost it. So the situation in that theater doesn't look like it'll give us more risk. It looks like it'll give us less. So I think you look for what happens at the bottom of this oil range. If it's so much as cracks on a 4-hour basis, I'm short.
Oh, yeah, we got to wrap this up. And we've talked a bit about the yen, but we do have German elections this weekend. It's a 60.4 IVR in the euro. Is this a risk for our markets or any of the markets that we've discussed today outside of the euro with a potential gap on Sunday night?
Yes, it is. Because if you get the alternative for Germany, the hard right, lightly Nazi-flavored party in Germany starting to really make headway, I mean, the expectation is they could get as much as 20% of the vote share in this next parliament. That makes for a very different situation in Europe, and that theater really might get hot. How someone like a Friedrich Merz, which is sort of the presumptive next leader after the very unpopular administration of Olaf Scholz falls apart, how he's going to deal with these people to create some sort of bulwark against further Russian aggression is unclear. Europe now ostensibly has to rearm in a hurry and really start to do their own heavy lifting, given what we're hearing out of the White House, especially this week. It looks like Merz wants to do that, but if he has to get into a coalition with the AfD, which until recently was absolutely anathema to any European leader anywhere, then we have a very significant realignment of Eurozone geopolitics. So if they do as well as they are suspected and become a kingmaker in German politics, we have a whole different situation to be concerned about.
Yeah, and depending upon how those European or rather German elections turn out this weekend, there are implications for how the Russia-Ukraine war comes to a close. Because right now,
huge implications, maybe.
Right. If the U.S. is stepping back, then France, Germany, and the UK, Poland, they're basically going to be the ones running this thing now. And if Germany, Europe's largest economy, has leadership that says we're more interested in an immediate ceasefire and don't care about territorial integrity or anything, which...
And by the way, Putin's not such a bad guy.
Yeah, what does it mean for the euro? What does it mean for the price of oil? What does it mean for natural gas prices? Does it mean that, gold, what is it? So there's knock-on effects. We don't know what's going to turn out, but the euro 60.4 IVR. So if you're drawn to the currency markets right now, just be aware of that idiosyncratic risk. The calendar itself for Monday isn't very large, right? We talk about a light calendar all week long. Fed manufacturing indexes, I suppose, could draw some interest, but really the market probably reacts to whatever headlines come out of DC and then these European election results. In terms of education here at the end of the show, as we typically do, a brief bit of it, head over to tastylive.com, top banner, Learn Beginner Futures, where you can find this coursework put together by the fine folks on the Tasty Live research team. We talk about market participants here, Ilya, because you really do need to know who's trading in the futures market. There are basically two groups. There are people who are producing the stuff and there are people who are taking on the risk. Producers are using the futures market to transfer risk by locking in prices for expected production well before the actual product comes to the physical market. Whereas speculators, we're assuming price risk and looking for efficient asset speculation. So, as one group of traders, our concern is with liquidity. We want to be able to get in and get out, but we help the producers, right? And in fact, derivatives markets are all born out of the need for hedging in agriculture. The history of options and derivatives and futures, very fascinating. Would encourage everyone to go read about it, why it's so important for the functioning of the economy. Futures really do matter. Head over to tastylive.com, top banner, Learn Beginner Futures, or click the link here at the bottom of the slide. It will take you there directly. Ilya, it's good to have you back. We have overtime on Monday, so we'll see each other again then. But best of luck trading to you and to everyone else today. There's more Tasty Live coming up next. We have a special event on the calendar coming up next. For the next hour and a half, Dr. Jim's The Life Cycle of a Trade will be playing here on Tasty Live. So stick around. Great program. Life Cycle of a Trade coming up next after a brief break.
Highly recommended, everybody.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way.
What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade adjustments, and closing order. In this video, we are going to cover an iron condor.
What's up, everybody? We've got some trades for this next little session here. E-mini S&P 500 futures down 62 points here. Big sell-off. NASDAQ down 370. I think it's time to put on sort of a core position here with a iron condor in SPY. So SPY, one of the major indices, of course, the biggest one of the group, trades at 547 right now. When we look at the chart, it's had a significant sell-off here. Back down to kind of the range that it's been trading in since around June. Volatility has upticked significantly. You can see volatility futures at 1565. I think it's time to put on an iron condor. So we're going to go into the trade page here, go to the 58-day expiration. So we're going into September. It's a little bit longer duration than I typically like to do, but given that we've had a little bit of a down move and a pop in volatility, I think it's time to take advantage of that. So typically we go somewhere around the 20-ish delta for those short options. I'm going to look here at, let's call it the 525 just for a sort of round number. As for the spread width, I typically like to go to about $10 wide here. So I would go and buy the 515. On the upside, we're going to do that same sort of exercise here, go to around a 20 delta. Let's call it the 570 here. And then I'm going to go $10 wide to the 580. You can see it's going to trade right around 1/3 the width of the strikes. This is typical for this duration when you're in the 40 to 60 day time frame. If you're selling around a 20 delta for the short options, going $5, $10, $15, $20 wide, you'll typically get about 1/3 the width of the strikes, which sets you up with around a 50 to 60% probability of success. So we're going to sit here with this spread. We'll go in around the mid price of 341. We'll see if we get filled. And of course, we can cancel and replace as needed. We'll go down to 340. All right, another penny here. And there we go. We got filled at 339. That'll be our iron condor, $10 wide. We're going out into the September expiration. All right, so we got to make an adjustment here in our SPY position. So we've got volatility exploding here into what has been a huge move in the market. The volatility futures at 21.28. You've got the E-minis down 120 points here. A big move in the market as a whole. So we have a position on an SPY. It's an iron condor that we put on the 24th. So it's been about a week, and this spread hasn't moved a whole lot. And that's because of this massive pop in volatility that we've had. So we've got this position that's now a little bit tested on the downside. But the real thing that I want to take advantage of today is this pop in volatility. The volatility, VIX itself sitting at 26. It got into the 30 handle earlier today. I think you got to do something in terms of rolling calls down. And the reason we want to do that is because even if you get the bounce back, that whipsaw type move, it tends to come with a volatility contraction. And when you're talking about a VIX at 25 to 30-ish range, it doesn't get much higher than that normally. Of course, it can get higher. You can see big moves to the downsides in terms of, crash scenarios or like COVID, stuff like that, where you get those massive moves to the downside. But for all intents and purposes, 30 VIX is a very high point. So for me, I've freed up some capital on my short delta GE position, and I'm willing to put a little bit more capital at risk here into this adjustment. So what I'm going to do here is I'm going to roll down the call, and I'm just going to roll this down naked. So this is going to be a much wider spread now. It's going to be a 20-point wide spread, and I'm going to use the $800 that I took off from my GE position to finance this buying power here. And again, the reason I'm making this adjustment is because I want to capture some of that volatility into this move. So I'm going to roll down from the 570 to the 560 here, pick up a little bit of delta into this adjustment. If you wanted to, you could go and buy a call here to reduce some of that risk and reduce some of the buying power that you're using here. You could buy something like the 575 and make it a 15-point wide spread as opposed to the 20-point wide spread. But I'm going to go with just the roll down here. I'm going to do this at $2 or just under $2, 191 here. See if I can get filled here and pick up a little bit of short delta into this move. Filled at 190, so 191. So I did the original trade at 339. I've got $1.91 in credit on this roll down. I've now got a much wider call spread relative to the put spread. I've got a total premium of $5.30. I'm using about $1,500 in buying power on this position, which is more risk on the upside. This spread has a lot more volatility exposure than the original spread because of how wide that call spread is, which should help me if there is a little bit of a bounce here and a little bit of a contraction in volatility. What's up, everyone? We've got an absolutely wild market right now. E-mini S&P 500 futures down 154. They were down 250 at one point today. You can see this bar today. Absolutely wild on the E-minis and the market as a whole. It's been a swift sell-off here with a massive pop in volatility. VIX hitting the 30 mark, getting even up close to the 40 mark today. So we've got a couple positions that we got to take a look at. One position in particular, our SPY Iron Condor. Now with the move today, this roll has helped us significantly. And with this pop in volatility, it's helping this whole position, even though it's fully or close to fully in the money. So you can see these markets are very, very wide, and we're going to try and close this out and maybe take a 90-cent profit on this. 440 is where I'm thinking we'll get filled. We'll see if that happens in practice here, but we've got this $10 wide put spread and our wider 20-point wide call spread that has gone to trading about $1 here overnight. So let's see if we can route this order. And with markets like this, with volatility really exploding, big price movements, you can see the market is moving 5, 10 handles a clip. I tend to go well below the mid price because you never know where you're going to get filled when these markets are this wide. SPY typically has penny wide markets. In times of volatility, those are going to widen out, especially because we've got the markets moving so significantly. So let's route this at 420, and we're going to work our way up and see where we get filled here. So no fill at 420. We'll move this up another 5 cents, 425. No fill there. 430. No fill there. You can see the market selling off a little bit, which is going against our position, making this position more expensive to buy back. 435. No fill there. Let's see if we can get hit at 440. That was where I thought we would get filled. Nope. 445. No fill there. Let's see if we get filled at 450. Nothing there. Wow. you could see these markets are moving significantly, and this actually has some long delta. So an up move would help us on this fill. We're actually seeing about a 10-point down move from when we originally started this little exercise. 455, we'll see if we can get 75 cents out of this. There we go. We got a fill on that, 445 on that. We actually got price improved to 450. And again, this is live action price, trying to work price here and get filled on a position. $4.50 into a massive down move here in the market. That put spread was 5-10 points in the money, but because of how high volatility has gotten, the extrinsic value in that at the money put spread really buffered that loss to the downside, and hence why that position was ended up being an $80 profit, which you would not expect into what this market has been looking like today. So closing that one out, that iron condor after a roll down for a small $80 profit, but a decent profit into a position that you would think would be a terrible position at this point. So good trade. That was a crazy one, crazy market. Stay small always. Manage positions when you can. Work your prices there, and take the market as it comes. So we'll see you on the next trade.
If you want to catch these trades live, tune in to Johnny Trades every Wednesday at 9:40 a.m. on Tasty Live. Peace. What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind the trade entry, trade management, and the closing order. In this video, we are going to cover the crab trade. Let's get into it. Today I placed a trade in Nike. Here's my thought process. Nike has a low implied volatility rank of sitting around 11%, which means that it's got low implied volatility relative to itself over the last year. It currently trades at a 90 price tag, which is relatively low considering that it has been as high as 124 in the last year or so. If you wanted to lean a little bit long, which is my assumption here, I went with a poor man's covered call, crab trade, butterfly, a funky, spicy little spread here. So I went out into June, and in a poor man's covered call, we typically buy a long call option that is our synthetic stock position. I'm buying the one of the 85 strike calls. This is your stock position. In the May monthly expiration, I went and sold some premium. So I sold 2 of the 95 strike calls. This is your short call type position to your synthetic covered call. For me, to reduce the capital requirement, you could see it uses about $2,000 in buying power. I went out and bought the 105 strike call just to define the risk. This significantly reduces the overall risk of the position. It reduces how much capital you're using on the position and makes it a risk-defined position, using $540 of total buying power. When we flip to the curve analysis mode, we can see that our risk profile mirrors that of a butterfly, but with a little bit of added upside potential. The 185 strike long call is a more static delta, while we have some decaying short premium at the 95 strike. This position benefits from a sideways/up move. Our ideal situation would be a move right to our short strikes at 95, where we'd potentially receive our max profit. On this sort of trade, you've got about a $500 max profit. I will be targeting around $100 to $150 in profit for my closing order. All right, so we are back with our Nike position. If you remember, we put this on a couple weeks ago. About 19 days we've been in this trade. We were targeting somewhere around $100 in profit. It's actually come in quite nicely over the last couple trading sessions. This is a bullish position, and you could see we put this on around 19 days ago, so early in April. You could see we kind of hit a bottom here in Nike. It has since rallied up, which is exactly what we wanted. Some time has passed. That is also exactly what we wanted. You get that theta decay, a little bit of a vol contraction. You can see IV rank
rank here at 14, so we know that volatility has come in a bit as well since we put this trade on. And so, you've got kind of the combination of price movement, volatility change, and time coming out of that position, which allows us to now manage this as a winning trade. So from the trade page, the way we could close this out is a number of different ways. So we can do this as an opposite order from the right side menu. So you right click and go to opposite order. This will route the opposite to your opening trade. You could do this from the activity page as well here, or you could do it manually from the trade page. So from the trade page, you would be going to sell out of the 85 call that we are long in June. In May, we would go and we would buy back the 295 calls that we have at the money here. And then we would go to sell out of the one contract 105. You can see this trades at a mid price around 643. We open the trade at a 536 debit. And so we've got about $107 of profit on the table here for this position. So when we route the order, the mid price is a good spot to start the order at. It's not a automatic fill, right? It's the middle price between the bid and the ask for each option that you are trading. So here, this bid-ask spread is 3 cents wide. You could see you've got 3 cent wide on the 95 strike, and then 10 or 15 cent wide bid-ask spread on the 85 strike, which leads to this bid-ask spread at the bottom. You'll typically get filled somewhere between these two prices, which is perfect for this trade. If we don't get filled, you can always cancel and replace the order, adjust the price a little bit. You usually have to go down if you are selling to close, up if you are buying to close in terms of the price. So we're going to route it at the mid price here of 641 and see if we get filled. You can see all the metrics of the trade. This will clear up a little bit of buying power as well. And there's our fill, 641.
What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade adjustments, and closing order. In this video, we are going to cover a custom trade, a put ratio with a naked call. One of the stocks I'm going to take a look at here is CCJ. It's one that we've traded a couple times. It's near the highs that it's been trading at. It's had a really nice run to the upside, trading about $60 here. It's actually just off of the 52-week high, as you can see on the right side, quick menu details over here. When we look at the stock, it's got an IV rank of 16, so it's not super high, but you have to keep into account that volatility is at lows. The VIX itself at 13, volatility futures 1430, so very low implied volatility across the market. For me here, I'm looking to lean a tiny bit short on this position. What I was thinking was this is a perfect stock to be short premium in for me, naked short premium, because it uses a small amount of capital. Even doing a strangle here, only used about $750 in buying power, which is perfect for my portfolio size. And given that I'm collecting a $3-ish credit, this would set up perfect. I'm going to get a little bit spicier with this position and do a short call with a put ratio spread. So when you have a strangle, your risk profile, and we'll see this on the curve view, you have risk on both sides of the stock, right? Your risk is one contract on either side. What you can do with a naked position is, instead of just having the short put, you can make this a put ratio spread and still synthetically be short just one contract on the downside. So when we look at this risk profile, it leans you a little bit. You have an extra delta to the downside here. You can see I'm short 30 deltas on this position, and that's because I'm buying this put spread basically for a small debit here on this trade. You can see I'm selling this at 186. That means I'm buying this put ratio spread. I'm buying it for 50 cents net. I'm selling some premium here, $2.30 odd cents.
here on the downside, but I'm buying this at 310. It gives you a little bit of more room to the downside and also a higher profit potential because you have that embedded put spread here. But you'll see it only uses a couple dollars more in buying power relative to the strangle. And that's just because my break even on the upside is $2 or $3 closer. So you have a little bit more risk on the upside. So the buying power is just a tiny bit more than what it would be with the regular naked strangle. Both trades have positive theta. They're short volatility. This trade, though, itself has a higher profit potential because you have that $5 wide put ratio spread, where if the stock were to drop to 55, you'd have $5 of value via this put spread plus the $1.38 in credit that we're collecting on the entry here. So you got a little bit of an extra bang for your buck here on the move to the downside. So we're going to get this trade on 136. We'll see if we get filled here. 134. Market's moving a little bit. 124. God, this thing is moving. Stock is dropping a little bit, and I have short delta, which means that the price of this is going down as we speak. 119, come on. There we go. We got filled at 119 on that short call put ratio spread. All right, so we've got an interesting position here to manage. We've got our CCJ put ratio with a naked call. So if you remember when we put this trade on, synthetically the risk was very similar to a strangle. We had the short 65 call. We did the 60-55 put ratio spread. So we had an extra put on the downside. So we had two puts here. One of them is covered by this long option. So you're naked. The 55-65 strangle is synthetically what you're naked here with an added long put spread. And that long put spread hedges you to the downside, of course, but also adds potential added profits to the position. So when we put this trade on, we did it for a nice $1.19 credit. What has happened along the way is that our call here has lost basically all of its value, and this put ratio has actually gained value. So if we look at this put ratio right now, this put ratio is trading for a 21-cent credit or around that, maybe a little bit higher actually, because the bid-ask spreads are a little bit wide. And that's because this spread between the 60 and the 55 is worth $5. The stock right now is trading right around 51.58 here. Which means that this spread, net of where the stock is trading at, would trade at $1.50. It's $1.50 and change above the 50 strike, which is what this position would trade at expiration if the stock was right here where it's trading right now. We can even see this on the analysis mode. So when we jump over to the curve view, our risk profile, we have the Theo expiration here. This is at expiration. Our profit here, as you could see, would be somewhere around $200 and change, which includes the credit that we have on the original entry, the $1.19 on entry, plus $150 to $170, depending on where the stock is marked. That would be our profit based on where the stock is trading at right now. So the trade has gone completely our way. And one of the interesting things with this sort of short premium position is that you actually put the trade on for a credit. And if you're right, where you get some time decay, some volatility contraction, a little bit of a price move in your direction, if you get some of those factors right, you can actually close this trade for another credit. So credit open, credit close, very interesting position. So we're going to go ahead and close this position. We're going to buy back the call. We're going to sell out of the 60 strike put, and we're going to buy back our two short 50 puts, 55 puts here. And we're going to try and do this for a decent credit here, 15 cents, which will be our closing price here. So let's try this at 15 cents, see if we get filled. No fill there. All right, so we got filled on that position for an 8-cent credit. So we opened that position at $1.19 credit, closed it at an 8-cent credit. We were able to get that credit for the close because of that put ratio spread gaining value, even though it went in the money. $127 profit. Nice trade, freeing up some capital as well.
What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade adjustments, and closing order. In this video, we are going to cover a poor man's covered call. All right, looking to get a couple trades on this morning. E-minis up 16, the NASDAQ up 120, volatility at its lows, which lends us to a new type of trade that we haven't done in this portfolio. I'm going to be looking at Target. Target trading at 130. It had earnings a couple weeks back. The stock moved from 155 all the way down to 120. It's bounced a little tiny bit to 130 here. But even if you look on like a longer term chart, let's just look at like 5 years. We'll go back to the monthlies as well. I mean, we have reversed years of price movement. We're back to, early 2021 here, mid to early 2021 prices. I think it's an interesting spot to get a little bit of long delta here and do something that we haven't done in this portfolio, poor man's cover call. So this is a more capital efficient way to be long the stock, short a call, covered call. So when you buy stock in a margin account, you get about 50 or 2-to-1 leverage on your stock, right? So it uses about 50% of the cash value of the shares. So if you were to buy 100 shares at $130, it would use the notional value of that position would be $130 per share. So 13 grand on that position. In buying power, you only use half of that, so $6,500 in buying power, around half that value. Selling the call in this circumstance, and I just picked the January expiration just to show you this example, would reduce the buying power a little bit, but you're still using $6,200 to be long the stock, short the call. Very capital intensive position, even in a margin account. So for me, in a smaller sized account, I have to figure out a way to be more capital efficient while still maintaining that position or that sort of delta. So what we do in a poor man's cover call is we go a little bit further out in time, let's say 50 to 90 days, depending on your duration here. I'm going to look at February, which is a little bit further out in time here. And we'll want to be long a call that is in the money, that'll be at a delta that's, somewhere between 80 and 95, right? When you get to a higher delta, the option is going to get more expensive. And you can see this on the chain here. In terms of the value of the option, the further you go in the money, the more of the value is intrinsic value versus extrinsic value. When you think of extrinsic value is equal to the out of the money put. So if you were to buy this 110 call, for example, you would be paying 51 cents or around 51 cents over the intrinsic value of this option. And so that $51 is essentially the cost of that long stock position or nearly long stock position. So for me, I want to use about $1,000 would be like my max on this. And that's just from my position and my capital efficiency in this account. You can go further in the money if you'd want to, if you don't mind using a little bit extra capital. So for me, I'm going to go and say around this 120 strike. So this is going to be a little bit lower delta than I'd like to be at, but I'm trying to keep this at about $1,000. In terms of the short call, we want to go in that normal, 30 to 50 day time frame for the short. The long 50 to 80 days, so you have that about 40-day window, 30 to 40-day window between the two options. So in January, I would look at somewhere around the 135 strike. I'm going to sell that at $3. You'll see this use about $1,000 in buying power. You have a total of 36 deltas, which is a little bit low. The delta on this option is 38. So if you were long stock short this call, you would be net 62 deltas versus me that I'm going to be at 36 deltas. So a little bit lower
delta exposure than the actual cover call would be, but I'm using 20% of the capital that you would use to be long the stock, short the call. In terms of my break even, you could see my extrinsic value on this position is basically 0, which means that my break even is right at where the stock is trading, so about 130 on this position. When we look at this on the risk profile here, so we go to the curve mode, we click this analysis button, you can see this sets up very much like a normal cover call. If we look at the at expiration, you have basically that cover call type risk profile above 135. There's no more profits to make. Your break even to the downside is going to be at 120 because you have that capped risk. You are synthetically long a put here because you don't have the physical shares. So a very capital efficient way to be long the stock for pretty decent amount of time. So we're going to put this on 1062, see if we get filled on this position. No fill there. Move this 1065. All right, so we're filled 1065. That puts us at break even right at the stock price. Our poor man's cover call. Closing order here coming up in Target. It's been just 1 week. The stock trading at 130 and change. It is now at 136, so we've had a 6-point rally. This was a perfect move, and it happened very, very quickly, so it's time to go on this position. So when we close this position out, we would be looking at buying back our January option, which is our 135 call, and then we would be selling to close the synthetic stock position, the 120 call we had in February. This is currently trading at 1290-ish, depending on where we got filled. It'd be somewhere around a $225 profit, depending on where we get filled. So let's try 1295. Not a whole lot to say for this one. I mean, just given the move that we've had in Target, that's why we're at this amount of profit. I mean, we had, a pretty sizable amount of long delta going into this. Let's go 1285 just to get filled. There we go. We got filled. $220 profit on this poor man's cover call. Synthetically long the stock, short the call, but much more capital efficient. As you can see, the $1,000 that we had to outlay at the beginning is much cheaper than buying 100 shares of stock. So nice trade for the poor man's cover call.
What's up, everyone, and welcome to the life cycle of a trade. We're going to take a look at 3 trades: an iron condor, a short put spread, and a call diagonal spread.
What's up, everyone? Today is a big day in the market. So you've got NVIDIA earnings after the close today. E-minis right now down 9 points. We've bounced all the way back. We're basically at highs here, just a skosh off the all-time highs here. For today, rather than going into NVIDIA directly, which I already have a position on, I'm going to go into SMH. SMH is the semiconductor ETF. It has a 22% weighting of NVIDIA within the ETF, so a very big portion of this ETF is going to be exposed to NVIDIA earnings after the close today, along with some of the other semiconductor stocks within the basket. So you will have some exposure. You will have some heightened volatility here. You can see IV rank is 69. It's pretty liquid. It's not the most liquid underlying. You can see it's 20 to 30 cents wide, which isn't bad for a $200 stock, but it's not exactly great. But it is liquid enough to trade, and I want to get a little bit of that exposure to some of the heightened volatility into NVIDIA earnings. So we're going to just do an iron condor here, try and sell some premium out of the money, try and capture some of that. We usually look for around a 20 delta on the short options, just to give you an idea of where that is. So we'll call it the 220 on the put side. On the call side, we'll say the 275. In terms of how much risk we typically allocate, I usually do 10, maybe 15 points wide in terms of the spreads on either side. That totally depends on your own risk tolerance. For me, I'm going to go $10 wide and just see what this trades at. It should trade somewhere around 1/3 the width of strikes. Here we go. It trades at about
$3.25 or so here, which is roughly 1/3 the width of the strikes. You can see it's a $6 or a $667 total risk, 660 some odd dollar buying power. You've got a 57% probability of success. When you collect 1/3 the width of the strikes, it usually sets you up with a 50 to 60% probability of success when you collect somewhere around that. Just to give you an idea of where our risk would be, so 220 and 275 are our short strikes, so it'd be roughly down here, and 275 would be basically at the highs on the upside. So just a delta neutral trade here, trying to play into that high implied volatility that we're seeing in the space, along with that binary event that we have after the close here. So I'm gonna put this in at 330, right at the mid price, see if we get filled. We can always cancel and replace that. There we go, 330 filled on our SMH Iron Condor. Next trade that we're going to look at is this SMH position. So we've had a nice vol contraction. We've had a little bit of a bounce, which is what we needed here. And this position has gone from $3 in $3.30 credit down to a mark of about $1.80. So about $150 profit. We'll see if we can get filled on that position. When I'm looking to get out of some of these positions, one of the key things that I look for is the long option. So when you're looking at your options, if the long option has no bid, meaning it's worthless, like if we were looking on the upside and we had a long option that was at, 330 or 335, that's a penny at 7 cents offer, those options are going to be very hard to fill because they're nearly worthless. So we don't have this problem here because all of these options have value. You can see there's a little bit wider of a mark here, so that might mean that this mark that we have currently, we might have to adjust the price up, or we probably will have to adjust the price up. But all these options have value, so not worried about getting out of this position altogether. So we'll try and get filled right here at the mid price, free up some capital, another key of managing positions. So there we go. We got out 183. $147 on that one, so that was a nice little trade. All right, so as you can see, we are very light on positions here. So looking to put on a couple trades today. I mean, one of the things that has really stuck out to me is this move in oil, all sorts of geopolitical stuff going on. You had OPEC talking about pulling back production and all sorts of stuff happening in the oil markets. Oil has dropped from the mid 70s or high 70s all the way down to, the 60 handle, which we haven't really seen for most of 2024. Oil futures themselves are very, very big contract. It's 1,000. The multiplier is 1,000. So for every point, if you were long or short the oil futures, it's $1,000. So it's a very, very big contract. And you can actually see the leverage that you get here is very, very significant. It only uses 10 grand or 9 grand here to be long or short the futures. Now, in this account, I certainly cannot do that because that is way too big of a position, but I can trade the options. So the options actually trade in the same notional as the futures, right? So a $100 or $1 option is really $1,000 in terms of value, in terms of credit that you're selling. A spread then, if you were to do a 1 point wide spread, is going to be notionally equivalent to $1,000. It's $1,000 per point. It's a 1 point wide spread. So when you're looking at this spread, a credit of 18 cents is $10 per point, or $10 per tick, I should say. So at $10 per tick, at an 18 cent or so credit, is going to equal $180 in terms of actual value. You can see here for this spread, and I just pulled this spread up, it's around a 20 delta. I'm actually gonna move it a little bit closer to get a little bit higher credit, but just for an example, when you look at this spread, max loss is going to be $800. Of course, that's the rest of the risk. If you're selling this at near 20 cents, it's going to be 80 cents of risk, which is $800, $20 in credit. The one interesting thing with futures is that you'll see that your buying power effect is actually going to be lesser than the max loss to start for that position. And this is because of span margin. So span margin allows extra relief on and is specific to futures contracts in that it calculates a risk based on a number of factors, from days till expiration. It incorporates volatility. It incorporates how close to at the money you are. So this will certainly change. We can even just pull up, just to give you an idea of like a closer at the money spread is going to use about $200 more in buying power just because it's closer at the money, it has a higher delta. The time aspect is the same because we're looking at the same expiration, but just to give you an idea of the risk here and the potential for changes in the buying power. It won't exceed that max risk though. So when you trade a spread in a futures contract, you will not go above your max risk parameters there in terms of your max loss. So for a spread, I'm going to take a little bit extra risk here, go around the 30 delta. I want to collect around 1/3 the width of the strikes. This is a little bit less here at $2 or at 25 cents or 26 cents, depending on where I get filled here. I want to get around that 1/3 the width of the strikes because it puts us at that 60 to 80% probability of success, depending on what your credit is. So we're going to see if we get filled here at 26 cents and work the order from there. It's a 65 strike for the short, 64 for the long. We're going 43 days out in time into the October 17th expiration. So we'll do this at 26 cents, see if we get filled here. No fill there. Of course, we can cancel and replace that. We'll go to 25, see if we get filled. We are in 25-cent credit, which is a $250 credit on the spread. It's got a width of $1, so our risk will be $750. Just playing for a little bit of a bounce in oil. All right, so we are having a fantastic morning in the Johnny Trader portfolio today. We've got E-mini S&P 500 futures up 90 points. You've got the NASDAQ up 475. The Dow's up significantly. The Russell's up significantly. Oil's up. It's been a great day for our trading. We did just have the rate cut decision that happened yesterday. Lots of volatility priced into that event. The market has responded significantly to the upside here. We've got a bunch of positions that we need to close out. And these positions, they haven't needed really any management to them. They've worked out since the beginning, and it's just time to start managing positions. When you are managing a portfolio, you want to get long into lower prices and short into higher prices. And as you get, in this case, a market rally and a lot of things start working in your favor, with short premium, you only have a certain amount of profit that you can make on your positions. You have capped profit potential. And as you get closer to expiration and as profits are on the table, you can only make so much more. So at a certain point, you have diminishing margins of return. So when we have these sort of moves in the market and we have a bunch of things work in our favor, instead of trying to get every last penny out of the positions, we tend to manage winners. And that's a key to what we do in our trading portfolio. So today we're going to manage winners. We're going to take off some delta exposure. We're going to take off some risk into what has been a fantastic morning here and couple weeks. So first position that we're looking at is actually a futures position that we put on in oil. So oil futures, it's been just a couple weeks here. I mean, we kind of painted the bottom here when we're looking at it. It was at about 70-ish. About 66, 68-ish. So we've had about a $2 rally in the oil futures. It's been exactly what we needed here. This put spread, it's out of the money. We had some long delta. The stock has gone up. We're going to take that long delta off. Again, this is getting short delta, so to speak, in that we are taking long delta off into an up move in the oil futures. It's exactly what you want to do. You want to take off long delta as you get that move higher. So we're going to try and get out of this for a 13-cent debit, which is actually would be a $130 debit because the multiplier here is 10
10 on the oil futures here. So a $13 debit is really $130 in value. This will net us out about a $120 profit depending on where we get filled here. Let's put it to 14 and see if we can just get filled here. Get this one off the table. We'll try 15 cents. There we go. So we got out for an even $100 profit. Nice little trade in the oil futures. We've had a couple of those recently. So nice little trade there. All right. So looking at one of the biggest stocks in the world, NVIDIA here. We've had some two-sided action in the markets. NASDAQ is down 40 here. You got the E-minis up to volatility futures, I should say, getting up to 19. It's near the high here over the last two sessions. We got into the 20-ish handle. Definitely been some volatility in the markets here. So NVIDIA has had all sorts of bad press over the last couple sessions after earnings. So you had earnings, it kind of opened inside the expected move. You had some weakness in the market to end the week. You had some weakness on Tuesday. You had this whole subpoena thing come out. NVIDIA has fallen all the way back down to 106. I think it's time to take a little bit of long delta here into this move. So one of the trades that I like to do to get a little bit of delta is a diagonal spread. And usually, if I'm doing a longer duration trade, I'll go somewhere for the 30 to 40 day for the short option, on the long option going somewhere around the 70-day expiration. If you wanted to do this shorter term, you certainly could do an October-September spread, but I'm looking to take this a little bit more duration and kind of play into giving myself a little bit more time to be right. So if I'm going to November here, I typically buy around a 40 delta option. So we'll call this the 115 strike, which it was trading at the start of yesterday. So it's had a big move to the downside. So the 40 delta is going to be our long delta, also our positive gamma position. In the October expiration, I'm going to sell around a 20 delta against it. So somewhere around the 120, 125-ish mark, something like that, to add a positive decay component and also to reduce the cost of the trade. I want to get these costs down to $500, $600, $700, which is what my risk tolerance is normally in this portfolio. So I'm looking at, because I got a little bit extra delta on this 115, I'm going to sell this 125. It sets it up for a $4.63 debit. When you look at this on the analysis mode, the curve, you can see that you have a pretty sizable potential profit if we do get back to, that 115 to 125 mark. We can even use the analysis mode to kind of simulate time, and you'll see how this risk profile changes as time passes. Even if you go all the way to the the October expiration, that'll basically simulate all of the premium coming out of this option because it would be expired here on October 18th. $2 and so of extrinsic value is what I would capture from that. If we did get a rally, this would all be intrinsic value. The extrinsic value in the short option would decay. You'd get the best of both worlds. Of course, you give up some of the profit potential if you explode higher, but I'm not worried about giving up the tail in exchange for getting some positive decay on my side, which is what I'm doing with that short option. So we're going to try and get filled here. 479 is what we'll route it at the mid price, or just a penny above the mid price here, and see if we get filled here. And there we go. We got filled. So we got filled on this call diagonal spread. We're long the 115 in November, short the 125 in October expiration. It leans about 20 deltas long-ish here into what has been a very steep drop in NVIDIA. So we'll see if we can get a bid in NVIDIA over the next couple weeks, manage this for $100 to $200 profit here. The next one we're going to look at is a big profit, a quick profit that we had in NVIDIA. We bought the dip in NVIDIA. This was trading
On the 4th is when we got into this position. You can see we got in right around the lows of 105-ish on that position. We can actually look at the market snapshots, give you a exact number, about 106.70-ish, 75-ish. So the stock has, with the rest of the market, moved significantly higher, and it's time to go for this position. This call diagonal spread, we were long the November call, the 115 strike call. We were short the 125 call. And just to give an idea of just the value of this call. So it's only been about 2 weeks, and this option, we originally sold it at $2.40 into what has been a very, very big rally in NVIDIA from 106 to almost 120 over the span of 2 weeks. This short call only cost us about $160 based on where it's marked now. So we get the question all the time of like, why not just buy the call, or why not just buy the put and play the other, play for that directional move? Had we not gone up $15 or $14 in 2 weeks, this option would have hedged us some. It would have hedged us $1, $2, depending on where the stock went. If it went lower, it would have hedged us to the downside. We would have saved $200 in value instead of losing that $200 in value. Here, into a rally, it's what we would call a high-class problem. We played the upside. We had a lot of long delta. We had positive gamma on our position. It was exactly what we needed for this position. And so it's a high-class problem in that instead of making $300 on the position or $400 on the position, I'm only making, instead of making $500, I'm only making $300 on this position. 75% return on capital. Huge, huge win. So, in hindsight, of course, did this impede some of my profit potential? Yes. If we had gone down, it would have been a blessing. It would have saved me $200. So, you can't play for the unknown of the future. We just trade what is there. We were buying the dip. We were hedging that dip buying with a short premium position in the shorter duration. It's exactly what we wanted to happen here. Got the bounce. Time to go here. Take a big win and pat yourself on the back. We're going to try and get $395 credit here. It'll put us at a 300 and change profit. No fill there. Put this down 2 pennies. And there we go. $7.95, we actually got price improved. $316 profit on that one. So we just took off $2,000 in buying power or more. We booked some winners of $500 or $600. A really nice day and couple weeks for us in the Johnny Trader portfolio. So just taking off some winners, managing some winners, managing our capital usage, getting rid of risk, and freeing up some capital to hopefully get into new opportunities sometimes next week. So hope you got in some of those good little trades, and we'll see if this can continue.
If you want to catch these trades live, tune in to Johnny Trades every Wednesday at 9:40 a.m. on Tasty Live. Peace.
What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind the trade entry, trade management, and the closing order. In this video, we are going to cover a short put spread. All right, so getting another trade on the board here. So one stock that has been absolutely hammered over the last couple sessions here is CrowdStrike. You obviously had the big news on some of the issues with their software update. I don't think it was a hack, but it was a big problem, obviously, and the stock has sold off significantly. I think this is an opportunity to play into some of the volatility. Of course, when you have this big move, volatility tends to expand, and volatility is an expression of the expected price movement in the underlying. Given that we've had such a big move, I think this is a little inflated moving forward. So I'm going to look and sell a put spread in September in CrowdStrike. So we typically like to sell somewhere around a 20-ish delta. I'm going to look at this 230 mark. It's right around the lows here of arguably the whole year. So if you go back to
the beginning of 2024, it was trading somewhere in the 250, 240-ish range. I think that's probably our bottom here. So I'm going to look at the 230 strike. Again, I'm going to go about $10 wide here. So I like to put on about $700 to $800 in total risk when I'm using my positions in this portfolio. So I'm going to look to sell this $10 wide spread. You can see it's got about a 70% probability of success. That's because we're selling roughly a 20 delta short option, and it trades at a little less than 1/3 the width of the strikes, which is what we target when we are selling a spread here. So we're going to route this here at 223, see if we get filled. No fill there, even into the down move, which should help with our fills here. We'll move this down to 220. No fill there. Markets are a little wide. This is a volatile stock, high price stock, so it's not uncommon to have to adjust some of these spreads here. There we go. We got filled at 215 as we were adjusting the prices. Stock down ticked a little bit, which helped because we are getting long delta here. So we are getting bailed out today, and the last couple weeks with this price action and CrowdStrike, we've got the E-mini S&P 500 futures up 50 points. They've had a V-bottom bounce back rally here. We sold this put spread in CrowdStrike, which has been all over the news for the problems that they had with their update and all sorts of bad stuff going on here. We tried to catch a falling knife, and unfortunately, when we put this position on, the stock was trading at 269. It got as low as 200 over the last 2 weeks or so. So we put this trade on the 24th here. It seemed like it was going to be a bottom spot here. It's rallied all the way back to that point. We went from 264 all the way down to 200, back to 262 here. Getting bailed out on this put spread that is now right at them, or a little bit out of the money, I should say, but is right at a scratch or so from when we put this position on. Now, you still have very high implied volatility, and we're kind of getting bailed out on this price action. So for me, I'm looking to turn this position into a more neutral position. I'm still going to stay in it. Volatility is still very, very high. We got an out of the money position, so I'm comfortable holding that risk. But I think given the price action, it's time to put a little bit of a hedge on it in terms of some short delta and some short premium to take advantage of some of that volatility. So you can see we've got about a 20-ish short delta put and a 16 delta long put. I'm going to do somewhere around the same thing on the upside. So that would put us at like the 310, 320 call spread. When we look at that on the chart here, that puts us at risk somewhere above this big gap, right? So I'm okay with taking risk there. I would expect to see a little bit of a vol contraction if that does happen too. So, and a passage of time, because that's not going to happen this afternoon. At least I don't think it's going to. So I'm going to look to sell this at about $1.40. This will put us at a net $3.50 or 60-cent credit here, which is 1/3 the width of the strikes. It's exactly what we look for on entry with an Iron Condor. But I'm really just trying to take advantage of this huge move that we've had in CrowdStrike. So let's see if we can get filled above the mid price here. We'll put it at 140, which is a little bit above the mid price here, and work our order from there. So no fill at 140. We'll put this down to 138. I'm going to try and get a penny above the mid. There we go. So we sold this at 138. So we've now got a total credit of 353 on this position. It's currently marked at 337, 340-ish. So I'm up 10, 15 cents on the trade, net. Nothing really huge, but just trying to make an adjustment to this position, turn it into a more neutral delta position, and capture some of that high implied volatility that we're seeing. Things are working out for our CrowdStrike position. So we've stayed kind of range bound in this range. So we actually haven't made or lost anything on this call spread, but it did provide us a little bit of protection if the stock did come down a little bit further. So The iron condor, as it stands now, is currently marked at about a $73 profit. Now, it's a little bit less than what I would typically target. I typically look to get about $100 out of a $3 Y or a $3 credit position. $3.53 is my net credit on this whole position. But I did sell the original put spread at $2. So, 75 cents or so would be about, 1/3 of that, about 30% of the max profit from the original position. But the stock does have earnings coming up. So you can see earnings are on the 28th, which is the middle of this week. The stock, obviously very volatile. It has moved significantly in both directions. I think rather than holding it through a binary event like earnings, I'd rather just take the money and run. So I'm going to take the money and run and see if we can get filled on a position here or a closing order here for a couple bucks. So when we're closing out of the positions, you right click on the ask price for your short option. So you're buying to close, you're selling to close on the long option, which is on the bid. Same thing on the upside. We're buying to close the short, selling to close the long option here. From our order chains, you can see we're making a couple bucks on this little bit of a move lower here on the call spread. But altogether, it should be somewhere around a 70-cent profit. Let's see if we can get filled at exactly 70 cents, which would be a 283 debit, which would put us at a $70 profit. No fill there. We'll go cancel and replace. Move this up to 285. And there's our fill. So we got filled at 285 on this iron condor. You can see once you route the trades together, they were in two separate chains. The chains come together. That's on the Tastytrade platform. It's a great feature. So it chains both those orders together because we closed them together. You can see I made $68 on this. I sold the original put spread at $2.15, sold the call spread at $1.38, and closed it out today $2.85 debit for a $68 profit. Nice little trade. Avoiding earnings was the key to this one. If you want to catch these trades live, tune in to Johnny Trades every Wednesday at 9:40 a.m. on Tasty Live. Peace.
Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade adjustments, and closing order. In this video, I'm going to show you how to turn a broken wing butterfly into a risk-free butterfly.
I'm looking at Tesla. It's tough to participate in such a move that we've had. So I'm looking at a broken wing butterfly on the upside. This does go into earnings, but it's a pretty wide butterfly out in the August expiration. All
right.
Buying the 260, selling two of the 275s and buying one of the 300s. Tesla's all-time high or at least 52-week high is right around 300. That's where your break even is here, or that's where your max risk is. 290 is your break even here. So if you're kind of playing for maybe a grind higher or sideways or no movement, this is kind of a play on that.
What's up, everyone? We've got an adjustment to make today here in our Tesla position. So we had a broken wing butterfly. You can see our biggest profit potential would be to the upside into earnings. The stock coincidentally went significantly lower, down $27 here. We have no risk to the downside. Our trade was a broken wing butterfly at a 15-cent credit, so very small credit. We could close the position right now for about 30 cents, which would be a total net profit of $44 here. But I'm going to make a little bit of an adjustment here that will give us a lottery ticket type position here. So you can see the risk profile here on a broken wing butterfly. We are long this call spread, so we are long the 260, 275 call spread, and we are short the 275, 300 call spread. So we're short a wider call spread. If we can buy in the risk where it starts here at about 190, if we could buy in that risk, we'll have a risk-free position here. So what we do for this adjustment, so we go to the August expiration, and from here, we have this $15 wide call spread. which means that we have risk after $15 above this short call that is part of our short call spread. So if we can buy this 290 and sell out of this 300 for a debit less than our original credit, which was 15 cents, we can have an equal with butterfly that we legged into here via these transactions on for a net credit. And this spread is a debit spread for a credit is what our net position will be. So here, if we can fill this somewhere around 15 cents or less, it'll give us back our buying power, which takes off the risk, the $1,000 or so in risk, and gives us this 260, 275, 290 risk-free butterfly. Now, this butterfly will hold some sort of value, which means that we are leaving money on the table, but it gives us a potential to realize up to $1,500 in max profit if the stock does bounce back to 275. Of course, very low probability of that happening, but a very high potential reward if it does. So we're going to route this order and see if we can get filled here at 11 cents. If we can't, of course, we can adjust this order. So there we go. So we got filled at 12 cents, which means that we have this risk-free butterfly, and we could show this on the analysis mode here, that will have no potential loss on it in terms of our capital at risk originally, but gives us a potential to make up to $1,500 if we do get a move higher to 275. If we do get a bounce, let's say to 240 or 250, this butterfly is going to hold some sort of value. It might trade at $1 or $2. So we have the potential to make a lot of profit on this position with a little bit of an up move in Tesla from where it's trading currently. We unfortunately didn't hit our lottery ticket, but it was a scratch trade nonetheless. This Tesla free butterfly that we legged into, if you remember, we did this on July 3rd, which was right around here when the stock was trading at 230, 240-ish. Let's see exactly where it was. 238, 39-ish here when we put this trade on. Now, again, with the butterfly, you have risk to the upside in this situation with a call butterfly. So the stock went up, which is sort of good for the position because you want to get to 275. You just want it to happen kind of towards expiration. We get this move higher in Tesla. It then falls out of bed and falls all the way down to 200-ish for our which worked well for our adjustment. So our adjustment was to buy in that risk. So when we were looking at the spread again, we have a $15 wide long spread, $25 wide short spread, which means that we have $1,000 in risk. If we can buy in that risk for less than the initial credit, we have an equal with butterfly on for free. So that's what we did in this situation. You can see if we go to the market snapshots again, the price of Tesla on the 24th got all the way down to 218, 219, and 219.21 to be exact. At that point, we were able to buy in that $10 of risk. So we sold out of that 300 strike call, bought the 290 call, and did that for a 12-cent debit. So that leaves us with the 260, 275, 290 butterfly with the stock trading at 219-ish. On for a 3-cent net credit. So we have this equal with butterfly on for a credit, meaning we have no principal risk on the position. At that point, we had about 3 weeks-ish to get a move up to around 260 to realize some added value on that position, right? We actually did get that move to some degree up to 220-ish, around 220-ish to the upside. We didn't get as much as we needed to the upside to realize any value. So that spread, that butterfly, ended up expiring last week on Friday for the monthly expiration for August. So it expired worthless, which means we didn't
capture any additional profit, but we also didn't lose anything on the trade. The trade ends up being basically a scratch, a net profit of $3. We'll consider that a green scratch of sorts, basically just a small nothing trade. But we had a small probability of hitting a very high profit potential because we bought in that risk. We had a 5 to 10% probability of hitting somewhere between $0 and $1,500 of max value. We ended up not hitting that mark. The stock did not go high enough, and we ended up getting rid of that position just via the options expiring worthless and ending up being just a small $3 profit.
If you want to catch these trades live, tune in to Johnny Trades every Wednesday at 9:40 a.m. on Tasty Live. Peace. What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade adjustments, and closing order. In this video, we are going to cover an iron condor. What's up, everybody? We've got some trades for this next little session here. E-mini S&P 500 futures down 62 points here. Big sell-off. NASDAQ down 370. I think it's time to put on sort of a core position here with a iron condor in SPY. So SPY, one of the major indices, of course, the biggest one of the group, trades at 547 right now. When we look at the chart, it's had a significant sell-off here, back down to kind of the range that it's been trading in since around June. Volatility has upticked significantly. You can see volatility futures at 1565. I think it's time to put on an iron condor. So we're going to go into the trade page here, go to the 58-day expiration. So we're going into September. It's a little bit longer duration than I typically like to do, but given that we've had a little bit of a down move and a pop in volatility, I think it's time to take advantage of that. So typically we go somewhere around the 20-ish delta for those short options. I'm going to look here at, let's call it the 525 just for a sort of round number. As for the spread width, I typically like to go to about $10 wide here. So I would go and buy the 515. On the upside, we're going to do that same sort of exercise here, go to around a 20 delta. Let's call it the 570 here. And then I'm going to go $10 wide to the 580. You can see it's going to trade right around 1/3 the width of the strikes. This is typical for this duration when you're in the 40 to 60 day time frame. If you're selling around a 20 delta for the short options, going $5, $10, $15, $20 wide, you'll typically get about 1/3 the width of the strikes, which sets you up with around a 50 to 60% probability of success. So we're going to sit here with this spread. We'll go in around the mid price of 341. We'll see if we get filled. And of course, we can cancel and replace as needed. We'll go down to 340. All right, another penny here. And there we go. We got filled at 339. That'll be our iron condor, $10 wide. We're going out into the September expiration. All right, so we got to make an adjustment here in our SPY position. So we've got volatility exploding here into what has been a huge move in the market. The volatility futures at 2128. You've got the E-minis down 120 points here. A big move in the market as a whole. So we have a position on an SPY. It's an iron condor that we put on the 24th. So it's been about a week, and this spread hasn't moved a whole lot. And that's because of this massive pop in volatility that we've had. So we've got this position that's now a little bit tested on the downside. But the real thing that I want to take advantage of today is this pop in volatility. The volatility, VIX itself sitting at 26. It got into the 30 handle earlier today. I think you got to do something in terms of rolling calls down. And the reason we want to do that is because even if you get the bounce back, that whipsaw type move, it tends to come with a volatility contraction. And when you're talking about a VIX at 25 to 30-ish range, it doesn't get much higher than that normally. Of course, it can get higher. You can see big moves to the downsides in terms of, crash scenarios or like COVID, stuff like that, where you get those massive moves to the downside. But for all intents and purposes, 30 VIX is a very high point. So for me, I've freed up some capital on my short delta GE position, and I'm willing to put a little bit more capital at risk here into this adjustment. So what I'm going to do here is I'm going to roll down the call, and I'm just going to roll this down naked. So this is going to be a much wider spread now. It's going to be a 20-point wide spread, and I'm going to use the $800 that I took off from my GE position to finance this buying power here. And again, the reason I'm making this adjustment is because I want to capture some of that volatility into this move. So I'm going to roll down from the 570 to the 560 here, pick up a little bit of delta into this adjustment. If you wanted to, you could go and buy a call here to reduce some of that risk and reduce some of the buying power that you're using here. You could buy something like the 575 and make it a 15-point wide spread as opposed to the 20-point wide spread. But I'm going to go with just the roll down here. I'm going to do this at $2 or just under $2, 191 here. See if I can get filled here and pick up a little bit of short delta into this move. Filled at 190, so 191. So I did the original trade at 339. I've got $1.91 in credit on this roll down. I've now got a much wider call spread relative to the put spread. I've got a total premium of $5.30. I'm using about $1,500 in buying power on this position, which is more risk on the upside. This spread has a lot more volatility exposure than the original spread because of how wide that call spread is, which should help me if there is a little bit of a bounce here and a little bit of a contraction in volatility. What's up, everyone? We've got an absolutely wild market right now. E-mini S&P 500 futures down 154. They were down 250 at one point today. You can see this bar today. Absolutely wild on the E-minis and the market as a whole. It's been a swift sell-off here with a massive pop in volatility. VIX hitting the 30 mark, getting even up close to the 40 mark today. So we've got a couple positions that we got to take a look at. One position in particular, our SPY Iron Condor. Now with the move today, this roll has helped us significantly. And with this pop in volatility, it's helping this whole position, even though it's fully or close to fully in the money. So you can see these markets are very, very wide, and we're going to try and close this out and maybe take a 90-cent profit on this. 440 is where I'm thinking we'll get filled. We'll see if that happens in practice here, but we've got this $10 wide put spread and our wider 20-point wide call spread that has gone to trading about $1 here overnight. So let's see if we can route this order. And with markets like this, with volatility really exploding, big price movements, you can see the market is moving 5-10 handles a clip. I tend to go well below the mid price because you never know where you're going to get filled when these markets are this wide. SPY typically has penny wide markets. In times of volatility, those are going to widen out, especially because we've got the markets moving so significantly. So let's route this at 420, and we're going to work our way up and see where we get filled here. So no fill at 420. We'll move this up another 5 cents, 425. No fill there. 430. No fill there. You can see the market selling off a little bit, which is going against our position, making this position more expensive to buy back. 435. No fill there. Let's see if we can get hit at 440. That was where I thought we would get filled. Nope. 445. No fill there. Let's see if we get filled at 450. Nothing there. Wow. You can see these markets are moving significantly, and this actually has some long delta. So an up move would help us on this fill. We're actually seeing about a 10-point down move from when we originally started this little exercise. 455, we'll see if we can get 75 cents out of this. There we go. We got a fill on that, 445 on that. We actually got price improved to 450. And again, this is live action price, trying to work price here and get filled on a position. $4.50 into a massive down move here in the market. That put spread was 5-10 points in the money, but because of how high volatility has gotten, the extrinsic value in that at the money put spread really buffered that loss to the downside, and hence why that position was ended up being an $80 profit, which you would not expect into what this market has been looking like today. So closing that one out, that iron condor after a roll down for a small $80 profit, but a decent profit into a position that you would think would be a terrible position at this point. So good trade. That was a crazy one, crazy market. Just stay small always. Manage positions when you can. Work your prices there, and take the market as it comes. So we'll see you on the next trade.
If you want to catch these trades live, tune in to Johnny Trades every Wednesday at 9:40 a.m. on Tasty Live. Peace. What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade adjustments, and closing order. In this video, we are going to cover an iron fly. I'm looking at a trade that I don't do a ton of, and it's because it's a very slow moving trade, but you really need to be a high volatility underlying for this sort of trade. I'm looking at Palantir, and I'm thinking maybe an iron fly sets up nicely here. So if you look at Palantir, it's a stock that has absolutely exploded to the upside. It's very much has had a lot of social buzz to it, to say the least. I'm looking at this implied volatility of almost 70% implied volatility when you get into the earnings expiration, which is out in February. You got in the 80 handle implied volatility, so very high implied volatility. Stock has come down a tiny bit, and the biggest issue here for this stock is that it's got a little bit higher margin requirement because of how high that volatility is. If you were to do a strangle here naked, it would use about $2,500 in buying power, which is too big of a position for my account. So for me, I'm going to look to do an iron fly, which is a straddle right at the money, the 70 strike straddle. You can see there's a big credit of $10 and change, but uses a lot of buying power. And then we're going to buy the wings just to cap the amount of buying power that we're using here. We're going to want to reduce this down to, somewhere around $1,000, maybe a little bit less than $1,000 here. So I'm going to go here. I'm going to buy 15-point wide wings. So we're going to look at the 55 strike for the long option on the put side, and we're going to go to the 85 on the call side. You'll see this sets up with a pop that's 42%, and that's because you're buying those wings. Your risk profile is within the expected move here, so it's a lower probability trade, but you're playing into what is a 60 IV rank and almost a 70% implied volatility. So you have a lot of volatility baked into this position. To give you some context, if this underlying were to see a 5 or 10 point drop in volatility, this spread would certainly be profitable, assuming that the stock stays somewhere around this mark here, somewhere inside the expected move, which you would expect if you get a volatility contraction. So we're going to route this at an $8.52 credit. We'll see if we get filled here for this kind of 50-50 high vol play that we're looking for in Palantir. We'll do it at here. Those markets are moving, so I'm gonna move this to 845. See if we get filled a penny above mid price. We actually got price improved to 856 on this iron fly. So we're looking for a move between 60 and 80 over the next 37 days for this to be profitable. We'll see if that happens, but stick around because we're gonna do some management on this trade.
we've had some two-sided action. The stock has gone from, the 70 handle up to 85. We're back to 75 here. So we've gone $5 in the money on the call side. Of course, no problem with assignment here. Lots of extrinsic value in a stock like this, a high volatility stock, moving stock, a stock that moves a lot day to day. So no issues there. We do have 15 days to go till expiration, which is getting down to the last part of the expiration. You can see we've got about $3 of extrinsic value on this position. The way we can look at that is just by taking the put strike, which is, let's call it about $1.30-ish, and then the in the money call strike is actually going to have the same amount of extrinsic value as that out of the money put. So $2.50 or 60 cents is what I have left to make on this position if the stock stays right where it is. And the stock has actually rallied significantly in the last hour or so. When I was looking at this position, you could see we moved from 73 to 75. I'm looking at my P&L values, and we were looking at about $120 profit at the early part of the session this morning, but that has since eroded a little bit, but still doesn't take away from the message here. So anyway, with 15 days to go till expiration, the decision now is to either close the position or roll into either the same position in the further out expiration or a new position. You could go to do multiple different things here. For me, I think it's just a close, take some money and run on this position. It's one that when we got up to 85, which was basically the high of the year, 84.80, this was a losing position. Now we've had a little bit of a pullback. We're making some money on the position. I think it's time to just take the profits and move on to another position. So to close out of this position, one of the things that I make sure I look at is to make sure there's a bid and an ask on the long options. If there isn't, you want to just remove those options from the closing order because they have no value, but there is value in these, about 8 or 9 cents on the downside. So if we can get filled here for a little bit less than the mid price, let's see if we can get 85-cent profit here, which would be $7.61 fill price on this. Don't fill there. Go up to 65. We'll fill there, and you'll see that within the money options, there we go. We got filled as we were talking, but in the money options, you'll see your bid-ask spread be much wider than the out of the money options, and thus, it makes it hard to fill. You might have to adjust the price a little bit above or below the mid price, depending on if you're buying or selling. So anyway, we routed that closing order, $7.65 debit, nets us out an $81 profit. But really the key here was that we had a little bit of a sideways move here, or at least ended up as a sideways move throughout the duration of the trade.
Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade adjustments, and closing order. In this video, I'm going to show you how to place a synthetic covered call.
All right, so today we're going to take a look at Intel. We've got the E-mini S&P 500 futures up almost 100 points here. Nice little rally after PPI and CPI. We've done a couple synthetic long stock positions, covered calls and whatnot. I think today we could expand on that again with an in-the-money short put. An in-the-money short put is synthetically the same as a covered call. So when you sell a put that is in the money, that delta, the 64 delta, is the same that you would have if you were long stock and short the call. And we could see this on the analysis mode when we go and take a look at the risk profile. When you do a covered call, you're long stock, so you have risk all the way to zero, and you have capped upside via wherever that call is. So the same risk profile would exist if you are long the stock and short the 21 strike call. Now you can see the position uses about $385 in buying power. This is in a margin account, so you get extra leverage, which is great if you're okay with the risk to the downside. Just to show you what the difference would be, so if you are long the stock, and then if we go to the table here, we sell the 21 strike call at 90 cents, you're going to use almost $881 in buying power. Now, when we go look at this risk profile again, you can see it's the same exact thing as we had with that short put. You have a capped
upside potential above where the short put was, here above where the short call is. The same amount of risk to the downside as you would with a covered call. Has the same amount of risk on the position. Has the same amount of reward because you're selling the same amount of extrinsic value. The short call is going to have the same amount of extrinsic value as the in-the-money put, and it'll act exactly like a covered call. This selling the put allows you as well to wheel into the stock. So if you want to buy shares of the stock, this will be synthetically shares of stock at expiration with a nice basis reduction here of about 90 cents. So we're going to go ahead and place this order. We're going to do a synthetic covered call, an in-the-money short put. We're going to drop it down to 243 here. All right, so we got filled at 243. That puts us at about 90 cents or so in extrinsic value that we can capture to the upside. If the put expires out of the money, we can make up to $243. That's the credit we sold it for if it expires out of the money. You want to stick around, though, because we're going to manage this along the way. All right, we've got a quick one to manage here. Our Intel in-the-money short put synthetic cover call position. E-minis are up 32. We had a great entry on this Intel position. Obviously didn't plan that out, but it happened very quickly, so perfect for us. We traded this on the 15th, so it's basically marked the low or near the low of where Intel was trading. When we were looking at the trade, it was a synthetic cover call. So an in-the-money short put is the same as being long the stock and short that same strike call. So our position when the stock was trading about 19, selling the 21 strike in-the-money put, was synthetically long stock and short the 21 strike call. Same exact risk profile. Same exact max profit, max loss, everything is the same. The benefit in a margin account to this sort of trade is that you get some added leverage with the in-the-money short put. So short options and options in general are generally margined to about 20%-ish of whatever the notional value is. So the 21 strike in-the-money put would be margined at somewhere around $300, $400, $500. If you buy stock, you're margined at 50% of the notional value of that stock. So the stock trading at $20-ish would use about $1,000 in capital just to be long that stock. So we had the same risk profile as a cover call, but at about half the upfront cost to hold that position. And that's really the biggest benefit to this sort of strategy. Now, we got this very quick move. We had this short put. It's now out of the money. We sold this at $2.43. It's now trading at $1.13. We had a really nice move on some news or potential takeover, rally in the market. Who cares what the news is? This position is a nice profit, so we're going to take our money and run here and free up that capital. So we're going to route this at $1.13. Not much more to say. It was a good trade. It's time to go on this position. So there it is, $1.14, $129 profit on about $400 in buying power. So a really, really nice return on capital there over just a couple of days. Perfect trade. Take the money and run when it comes to you.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tastytrade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know, it's time for the last call. Last call of the week, Sosnoff. Last call and maybe the first call for alcohol. Even the S&P's down 100, Sosnoff. No new records in SPY today. NASDAQ down 440 and change. That's almost a 2% move. There you go, 2%. Russell down 2.5%. Even the S&P down 1.5%. The Dow down 1.5%. Volatility down $1.30, Sadnoff. Bonds up $1.30. Bonds up 102, up also 102. Bitcoin down $3,700 to 95.7, a $5,000 range from over 100 to just over 95,000 where it sits right now. Oil down $2.21, flirted with going under $70. It's just a tick away from its lows at 70.25. It's 70.28. The only thing that didn't go down south, and I can use it a little bit lower, is gold. Gold only down $5.90, a small muted move there. Silver with a 51-cent move. That's a 1.5% move. Nat gas bucking all the downturns with an upturn back to 4.17, but off its highs of 4.31. Euro got a little bit weaker, but really the non-event. Today was all about the downside, Sadnoff, and it was all about the high-flying stocks too. It started off with UNH, which was lower by about $30, Sadnoff, $25 to $30. It's only down $37 right now. It was down about $60 at one time. Carvana down 21, Netflix down 20, Coin taking it out to the woodshed, down 20. Coin had a $32 range today. Coin was actually over 265. It's 236. Tesla down 17. Your beloved Adobe down 11. Reddit down 10. All the popular names that you trade in the NASDAQ are there. And the few buckers that we have are all Chinese stocks. So early on, they were bullish, and they still are. Baba up almost $8. PDD up around $7. And Baidu up around $2 and change. That's all I got, Sadnoff. What a day.
Well, actually, I thought Coinbase was the most interesting because I don't have a position on in there because the Ivy rank got down into almost single digits, so we covered the other day. But,
I believe it was single digits, like low single digits, like 4, 5, 6, something like that. Yeah.
I don't know what it is right now. I'm not looking at it, but
it's 27 that I got.
So this morning there was the U.S. government essentially. Well, I shouldn't say the U.S. government. I think it was the CFTC dropped their whole kind of investigation. The stock was up like $17 pre-market, then up about $13, then about 10. But I guess my point is that on that news, you kind of had to, if you were short it, you kind of had to cover thinking that, it's going to be clear sailing for Coinbase. And I think down 20 today, I think that was the biggest whipsaw. That was the biggest whipsaw out there. That was brutal. That was a brutal whipsaw. I mean, Meta was up like $5-6 this morning, and they turned it around, and now it's down 11. That's a nice little fall from grace. Meta's almost down $80 for the week. last weekend on Sunday night, we did a show, and we talked about how this is traditionally one of the weakest weeks of the year. And it didn't play out that way. We said early in the week it'd probably be strong, late in the week it'd probably be weak, not even actually knowing it would play out that way. But it did play out that way. In the early part of the week, the market just looked good, like it didn't want to go down. And then late in the week, they just, Dewey, whack 'em and how yesterday and today. Some of the stocks are getting back down to levels that are very interesting here. I mean, Coinbase, yeah, sure, being one of them, Tesla being another one. But the other stock there's two stocks on my screen that were buckers today. One is a stock that's on its butt, which is Moderna, and it finally upticked a little bit, so it's nothing. And the other one was Apple. It's the only one of the big name stocks that refused to go down today. Apple's up like a couple pennies, but it's up. Other than that, there was some pretty decent sized moves today. Like the VIX one day today is up to 18. The VIX itself VIX is up almost $3 today, which is, well over, let's say it's a 15% move at least.
And VIX and / VX is up 8% or so, and it really hasn't downticked. It downticked one little time around $18 or so when E-mini S&Ps were down around 60 or something like that. And I really thought that was the end of the down move for the day. I mean, I was wrong by 40, 50 handles.
They didn't really rally at all today, not even once. Nope. And every time they even upticked like a couple of, maybe a couple of ticks, they just smacked them right back down. And everything got a little bit ugly today. And it is expiration Friday. So you have to be careful if you have expiring February options on, because you might have something that's like in between, I don't know. But you might have thought, you were safe, and it's definitely not going to be a call exercise. So
no, it's not.
Yeah,
no,
it's not going to be a call problem. But some of the stocks that have been kind of strong lately, especially after earnings, like DraftKings and like PA&W and Costco. I mean, they're not really Costco, but just a bunch of other stocks that have been super strong as of late, like SCMI.
Palantir down $5 or so.
I mean, Taiwan Semiconductor, SMCI, MU back under 100. It looked like it was going to the moon. I mean, and then you can go, Reddit's dropped from, I want to say 230 down to 165 or something like that. You're
right, Sadnuf, all in the last 2 weeks.
Yeah, Coinbase back to 235. I mean, that stock looked like it was on a fast track to 350, and then MSTR, down to 300. To me, when you look around when you kind of just look around and you think about like, where's the biggest risk here? Like what's got the crazy risk? I still say it's MSTR in the sense that, I don't know what's holding that stock up. Like that's a house of cards. That stock can drop $100, and all it does is bring the 33 or 35% premium back into line, over Bitcoin. I don't know. Everything else today was an ugly one. I don't think they saved really pretty much anything. And like you said, this was a NASDAQ, kind of rip your heart out day.
NASDAQ shellacking. I mean, 2% is 2%. So the 460 points is 460 points. 100 handles on the E-mini S&Ps is 100 handles. I mean, this is a significant move. I mean, and I don't think I get it. I mean, we were just off highs. I mean, we had just made new highs. So, I mean, 2% off of highs, does that mean anything? 3% off of highs, does it mean anything? No, but it is significant in a day.
And I'm going to tell you something. There is nothing in today's tape action, nothing that leads me to think that, this is the low. Like, this is not the kind of, today is not the kind of day where they didn't have an uptick all day that gets you to think, man, like you got to buy them here. You got to close your eyes. This is a gift from the gods. I'm not sensing that at all. It is heavy buying today, but it is expiration. So you got to take it. I don't know. Just
take everything into consideration.
take everything in consideration. This is the 9th time or 10th time out of 12 times or 9 times out of 11 times that we've been down ugly on this day. So it's not that strange. And usually there's, end of February into early March, never really like a, this is a rollover time for the market. 2000, it's kind of a tone change time. 2000, 2008, 2009, it's happened many times. 2020, 2021. This is a pretty kind of critical juncture for the market.
Now you're just naming years, okay? You're not giving me any
2022, 2023, 2024, 2025.
No, I gotta stop you here. You went down a rabbit hole there.
2026, 2027, 3031.
Right. Hike.
1957.
I will say this: doesn't matter bullish or bearish. Volatility is expanded by 8%, and you did not take out the weekend today. So,
no. Can I give you an example of something that's crazy? Sure. Volatility expansion. So I'm short skewed strangles, a lot of extra puts as opposed to calls in Moderna. Okay, MNRA, and all day in there, I'm getting killed, and I'm long Delta. The stock's up.
And I was gonna say, and Moderna's up $1.50.
Right. I'm long KWeb, a Chinese, stock that's up $1. It's up $1.02 today. I'm long that stock. I'm down money just because I'm short premium.
Yeah, volatility is expanding across the board. Big vol expansion everywhere.
Yeah, right. That's what I'm saying. So there's not like, for the second straight day. First of all, are there earnings plays for Monday? Yeah.
No, it's like Domino's Pizza or something like that.
Okay.
Nothing you're gonna trade.
Because the earnings plays the last couple of days have been really good to us, but we'll leave it there. Don't forget we have a show on Sunday night at 4:55. Victor, myself, Pete, Ilya, and that's it. Pete, Ilya, Victor, and myself on Sunday night at 4:55. So if you have an opportunity to tune in, we should be pretty busy. This kind of move down 100 plus S&P points, down 450 Nasdaq points without a rally, and down almost 800 Dow points, and then even the Russell, which had shown signs of maybe a little bit of hope. Goldman Sachs this morning, after being down big yesterday, was up this morning a couple bucks, and JP Morgan, because you talked about this morning, was up a couple bucks. They both turned south.
They sure did. Yeah. There's been some rumors going around about Bitcoin and why it's having this big move down. Down
$3,000. It's nothing.
I know, but one of these crypto exchanges like Bybite or something like that got hacked or something, and
I don't know.
That's what people have been sending me.
I don't know.
Yeah, and that's why the crypto's been turned around and got weak. So I don't know.
I want to thank people for not sending that to me.
or maybe it's the Epstein files being released. Odd enough, and everybody's trying to unload their stocks and try to flee the country or something like that.
Can you please not send me the Epstein files either? I don't need to see the Epstein files. I'm already. I can only imagine what they can do with AI and the Epstein files at this point. It should be pretty funny. I'll wait for the Saturday Night Live skit on the Epstein files at this point.
That's where you get all your good news.
Yeah. I'll wait for that. But
and so you shall.
I do think that a little sell-off here in some of these stocks and a pump up in volatility is good for trading. I also really like the bond move. Now I'm out at 116. You remember like 2 days ago we were 113.
Yeah, no, it was a quick move from 116 to 113. You're 100% correct. It was just a few days ago. I don't know, 4 or 5 trading days.
116, 113, back to 116. 2 days.
A good round trip. Yeah, good round trip.
Yeah,
2 weeks or whatever. Yep.
So that's all good. And this is the first time they've really sat on them on the close in a while. We had some down moves, but they kind of brought them back on the close. That I don't think you're going to buy them here, hoping they're going to come back on this close today.
Yeah. It's funny you mentioned that because even the S&Ps were just down like 110 or something like that, and they rallied to only down 199 or something like that. And it looked like, maybe you're going to get that kind of little rally about 5, 7, 10 minutes ago. And it was quickly met by sellers again. Here we are down back near the lows.
Well, I don't blame people. They don't want to go home long over the weekend, and I'm part of that crew. I don't want to be long. I'm probably going to sell a little bit into the close here tonight. My
Taiwanese sources said I only have to do one thing. If I do anything on this show right now, I have to ask the question.
What?
Is today day one?
You're just making that up, or you don't have a Taiwanese source. You just have one person that is probably very bullish. You have probably one person that's very, very bullish for whatever reason, or stuck long, that wants me to say this is day one so that the market rallies on Monday. I know your little game, but this is day two. Yesterday was day one.
Wow.
Yeah. Yesterday was day one. This is day two. And usually it goes 1, 2, 3 is kind of a toss-up, but 4 and 5 are the rough ones. So maybe Tuesday, Wednesday of next week.
Mm-hmm.
Down Monday morning, maybe a little bit of a rally, and then do we whack them and how for a couple of days? I think there's more to this than maybe people are, listen, it's been so long since anybody's seen a couple of down days back to back that why would you think that?
Okay, true. I'll give you the other side. I mean, where the E-mini S&Ps start the year somewhere, I don't know,
59.
59. So we're up 130 handles. The Nasdaq is up 500 handles. I know it gave back 50% today. It was up 4% for the year. Now it's only up 2%.
Yeah.
So what?
Yeah.
I mean, that's the other side. Two days ago, yesterday, we were talking about new highs.
I said it's good for business. It's good for trading. I mean, I don't want things. I hate buying things on their high. If you want to buy things, I'd rather buy them 5 or 10% lower. And we're not 10% lower yet, but rather buy some of these stocks are 10% lower.
No, we're only 2% higher instead of 4% higher. We're not 10% lower on anything.
Well, we are on some things.
Volatility is up. I will give you that. You can see that big green bar basically going back to the beginning of February when we were having some good volatility. I wonder what skew will be like today on the close, tomorrow on the opening.
Oof, skew ugly. You ugly.
Mm-hmm.
Yeah, and you skew volatility on volatility. I don't know where that's trading or either, but those are all interesting things to look at. I think it's going to make for an interesting weekend. There's going to be a lot of chatter out there.
VVIX is 107, up about 12% or so.
Yeah, I think that the one of the things that really helped a new administration is a bull market, because that kind of validates what you're doing. And I think that,
well, it doesn't make you look bad.
That's right. It doesn't make you look bad. And so, it's hard for critics to say things are bad when the market's at all-time highs. And, that's obviously what this administration wants, is higher prices, not lower prices. So I think they're going to be careful here and not do anything to rock the markets. That's for sure. At least I wouldn't.
I agree.
Yeah. But anyway, I'm not so sure anything gets away from anybody today. I just think that this is just, this is probably the ugliest day we've had in a long time.
My Taiwanese sources say, don't be baiting Sadnov. I could use another day or two like this. Don't be trying to make him put the kibosh on this. I heard you.
Yeah, that's right.
Gotta love our viewers. I really do.
Don't be baiting me. Don't try to get me to say something that I don't want to say. I'm not that short here. I'm actually don't love. I kind of wanted them to rally a little bit on the close so that we could, maybe lay out a few shorts here, just to get some shorts for Sunday night.
Mm-hmm.
I don't think they're going anywhere fast. Maybe they'll open higher on Sunday night, then boom, then you whack them. Do we whack them and how?
Then we do a whack 'em and how. Okay. All right. We'll see. All right. We'll see.
I mean, a higher open Sunday night. Yeah, you let them have it.
Sounds of a stock that hasn't been on our radar for some time since the last time you got in trouble there. The TTD, you remember that trade desk?
Yeah, I don't like trading that stock.
I know a week ago it was 120, it down to 70. I mean, it's lost about 40%, 50% in about, I don't know, a week.
Yeah, those are the kind of stocks. What's TTD?
It's that trade desk. Yeah, I don't. Somebody just.
I don't know what trade desk is. I don't think it's the kind of trading that we think it is.
No, I don't think so either.
I guess they missed their earnings, and now it's just been boom, boom, boom. Yeah, it's just this stock has your name written all over it. This is a Tony Batista special.
No, not me.
This is a put ratio spread for you, Tony Batista special.
No, not me. I don't. Not those obscure stocks like that. Not me. $5 wide strikes. You can't do anything in here. 45% monthly implied volatility. Ain't nothing.
$5 wide no, 250 wide strikes in March. And the interesting thing about this stock
is 250 wide strikes in March on the call side, $5 on the put side.
Okay.
70, 65, 70, 55.
Oh, yeah. I didn't realize stock was this low.
You said a Tony Batista put spread, ratio spread. At least, listen, if you're going to act like you've been in the business 40 years, do me a favor and at least be factually accurate. Okay.
This is still a Tony Batista special, but they don't go deep enough for you.
Nah, doing a little broken wing butterfly today. That was the bat special of the day. Put that out there on a follow page, Sadnov. You know what? I'm not afraid of no ghosts. Not me. I'll be fine. That's what I'm doing.
God. Painful. No, I'm not afraid of no ghosts either. Yeah. So anyway, I'm going home this weekend with, I guess you would say, a little tiny bit of short delta. Not much. Theta numbers were very much in line. Extrinsic kind of low. I would say we're going home kind of risk free this weekend.
Oh, then you know what happens, don't you?
What?
We go lower and we don't know what to do on Monday because we don't have anything to react to.
I don't have enough risk on. I will tell you that right now.
Well, do something stupid now on the close.
Why? Am I contractually obligated to do something stupid?
Only if past performance is indicative of future results. I mean, that would be the play. Anything in the 1 day. I mean, by 1 day I mean the Monday options and SPX. Just because the 1 day move is so great.
You have a huge jump in the 1D. You could probably get some massive premium for Monday morning right now. I'm guessing. Well, I'm not looking, so I can't say. I'm not looking.
Well, go ahead.
No, nothing. I was just going to say I have a lot of expiring SPX and SPY options today, but
expected move is $42 for the next for February 24th, and you can go $100 out, and the puts are $360. You can go $100 out on the call side, and the calls are closer to 80 cents a buck. So you've got that put skew there in the SPX for sure.
There you go. You can sell $100 wide strangle for the opening, and you'll probably.
Well, it's not the opening. It's a weekly option, so it closes on at the end of the day, not at AM.
Right. Sorry. So you get a.
Don't worry, I'll keep correcting you. You know, by the end of the week, sometimes I miss most of your mistakes, but I've been sharp today. It must be the creatine or something like that. I'm really good.
I think you got a buck in that trade. I think you can take a buck out of that trade.
Probably right.
I think you can get a buck
there
out
in the face.
Yeah, but I'm not going to do it. I should, but I'm not going to do it because I got enough positions on. Plus, I don't feel like doing anything crazy this weekend because you said that you expected me to do something crazy. So if you expect me to do something crazy, then I'm not going to do
it. See, you always outsmart me. There's nothing I can do about it, but you're always outsmarting me. I hate it.
Well, that's not very hard.
Wow. Oh, wow. That's some cruel stuff right there, ladies and gentlemen. You got about 4.5 minutes before the market closes here. It's kind of like when we were trading it earlier this morning. We haven't had too much movement on this big movement day, right? Even the S&P's have moved about 8 or 10 handles since we've been talking for the last 25 minutes or so.
Well, if you came in with some short deltas, sometimes the other day somebody wrote in on Confirm and Send. They said something to the effect of, listen, doesn't make any sense to have short deltas because it always comes back to bite me in the butt. Like, these are the days when it works.
Yeah.
These are the days when it saves you a little bit of money. So I got some short SPY deltas. That was my biggest winner today. Biggest loser, man. We got a lot of losers today. Not a bad day, but I'm just saying we got just a lot of losers. Just like my whole screen is red just from this pop in volatility.
Yeah, I was gonna say it's mostly volatility. I mean, you've got no delta and Apple, and you have a small red P&L there. So I mean,
yeah, I have no delta in a lot of stocks. I have no delta in a lot of stocks, and I have red P&L across the board. But that's just because I'm short vol. Yeah, listen, we'll see. This is I have a theory that every time JJ goes on national television to talk about markets, we crash, and February expiration, we crash. There you go.
Oh, hopefully he won't do the two of them at the same time. Man, then it's close all watertight doors for sure.
Yeah. And we haven't had a good old-fashioned SmackDown in a while. So
no,
today so today you got yourselves a good old-fashioned SmackDown. And the best thing about a Friday afternoon SmackDown is it doesn't affect the traders like the options strategists, traders like us that much, but it does scare the longs a little bit. They do think about it.
Sure.
Yeah.
We had a lot of trading today in Nvidia. 5 million options are traded there. Palantir almost 2 million. Tesla 3 million. So there definitely was some action
I'll
today.
tell you, anybody that can trade 2 million contracts in Palantir, you deserve whatever you get because the markets in there suck.
Yep.
I mean, Tesla's great, Nvidia's great, but Palantir, ugh. To roll down a vertical in there, to roll down calls, and I think I rolled down a couple of times. Yeah, you just gotta give up money. I don't like it.
Yeah, I agree with you. I mean, you can't get filled anywhere near mid price, right?
No, you don't get filled near mid price. You get filled 2 cents, 3 cents away. It's hard to grab a mid price in Palantir. And if you do get filled in mid price, it's because it's mispriced.
TTD is an advertising platform.
Really? That's what they do?
That's what my Taiwanese sources tell me.
I never would have guessed that.
That's what I'm here for, Sadnov. I'm bringing you the good stuff.
I never would have guessed that. Interesting. All right. Well, maybe we'll take a look at it on Monday, but I'm sure not going to take a look at it today. And
did you look at XYZ, by the way, after earnings?
Yeah, I took my position off in there.
I know, but did you look at it down $14, Sadnov?
No, I didn't. That's an example of you take your stuff off on the opening and you count your shekels and you don't look back. Like if I held my position,
right?
Yeah, I took it off on the opening. The stock was around 74, maybe 75, maybe even higher. I don't know. And covered our position. We were up money, took our profits. Here, how about this today? XYZ, we took our profits on the opening. And Newmont Mining, we also took our profits on the opening. We were short puts in both those. And the only one that would have worked if you held it to the end of the day was Rivian, I think. I think Rivian's about $13. I'm not sure. Let's see. Yeah, right around $13. But we covered Rivian and made money. All the earnings plays worked today.
Again?
Yeah, but if you held them to the end of the day, they didn't.
Right.
And if you held yesterday's earnings trades till today, it was even worse. A little disaster. So, like sometimes people go, oh, you close everything too early. I don't know. Maybe not.
And
we're closing 2 ticks off our lows. Like literally
again?
2 ticks. We're closing 2 ticks off our lows.
Yep. And we'll see how we go here into the closing little moments here. See how we've closed underwater or close at fair value. Anyway, Sadnov, even the S&P down 106. NASDAQ down 452 and change. Volatility up $1.30, about 20 cents off its highs. Bonds up 31. It was a nice week for you. I survived because I was with you, and that's all I could ever ask for. But I'm going to take a quick 90-second break and come back, and everybody else can see.
I'm going to get a massage from carrying you this week because my back hurts.
Your back hurts?
You're a load. Yeah.
Do you need me to give you my Venmo money back to you that I won from the hockey game so you can afford it?
It'd be nice if you could be.
We're going to take a quick 90-second break. Come back and tune in Sunday, and I'll see you on Monday. What's that?
Yeah, if you want to be generous, you could Venmo that.
Nah, screw you. Peace.
We're back. Good morning, my friend. How are you? It's a wonderful Thursday.